हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का सेशन। इंडियन मार्केट इज ओपन। हल्का सा एक गैप अप देखने के लिए मिला है निफ्टी और बैंक निफ्टी में। क्रूड ऑयल एंड नेचुरल गैस हल्का सा गैप डाउन है, फ्लैट है। कल भी साइडवेज था, आज भी मुझे लग रहा है साइडवेज ही रहेगा। एक बार लेवल रिफ्रेश कर देते हैं दोनों ही। कल तो पूरा ही साइडवेज चला गया था मार्केट, क्रूड ऑयल का और नेचुरल गैस का कुछ भी मोमेंटम नहीं है। आज भी देखते हैं मोमेंटम आता है नहीं आता, बिकॉज क्रूड ऑयल ऑप्शन एक्सपायरी टुडे। क्रूड ऑयल की ऑप्शन की एक्सपायरी है आज एमसीएक्स में, तो ध्यान रखना थोड़ा सा। बाकी न्यूज़ की बात करें तो मेजरली जो कल एक स्टेटमेंट आया था ईरान की ओर से, दैट दे विल अलाउ टू सेल थ्रू स्ट्रेट ऑफ हॉर्मुज, जो गल्फ ऑफ ओमान वाला साइड है वहां से हम करने देंगे, कोई इशू नहीं आएगा। तो दैट इज़ अ गुड न्यूज़। बाकी थोड़ी देर पहले यूएस प्रेसिडेंट का ट्वीट भी आया है। यूएस प्रेसिडेंट डोनाल्ड ट्रम्प trying to get a little breathing from between Israel and Lebanon. It has been long time since the two leaders have spoken. Like 34 years, it will happen tomorrow. Nice, President Donald J. Trump. There will be peace or ceasefire between Lebanon and Israel as well, I think. कल अगर यूएस मार्केट को देखोगे, यस्टरडे यूएस मार्केट आइदर S&P 500 that is closed above 7,000 first time in the history. Nasdaq भी 24,000 के ऊपर है, that is also a record close. So कल यूएस मार्केट काफ़ी अच्छा पॉजिटिव था. निफ्टी मुझे लग रहा है शायद एक बार 24,500 के अराउंड शायद रिजेक्शन ले सकता है। कल साइडवेज था, आज हल्का सा गैप अप हुआ है। फर्स्ट 15 मिनट की कैंडल अभी क्लोज होने में टाइम है, तो मुझे लगता नहीं है ये जाना चाहिए 24,600 के ऊपर। तो 24,600 टू 24,600 टू 24,400 इट विल बी अ रेजिस्टेंस जोन मोस्ट प्रॉब्ली। क्रूड ऑयल देखो कुछ खास कर नहीं रहा है, कल भी साइडवेज था, आज भी साइडवेज है। कुछ क्लियरिटी है नहीं कि पीस डील होगी नहीं होगी। कुछ रिपोर्ट्स आ रही हैं कि यस हो सकती है, कुछ कह रही हैं कि नहीं हो सकती है। तो कल तो मार्केट साइडवेज चला गया था, लेट्स सी भी साइडवेज जाता है। देखो इस तरह के मार्केट में फिर कुछ खास कर नहीं सकते। अगर मोमेंटम नहीं आया तो 2-3 पॉइंट के लिए रिस्क नहीं उठाया जा सकता। ना नेचुरल गैस में ना क्रूड ऑयल में 100-200 पॉइंट के लिए, बिकॉज जिस लेवल पर है वहाँ पर एसएलई उतना बनेगा कि टारगेट के लिए कोई फ़ायदा नहीं है उतना जाके। कल बताया था 1 आवर में बताया था ना, हाँ 1 आवर में बताया था, वही लेवल है, अभी कुछ खास चेंज हुआ नहीं है। टाइम फ्रेम पे लेवल बताए थे एज अ रेजिस्टेंस एंड सपोर्ट, यहाँ पर था कहीं। बस उसी लेवल से रिजेक्शन ले रहा है, तो अभी ये रेजिस्टेंस जोन बना हुआ है स्टिल 1 आवर टाइम फ्रेम पे। नीचे सपोर्ट आपका, नीचे है आपका 70,200। 70,200 से 71,200। ऊपर देखोगे 76,400 से 75,400 एज अ रेजिस्टेंस। जब तक दो कैंडल लेवल के ऊपर क्लोज नहीं होती 1 आवर की, एक के ऊपर एक, तब तक ये रेजिस्टेंस ही रहेगा। एक्सपायरी है क्रूड ऑयल ऑप्शन की, ऐसा ना हो साइडवेज चला जाए कम्प्लीटली, तो ये भी देखना पड़ेगा। दैट इज ऑल्सो इम्पोर्टेंट फॉर अस। ठीक होगा, मुझे लगता है अगर ऊपर सस्टेन करना है तो मेजर लेवल रहेगा ब्रेकआउट का 24,600। जब तक इसके ऊपर सस्टेन नहीं करता 15 मिनट में इंट्राडे, आई एम एक्सपेक्टिंग इट विल टेक सम रिजेक्शन आई थिंक फ्रॉम हियर। थोड़ा सा रेंज के बाहर निकलता है क्रूड तो फिर देखते हैं, अभी तो कुछ खास कर नहीं सकते इस लेवल पे। ओके ठीक है, एज एक्सपेक्टेड निफ्टी इज ट्राइंग टू टेक द रिजेक्शन पर ही है पूरा। गिरता है तो लग रहा है शायद वापस फ्यूचर में 23,800 की ओर भी आ सकता है वापस से। कोई न्यूज़ नहीं आती है तो यहाँ से 2% लग रहा है शायद फॉलो हो सकता है, नॉट इंट्राडे बट ओवरऑल। रिजेक्शन है निफ्टी में। काफ़ी अच्छा रिजेक्शन मिला है। निफ्टी को देखते हैं कितना और कंटिन्यू करता है। निफ्टी को ऊपर जाना है थोड़ा बहुत, तो 24,600 के ऊपर 15 मिनट या 30 मिनट की कैंडल क्लोज करनी जरूरी है, तभी हम कभी वापस 25,000 की ओर जा पाएंगे। नेक्स्ट रेजिस्टेंस वहीं पर है 25,000 के अप्रॉक्सीमेटली। बाकी देखते हैं अगर नीचे आता है तो कितना गिरता है, बिकॉज नीचे मेजर सपोर्ट तो आपका एक 22,600 के आसपास है, बट या थोड़ा बहुत प्राइस मिडिल ऑफ द लेवल रुकने की कोशिश भी कर सकता है। लेवल पे भी है निफ्टी, वहां पर ऑलरेडी पास्ट में एक बार सेलिंग दिखा चुका है, ये सेकंड टाइम आ रहा है उसी रीटेस्ट पे। थोड़ा बहुत अगर यहाँ पर कंसोलिडेशन करे या थोड़ा बहुत नीचे आए और फिर ऊपर की ओर जाए ना मार्केट, तो बेस्ट रहेगा। फिर मुझे लग रहा है इसका यहाँ पर ब्रेकआउट हो सकता है, देन वी कैन गो टुवर्ड्स 25,000। उस केस में क्लियर रेंज बन जाएगी सपोर्ट और रेजिस्टेंस के बीच में, विच इज़ आई थिंक द बेस्ट थिंग, क्योंकि नीचे कोई सपोर्ट भी नहीं है एटलीस्ट 15 मिनट एंड अबाउट टाइम फ्रेम। मिनट में भी नहीं है, 15 मिनट में भी नहीं है, उससे नीचे हो सकता है कुछ हो। तो 30 मिनट 15 मिनट एंड अबाउ there will be no good support zone। प्रदर्शन हुआ था मार्केट, उसके नीचे नहीं जाना चाहिए बस, अगर उसके नीचे चला गया तो थोड़ा सा फिर मुझे लग रहा है पूरा ही आ जाएगा नीचे, गैप फिल कर। देखिए यहाँ पर भी सपोर्ट जो कल का एक पॉइंट ऑफ इंटरेस्ट बनाया हुआ था, ये अभी भी इंटैक्ट ही है। काफ़ी देर से कल रुका हुआ था, लेट्स सी अब कितनी देर होल्ड करता है या फिर ये ब्रेक डाउन करता है फाइनली। पॉइंट ऑफ इंटरेस्ट पे काफ़ी देर रुका था, मॉर्निंग पे इसी लेवल पे था, और एक बाइंग आई, दूसरी बार बाइंग आई, तीसरी बार अभी हो सकता है अभी फिर से आ गया, तो ये फोर्थ टाइम हो जाएगा सेम लेवल पे। कि अगर ये सपोर्ट ब्रेक होता है क्रूड ऑयल में, तो फिर मुझे लग रहा है 8000 की ओर चले जाएंगे। इस पॉइंट ऑफ इंटरेस्ट के नीचे प्राइस अगर सस्टेन किया 15 मिनट। सपोर्ट तो ये पॉइंट ऑफ इंटरेस्ट तो अच्छा था क्रूड ऑयल में, मुझे लग रहा है शायद स्ट्रेंथ ही नहीं मिली मार्केट को इस यहाँ पे। अपना नीचे ये प्राइस को किसी सपोर्ट या रेजिस्टेंस पे कंसोलिडेशन लग रहा है कम्प्लीटली। ऑलमोस्ट 50-50% चांसेस हैं अब किसी एक डायरेक्शन पे जाएगा। नॉर्मली सपोर्ट है, वहां से डायरेक्टली बाइंग आ जाती है, तो इतना देर भी नहीं लगा था, कल पूरा डे ही यहाँ पर कंसोलिडेशन किया है प्राइस ने। यहाँ से एक बार और लास्ट टाइम बाई करेंगे, बट ये रिस्की ट्रेड रहेगा बहुत ज़्यादा क्रूड में, बाइंग का ही। इतनी देर होल्ड नहीं होना चाहिए। बाकी एक्सपायरी भी है, देखते हैं ट्रेंडिंग होता है आज या फिर साइडवेज जाता है आज के दिन। ठीक ठाक रिजेक्शन निफ्टी ने भी ले लिया। लेट्स सी कितना और गिरता है यहाँ से। 24,377 से देखोगे ऑलमोस्ट 100 पॉइंट डाउन। क्रूड ऑयल मुझे लग नहीं रहा जब तक 8725 के ऊपर सस्टेन नहीं करेगा ना, चांसेस कम ही है ऊपर जाने के इसके भी।
making, such as helium. So there's a lot of questions to be, and a lot of questions in investors' mind about what kind of impact the Middle East war may have on the whole industry in the longer term.
Okay, that earnings call is going to be important. We'll be listening in, of course, as well, and bringing details for our terminal subscribers. Asia Equities reporter Charlotte Yang with the context around the TSMC numbers and looking ahead to the call, of course. Charlotte, thank you. Meanwhile, Bank of America shares closed higher after reporting commodities trading revenue that surged 60% in the first quarter. That, of course, was fueled by wild swings in oil, precious metals, specifically gold. Another major contributor to the trading windfall was the international business, which jumped 23% year on year. Morgan Stanley's stock traders had a record-breaking first quarter, reporting $5.15 billion from equity trading. The firm's wealth business pulled in $118 billion in net new assets, and investment banking fees climbed 36%. Speaking exclusively to Bloomberg, the CEO, Ted Pick, said he wasn't concerned about the firm's small private credit exposure, but added that the sector is going through a learning moment.
When I say adolescence, I mean it's a learning period. You know, it's grown like a weed. And that, as you know, is a function of an asset class that didn't exist 10, 15 years ago. Effectively, the street was replaced on that. It's around $1.7 trillion. High yields at about $1.7 trillion. Levered lending is at about $1.5 trillion, $1.7 trillion. So it's relevant, but the IG stack, as you know, is the investment grade stack is 10 to 15 trillion. It's all credit. It's all credit. So all things being equal, if the economy is growing, credit does fine. It does fine. When there's a recession, credit struggles. And then the question is then, which of the borrowers were really doing the work around what's in underlying portfolios? How quickly was the capital put to work? And I think what we're going to see is we're going to see dispersion of returns among great asset managers who really stuck to their knitting, thought about sector diversification, thought about how long it takes to put those investments to work, and managed to do less well. And over time, I think the alts will find their place as a growing asset class for all kinds of institutions and investors.
Okay, from a banking giant on Wall Street to an historic Italian bank right now, Monte Paschi investors backing another term for ousted CEO Luigi Lovaglio, rather than support the bank's slate of board candidates, which sought to install Fabrizio Palermo as the new chief executive. For more, I'm joined by Chiara Albanese, Bloomberg's Italy bureau chief. Chiara, good morning. What does Lovaglio's victory mean then for Monte Paschi, this storied Italian bank?
Good morning. This is a fantastic and stunning corporate turnaround. Lovaglio was seen as being defeated by a new list done by the board. We should remember that the board ousted him and stripped him of all his powers. Nevertheless, he managed to get the backing of sufficient investors to be again the one nominated to be CEO. We are going to see whether this is going to happen today. Already, there is no confirmation yet in terms of like the new name of the CEO.
Does it mark an end to the boardroom drama? Is there more to go? How does this story unfold from here?
That's a great question. It does. I don't think this is the end. Actually, it is the start of a new tumultuous time for the company and the bank. We should remember that both Lovaglio and also his challenger, Palermo, will be on the same board, so the board will be split. So we should expect every decision to be extremely suffered.
Okay, every decision could be fraught going from here, given the makeup of the board. Italy Bureau Chief Chiara Albanese on that story. Thank you for the details, Chiara. Staying and changing tack, in fact, we've been talking about the earnings coming through from TSMC, and that has tied into what's been happening in terms of the broader momentum around Taiwan and lifting the Taiwanese stock exchange. In Taiwan, the island has overtaken the UK now in terms of stock market value. Its market capitalization rising to $4.14 trillion US dollars, making it the world's seventh largest. So just above $4.1 trillion, the seventh largest. So knocking the UK out of that spot. This after the TAIEX index became one of the first major markets to recoup all losses driven by the Iran war to reach a record high. TSMC, we've touched on, also hitting an all-time high as the AI boom boosts strong revenue growth. So that's just one to mark in terms of the history books. And we'll see to what extent that continues. But certainly AI, the TAIEX and the Taiwanese momentum is there. Coming up, the Pope beginning a multi-nation tour of Africa as the pontiff's row with the White House over the Iran war continues. The Pope is in the spotlight, of course, given that fractious relationship now. The details are next. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sharian in Seoul, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, hours after he was heavily criticised by President Trump and Vice President J.D. Vance for speaking out against the Iran war, the Pope has been backed by African leaders as he begins a three-nation tour of the continent. The president of Cameroon said, quote, "The world needs the message of peace brought by the pontiff." Our chief Africa correspondent, Jennifer Zabasaja, joins us from Johannesburg. Jen, just set out for us, it's a remarkable spat that's taken place between the US president and the Pope. Was it at stake? What is at stake for the White House, for the Republican administration in pushing back and criticising the Pope so strongly?
Exactly, Tom. And we should point out, of course, the first American-born Pope. So that just makes the stakes that much higher, as you were just pointing out there. Look, there could be increased political fallout for President Trump if we do continue to see this public spat growing between the two. And it seems like both are really doubling down on their own words, as it were. Now, if we just take a look at where Catholicism stands, I mean, the Pope really is the leader of 1.4 billion Catholics worldwide. If we take a look at the U.S., the estimates are just over 50 million Americans are considered Catholics, many of whom were very critical to Trump's 2024 win as president. And so this could potentially be political fallout from him from an electorate that was very key for him. And we should point out, this is not the first time that we have seen opposition between the two and the president of the U.S. publicly attacking the Pope. Of course, you're looking at where the Pope has been opposed to war more broadly and military intervention. Earlier this year, he spoke out against his concerns with Venezuelan intervention. And again, we're seeing this really doubling down, and so much so that the Italian Prime Minister calling the president's comments on the Pope unacceptable. So clearly, this is looking like a continued divisive situation between the two.
And we read out that quote from Cameroon's leader in support of the Pope. Do you expect, Jen, further support from African leaders on this tour for the Pontiff?
It's seeming like so, Tom, and we should just point out earlier in the week we did see the Pope becoming the first Pope to visit a Muslim-majority nation, that was Algeria. He then moved to Cameroon, as you were just speaking about there, talking about his desire to see peace over war, and that really being a hindrance towards development. And a very economically, in a country like Cameroon, which has really seen a hindrance from some of their exports, which are key to economic progress for the Central African nation. The Pope then moves to Equatorial Guinea and Angola, which are key strongholds for Catholicism, but really just another symbolism of what the Vatican sees as a growing Catholic population and a shift for the Vatican to more of the global South, where they do see a doubling down of their own growth and potentially the Pope's own messaging moving forward.
Bloomberg's Jennifer Zabasaja in Johannesburg. Jen, thank you. Now, emerging markets investing pioneer Mark Mobius has died at the age of 89. A partner at Mobius Investments says he passed away in Singapore. Mobius spent over 30 years with Franklin Templeton, championing opportunities in Africa, Asia, Eastern Europe and Latin America. He founded Mobius Capital Partners in 2018 and continued to seek out investing opportunities in recent years, including setting up a new venture in Dubai.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Happy Thursday, everyone. Let's take a look at what's been happening in terms of the tech stocks returning to value. What we've seen in terms of the Nasdaq 100 then, 11 consecutive days of gains for the Nasdaq 100. Yesterday, really interestingly, it was the software stocks that overtook the hardware and the semiconductors. We'll see how long that dynamic plays out. That's a reversal of what we've seen in recent weeks, in fact, in recent months. Mag 7, though, is lagging, and this is what this terminal chart shows. The yellow line is the Bloomberg Mag 7 index. Yes, we've seen that recovery, at least up until until this point, but lagging the broader space when it comes to the recovery of the S&P 500, the Nasdaq as well. S&P 500 is the white line, of course, getting to a fresh record high yesterday. So that's the Mag 7 still playing a bit of catch-up. Let's flip the board and have a look in terms of what's happening on volatility, and volatility has just plummeted as markets again look through the closure of the Straits of Hormuz and start to bet on a more lasting ceasefire between Iran and the US. And this chart just shows where volatility is right now, both of those indexes. We're going to be thinking about the big take today as well. AI continues to be a big part of the story, TSMC's numbers. Anthropic, the race to access and think about the dangers around the Mythos AI model, a big part of our big take. We're going to be discussing that and more. This is Bloomberg.
A cidade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Good morning. It's Thursday, April 16th, and this is what is on our minds this morning. Global stocks rally with talk of an extension to the ceasefire. China's economy revs up despite the war. And we hear from Anthropic about its new AI tool, so powerful the company restricted its release.
OK, let's talk about these markets. What started a few days ago as a short covering rally has turned and morphed into this epic chase. Does it continue this morning? At the moment, it looks like it does. Euro Stoxx 50 futures, a little bit of catch-up, but certainly more positive momentum in markets this morning. I was trying to get a handle on what how TSMC is being received this morning. The best I've come up with, Dan came up with, MSCI Taiwan futures up really strongly since those numbers came out. So maybe a positive read despite the fact that TSMC has had an epic rally so far this year. And Brent crude, I'm going to show you Brent crude. Investors don't seem to care anymore as to what is happening with the price of crude. But let me show you anyway. We're down by 0.2%. Seems to be stabilizing at the moment. But the market's looking elsewhere. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. This is the opening trade then, and we have a lot to talk about this Thursday morning. And let's start with the market's narrative around what's going on in the Middle East, but also around the other things that are driving market sentiment right now. So the latest news line out of the Middle East is people familiar talking to Bloomberg saying that there could be an extension of a ceasefire. Does that sound risk on? Does that sound risk off? Certainly doesn't sound as if the Strait of Hormuz is going to be opening up to anything more than a trickle in the near term. But still, we have a global stocks rally underway. And I was thinking about this. Why is the narrative out of Qatar versus the US Treasury so different about the impact of this? I mean, obviously, they have different interests in this. But why does that filter through into something really interesting for stocks? A stock saying that this doesn't matter for the global economy, or a stock saying this does matter, or it might matter, but we've got other things to get more excited about. And all of those things are sort of rubbing up against each other.
The market, it felt like it happened about a week ago. The market feels like it's moved on. Doesn't care anymore. Doesn't care maybe is the wrong way of putting it, but has, to your point, other things to think about. This has been a rally that started, it felt like a bit of a short squeeze. Then you got the algos kind of stepping on the gas and the amount of money that's come in. And it's just, this chase has just been extraordinary. Markets usually see these kinds of moves off lows, like off really big lows. This is an equity market that has not gone down by very much and yet has produced this kind of a rally off that. And it just feels, how do you rationalise and make sense of what we're seeing here? Because the move from one side of the boat to the other side of the boat has been so rapid.
So the bull case is that you look through and you look towards an eventual peace between these two sides because both sides are motivated to get there. The bull case is, well, the bull case is also that valuations are looking more attractive. The bull case is that growth earnings expectations are pointing higher. The question is, are those earnings expectations and the growth we're looking at, S&P 500 for the next quarter, looking at growth expectations of 20%, earnings growth expectations, is that factoring in the kind of inflation and growth shock that the likes of the central bank and the IMF chiefs talking about in Washington?
I love what you're saying, because it all sounds kind of fundamentally driven, and we're thinking about this, we're trying to price this in, and we're trying to work out, is this just a positioning story? Is this a market that just, the CTA's got too short, the market was a little bit short, now everybody conditioned by what happened around the tariff story back in April, just wants to get back in, has been itching to get back in, and as a result of which it's just flown back in at a rate that is not commensurate with the reality of the fundamentals that Tom is laying out. It's really hard to judge, but there's so many weird things going on. Did you see Allbirds yesterday?
There's a tech theme, apparently.
Yeah. So the meme stocks are back. YOLO, FOMO, that's all back now. Yeah. And Allbirds is an example of that, pivoting from making shoes to AI, and the stock popped, I don't know how much percent.
Let's just dive into, break into our conversation, I should say, to talk about UK GDP, because we've just had some data out for the month of February. Just 1 month of data. Would it move the dial? This is before the war, of course, but it is a really strong number, so it is worth mentioning. Remember, the prior number here was 0% growth, so no growth. That was for the January read. The survey here was 0.1%, and we actually got 0.5% of growth in February. I mean, is the market going to look through this, because this is pre-war, would be my question. But it's still worth mentioning.
If you believe the IMF forecasts, it's going to get a lot worse from here. IMF forecasts don't always have the best track record of producing the outcome that actually becomes a reality. Let's talk about China and figure out what is happening there, because this data is extraordinary as well. Q1 GDP growth, year-on-year, 5%. Yeah. That's a very strong number. Industrial production, 5.7. That's a very strong number. What's not a very strong number is the retail sales data. And that points to the fact that this is all externally driven. So the good numbers that China is producing now is not driven by a domestic story. So if the rest of the world doesn't hold up, does China hold up? The other thing is that you've got this oil story. We talked to a guest yesterday about this. Nobody knows what the reserve story looks like in China right now. It's very opaque. Can China continue to produce this kind of economic growth if it doesn't have access to cheap energy? Is that going to change?
Yeah, how long is that thread for China in terms of its reserves? It is a more diverse energy mix now in terms of the renewables mix. They're resorting to coal again. They've got plenty of coal in northern China they can tap into with the climate change impacts of that. But they have a more diverse energy mix. But to your point, there is still that dependence to some extent on oil, and to what extent those inventories run dry. This is still, again to your point, this is still a very imbalanced Chinese economy. And this is not a story that's changed in terms of a double-digit contraction for housing and investment. The retail is retail is still looking soft. The consumer is still under pressure. House prices are still contracting. But that export engine is there. And it seems like, according to our own team's analysis, that there may not be additional fiscal stimulus or at least rate cuts coming through from the officials in Beijing, at least at this point, given the numbers we're seeing.
I saw one glimmer of light on the domestic Chinese eco story this morning, and that was, but it doesn't necessarily look like one at first glance. The price declines in the housing market, they've reduced. And so people are asking, are they at the bottom?
Yes.
You know, things have got so bad.
But
they're still going lower, but
rate.
not quite as fast as they were. So have we bottomed out in the housing market? That's all I have to offer on the sort of positive direction. But it's interesting that Xi this week has, the Chinese leadership, really changed the tune. Instead of standing aside from talking about what's going on in Iran, talking about the crumbling world order. And we are heading towards a meeting between Xi and Trump, of course, next month.
And arguably this data puts Xi arguably in a slightly stronger position. The economy of China is holding up, at least on the headline basis. Tech will be part of that conversation between the two leaders, no doubt. Again, we had the numbers through from TSMC suggesting that demand... Smartphones is looking soft, but the demand for AI and those AI chips that TSMC crunches out in its foundries in Taiwan is still there. And the capex spent, they expect to spend around $200 billion on capex over the next few years. The margins are around 66% for TSMC. There's no signs that the AI demand, again, it's just another example, that demand picture for AI and the AI infrastructure, and AI chips doesn't seem to be showing any signs of weakening.
I've been trying to work out kind of what the reaction is, because the stock has had an incredible run.
Yeah.
And you would have thought, actually, maybe this would be an opportunity to take a bit of profit.
Yeah.
Dan and I came up with basically MSCI Taiwanese futures to try and figure out whether there's been a reaction, which I've never done before, but they have ticked quite strongly to the upside. So it looks like at this stage the market reaction to TSMC, because the market's closed, is quite strong.
We'll bookmark that one. It could be useful. We should reflect on the fact that we're going to be speaking to Anthropic. And I do wonder, I was thinking about this over the last 24 hours, whether whilst we've been talking rightly so much about events in the Middle East, maybe we have not talked enough about the latest release, Mythos, from Anthropic, and the extent to which it is being held back, obviously, from release and just given out to a small number of people, to the defenders, to test it, to make sure that it's safe to release, essentially. And we haven't talked much about, but it certainly has got the attention of governments, of regulators, of central bankers, of corporate leaders. This is very quickly getting into the mainstream conversation.
It's so powerful that they have only released it as part of Project Glasswing to a select number of people, as you said. On the day it was released, Scott Besson picked up the phone to CEOs of banks and said, get into the room right now, talk to me about what you're doing to make sure you're filling the gaps and how you're going to be utilising this tool to close those defensibilities in terms of cybersecurity with a model that has cybersecurity risks extreme, but also the potential to close some cybersecurity gaps as well. It's hugely significant, and it's remarkable that it comes down to Anthropic to decide how and when to release this.
Have we reached the point where they're so powerful, they're too scary that we can't release them? And what does that say about the business model? Like, what happens next?
So that is a question we're going to be putting to a senior executive from Anthropic later in the show, next hour.
OK, looking forward to that. What else have we got on the show? James Turner, BlackRock EMEA Global Fixed Income Head, is going to be joining us. Karen Georges, EcoFi Investments Fund Manager, joining us as well. We've got some great guests to talk about these markets.
Let's look at what else we are thinking about through today then. 1:30 p.m. UK time, the focus will switch to the labour market in the US with jobless claims. So building out the picture there of a labour market that's been difficult to pin down in terms of whether or not it is seeing significant softness. IMF spring meetings continue. The ECB speakers are on the docket today. Bundesbank's Nagel and Germany's Vice-Chancellor Klingbeil will be speaking. And later, there's an informal meeting of EU tourism ministers in Cyprus. There's US earnings. This is important. Netflix, of course, coming out later today. PepsiCo and Bank of New York Mellon as well. After a string of banking earnings, we get more later today. Also, Fed speak from Williams and Myron.
Normally, tourism ministers don't interest me, but with the queues building up around Europe, maybe they are. Maybe they will this morning. OK, what else we need to know this Thursday morning? Shares of Blue Owl Capital posting their biggest two-day gains since November 2022 as risk-on sentiment fueled a rally in software stocks, and Wall Street bank chiefs created fears around private credit. PIMCO probably helped as well. Blue Owl shares had dropped to a record low Friday, hammered by fears around the $1.8 trillion private credit market and its exposure to software. Investors were reassured by US bank execs this week, who stressed their exposure to the market was manageable, their exposure. Bloomberg understands that US investigators are looking into suspicious oil trades ahead of recent policy pivots by President Trump related to the Iran war. On March the 23rd, oil futures worth billions of dollars were traded 15 minutes before Trump said he would delay threatened strikes on Iranian energy infrastructure. A similar pattern was observed ahead of Trump's April the 7th announcement of a 2-week ceasefire with Iran. And central bankers have indicated they are in no hurry to raise rates. Sources at the ECB say policymakers are leaning towards holding this month, while the Bank of England's Megan Green told us that relevant data will take a while to come through. A line we also got probably from Bailey as well yesterday, indicating the bank's in no rush. We talked about this yesterday again. The market's already priced out April for the ECB, but June seems to still be a possibility. So are we ruling out rate cuts completely from the ECB, or just waiting for more data to show up so we've got a better handle on what is happening here?
Yeah, the ECB narrative, I suppose, as close as you get to being told that rates are not going up in April, it seemed to me. Our reporting was one thing. Even when you got even Isabel Schnabel saying we need to take our time, then you know you're probably not going to get a rate increase. And Villeroy had said it on the record as well. But the market is still pricing in a couple of hikes. It's interesting that Bailey, yes, was saying the market ran away with itself. I mean, he said that on the day that he last spoke around the Bank of England rate decision. He said the markets have really got ahead of themselves, pricing in all these hikes.
Bank of England speakers have been on that process of trying to walk back some of that expectation that had been built into the markets after their last meeting. We're at 375 right now for BOE rates. The expectation is you get 37 additional basis points by the end of this year. So just over one. Yeah, so that's been walked back.
That was the carried away, I guess.
Yes, that was the carried away moment. 4 25 basis point hikes, which seemed sort of a lot even at the time.
And Bailey referenced that, didn't he? Megan Green saying that the pricing right now seems, for her, I'm paraphrasing, seems about right, is what we got from Megan Green.
With still rate hikes?
Still another hike, yeah. We're fully priced in at least one for the BOE.
We will get to the subject of what's going on in fixed income markets and how that is reflecting the central bank narratives. We will take a look at your stocks to watch as well. Coming up, Pernod Ricard will be in focus, the drinks maker saying it expects the war in the Middle East to hit sales. We'll get some more details on how that's coming to pass. Plus, bankers and businesses weigh the potential impact of Anthropic's new powerful AI model. That's Mythos. We will be joined by Anthropic's Pip White for an exclusive conversation. Up next, we will speak to Bill Al-Hafiz, Head of Market Strategy at Macro Hive. If you want to get involved in any of these conversations, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big
week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
This is the opening trade, 7:16 here in London, and this is the picture across European equity market futures. Some brightness factored in at the start of trade. That is our anticipation at this hour. Now, Bloomberg understands the US and Iran are considering a 2-week ceasefire extension to allow for more time to negotiate a peace deal. Mediators are said to be seeking fresh talks to overcome the issues preventing a longer-term agreement, including disruption to the Strait of Hormuz and Iran's nuclear program. Let's bring in Jumana Basechi, of course, who's in Dubai, can take us through the latest news lines here. What do we know then, Jumana, about when we might get people around the negotiating table, about the extension to a ceasefire, because everyone's very focused on what this has to do with the Strait of Hormuz, how quickly it can open up the strait?
Yeah, that's right, Anna. Well, no date has been set. There's no official confirmation yet that these talks are happening. And actually, the White House Press Secretary Caroline Leavitt said yesterday that the U.S. had not put in a formal proposal to extend the ceasefire by 2 weeks. But she did say if another round of talks are going to be held, they would likely be held in Islamabad in Pakistan. And Pakistan, for their part, I will say, are working the diplomatic channels aggressively. The Army Chief Saeed Asim Munir is in Tehran for ceasefire talks, meeting with some of the chief negotiators on the Iranian side. The Iranian state media are reporting that the U.S. have relayed a message via the Pakistani mediators to the Iranian side. So we'll see what their response is going to be. At the same time, of note here in the UAE, a very high-level call took place yesterday between the UAE Vice President and the Iranian Speaker of Parliament yesterday. This is the first time they've spoken since the start of the war. So again, significant because it suggests that even as far as UAE is concerned, because they've received the lion's share of all of these incoming attacks, they're willing to start speaking to Iran. And then the Pakistani Prime Minister continues his tour around the region. He was in Saudi Arabia yesterday. He's going to Qatar today. He's going to go to Turkey. So if there are talks, it will likely be held at some point in the next few days. We're still waiting for confirmation. Remember, the ceasefire technically expires on April 21st, which is April 22nd in the region. One last thing I would point your attention to is the question of Lebanon and whether Iran are going to once again link a Lebanon ceasefire to the success of these upcoming talks.
Jumana, thanks for the update. Appreciate it. Jumana Basechi joining us out of Dubai. Let's turn to the market narrative and what is happening here, because the market appears to have moved on from what is happening in the Gulf and is focusing on other things. Normally, you don't get the kind of rally that we've seen over the last 10, 11 days unless you've hit a kind of major low. The move has been huge. The question is it the right move? Is it just started as a little kind of short covering and then a massive chase? What is going on here? Bilal Hafiz, Head of Market Strategy at Macro Hive, joining us around the table to try and answer that question. Do you have a handle on why we have seen this huge rally in equities over the last few days? Is it just a relief rally off what's happening in the Gulf? Is it something else? What's going on?
I think it's more than that. You know, I think one interesting thing we found is that we have an affiliate market, Macro Hive Markets trading platform now, where we can see clients' activity and so on. And there's been a noticeable shift in terms of the types of activity clients are now doing. And these clients are like top hedge funds around the world. Previously, it was all defensive. Now, the narrative all with them is what's the post-war trade that we should put on. So that there's a shift that's going on now that the base case is it's over. Let's look beyond. What are the fundamentals? What's the US equity story like? What's the Fed going to do? All the narratives are turning very, very quickly. So that's the view amongst investors. In terms of the risks, I think one of the concerns many people had was that the US blockade would lead to a breakdown in the ceasefire itself, that somehow there'd be some kind of intervention by the Iranian side. It didn't happen. So people are viewing that, okay, that was just posturing ahead of negotiations. So at the moment, the way investors in the market is looking at everything is with a very sort of positive tinge.
Do you think people were conditioned by Independence Day, the whole story around tariffs and what happened in that dip and how quickly it came back? Do you think there is a lasting memory of that event that is now conditioning the response that we are seeing from some of those hedge funds now?
I think absolutely. I think that, and also COVID as well. You know, if you recall with COVID, people talked about all sorts of supply chain issues, and then the rally was really quite rapid, spectacular. And so again, these two sort of parallels people are using. The other point I'd make about COVID is, and this is something we pointed out a few weeks ago, was that with COVID there was the spread of the virus and there was the reopening, and at some point the market decoupled the two, saying okay, the spread is one thing, but the reopening is something separate. So something similar is happening now, where people are saying, okay, we've got visibility now that the Strait could be reopened and there could be some continued military conflict, and so they're kind of decoupling the two from each other.
Okay, yeah, that's a nice, interesting parallel to draw, Bilal. So if the market is trying to move on, and we've talked about that in terms of probably stocks there, and what does that mean for the dollar? Because we saw it flexing its safe haven status at the start of the war, certainly, didn't we, in March, even though many had doubted, does it still have safe haven value? And now we're through that, we're back to a different phase. So what is happening with the dollar right now for you?
Yeah, I think there's been an amazing shift in the behavior of the dollar. Back in March, the dollar would clearly go up sharply whenever there was an escalation of the war. This time, over the last 4 or 5 weeks, even when oil goes up, the dollar doesn't necessarily go up. Often it falls, and then it falls by even more when oil goes down. So there's this shift that's going on with the dollar, and I think that's important, you know, where we've moved from this period where it was like just massive uncertainty in every possible scenario, which really helped the dollar. Now it's more like, okay, there's this scenario, and that's really hurting the dollar. So my view is that this is the return of dollar weakness.
Is that because we're back to thinking about Kevin Walsh? Is that the key driver?
That's kind of part of it as well. You know, one is that the Fed will be more dovish than the Europeans. That's one part of it. Another part of it is that the magic that the US had around tech stocks, that's kind of gone as well to some extent. So when people look at the relative equity story, it's not necessarily as favorable to the US anymore. So again, that hurts the dollar. So the question then is, why would you buy the dollar? It's not the safe, you know, we aren't in a safe haven environment right now, dynamic. And so as a result, why hold the dollar?
If you're not buying the dollar, are you buying the Chinese yuan?
I think so, yeah. For me, that's one of my sort of favourite calls right now, is that dollar-China will head down towards 640 over the course of this year. You know, because China has done incredibly well. The currency has done incredibly well during the war. Now the war risks are declining. China should do as well going forward. And if you look at flows going into China, the trade flows are very strong, exports are very strong. Today's data showed that, you know, China, although the domestic story is weak, you know, it's still the manufacturing powerhouse of the world. And the world just needs manufactured products right now. You know, everyone's going to be, you know, demanding different kind of hardware in different ways. And so that really puts China in a very good spot.
Okay, so 640 on dollar yuan is your target. And we think about hardware, we think about what's happening in terms of the tech story, and you're making the case that US tech exceptionalism is no longer there. At a time when we're kind of obsessed, the tech ecosystem is obsessed with Mythos, which is Anthropic, of course, when the Nasdaq 100 is having 11 straight days of consecutive gains. But you think there's more value to be found elsewhere when it comes to the tech story?
Yeah, I think there's kind of two dynamics here. You know, one is that we're at the stage of the US AI story, or the global AI story, where it's kind of eating itself up now. So now AI, as we saw earlier this year, hit SaaS stocks, so it's not uniformly positive. And then also we have to remember we had this massive data center building program, you know, that got announced last year. A bunch of those data centers come online in the next 3-4 months. So now that's going to be the proof in the pudding in terms of return on investments, and that's when stock valuations may start to get hit by that. Then on top of that, the icing on the cake is that if you look at the performance of European tech stocks, they've outperformed US tech stocks this year. And they've also outperformed Chinese tech stocks as well, so paradoxically. So there's a European tech story that's picking up weirdly. Yeah.
Weirdly. So you're not convinced that the data centers are going to cover their costs?
I think they will cover their costs, but the expected returns will be much lower. Yeah.
Okay. So that's two different things.
Yeah.
Because expected returns are up here at the moment.
Yeah. Yeah.
Is it going to be commoditized? Is it going to kind of how much danger is there that if we come? There's a big reckoning coming if we're only covering the cost of capital.
Yeah, absolutely, yeah. So I think the expectations sort of ran ahead of themselves. The one positive thing one could say is that if you look at the more frontier tech models, which are going more towards world models, where you start to collect more data from the physical environment, that will actually require huge data sort of needs. Now, we aren't at that stage yet. That could be a 2027 story. So there is something further ahead which could sort of show us that there could be that demand. But in the short term, at least, it looks like expectations have run ahead of themselves.
We haven't talked earnings at all, Bilal. That not?
Oh, yeah.
I suppose that is part of the European tech story, though, isn't it?
Yeah.
It's going to be in the bottom line somewhere.
Exactly, yeah. So the European tech story, I think, the earnings should, although actually some of the recent announcement weren't as strong as we, as expected. But I think in the end, the issue for the European tech side was just valuations just weren't as good as the US side, and now the story's kind of catching up there.
Bilal, thank you very much indeed. As ever, always a pleasure. Bilal Hafiz, Head of Market Strategy at Macro Hive. Coming up, we're going to talk to James Turner, EMEA Head of Global Fixed Income at BlackRock, as ECB policymakers lean towards keeping rates on hold. That is next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg. Rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. 30 minutes to go until the start of cash equity trading here in Europe. The futures picture, though, looks like this. Still very positive. We're still on. The rally is still on. Take a look at NASDAQ futures, up by 0.5% this morning. So the rally, the momentum is still there right now. European bourses are generally higher as well. It'd be interesting to see what kind of TSMC effect you see into the market this morning. Certainly the AEX is significantly outperforming this morning. It is up by 0.7% on the futures versus the FTSE 100, with oil prices doing nothing, which is absolutely flat as a pancake right now, if a little negative.
Yeah, absolutely. And the Nikkei closing at a record high, raising its Iran war losses, so joining the S&P, the Nasdaq, the Taiwan Exchange, the Singapore Exchange, the CSI 300. Have I missed any? Not sure, but there were lots of exchanges, lots of markets that have already recouped their losses from the start of the war. Let's have a quick look at where we are on bond markets, though, because that's an interesting dynamic to watch as well. PIMCO says they see opportunity in European bond markets. They're probably not alone, given the volatility we've seen, and we are seeing buying today. And that seems to be the narrative. We're down by around 2-3 basis points on European bond markets right now at the 10-year horizon. The ECB Governing Council member Joachim Nagel says that the global economic outlook hinges on whether the current 2-week Middle East ceasefire holds and reopens the world's most important oil artery.
This has to be resolved. And I believe this is ongoing, this uncertainty. And this will trigger also uncertainty regarding oil prices. Everything what is going around in the world is dependent on that question. This is a bottleneck. And so I believe 2 weeks can bring a lot of new information, and we will take that into account.
Nagel speaking to Bloomberg on the sidelines of the IMF spring meeting. Let's bring in James Turner, EMEA head of global fixed income over at BlackRock. James, very nice to have you with us. So we see yields coming down today. We see PIMCO talking about buying European bonds. We see the ECB signalling it's kind of on hold for now. What kind of opportunity do you see in the European bond space?
We've seen some wild swings, clearly, in pricing, both in Europe and the US on the back of this. And I think that immediately people, I suppose, look to the 2022 playbook and inflation as the issue. But I think we have to remember that it's very much a supply-side shock. It's not really demand-led, quite different to 22, where actually we had quite a lot of pent-up demand, I think, and we're reopening from COVID. We couldn't get hold of cars. Very different in terms of its pricing environment. So first of all, I think the inflation impact might be a little bit more muted, but also I think we have to have a look at the growth element of it as well. And I think often that was a little bit neglected in the first stages of this. So actually, from the point of view of rate rises, I would lean a little bit towards the more dovish end of that in terms of expectations going forward, which creates opportunities when you've seen the yields go up. I think that creates opportunities for us. I don't think, for example, we're going to see 3 rate rises from the ECB this year. I'm not even sure we'll see 2. So I think that provides an opportunity there in terms of that extra yield and income we can get.
OK, and so what are you watching? What's the difference between 1 and 3 rate rises at the ECB? Because we talk to people from the East, from European central banks, but also other guests who tell us, you know, a spike in oil prices is not enough. It needs to be seen to be filtering through into other parts of the economy.
Yeah, and I think that's right. And I don't think we've seen evidence of that. And I think quite rightly people are taking a sort of wait-and-see approach. And really also the effect it actually has on the economy in terms of, I don't think we're going to see necessarily, we've seen credit spreads behave extremely well from the point of view of this. We've seen things, spreads come back to really where they were before, and in some cases actually even tighter. And I think that market is actually being able to look through things. And I don't think when we get to the end of 26, we'll actually think this is even the biggest issue for credit. It's really going to have been, I still think we're going to revert and we're going to look through this and we're going to find out that actually it was still the AI themes and that are bigger themes for this year.
Does it suggest you're more worried about growth versus inflation, particularly how that reads across to the bond markets?
I think we have to be more concerned about that, actually, because this is it's assuming that we're on a de-escalatory path, which I think actually we are. I'm sure we'll see some bumps in the road, but I actually think we're on a de-escalation path now, and it seems as though every side is willing to go down that route. Then at some point we will see the strait reopened, and at some point I think we'll view this as a temporary shock. So then we have to, I think, look through to the growth aspect of it and take that into account. And I think quite rightly central bankers are taking a sort of a much more wait-and-see approach than actually the market was, and that's the sensible approach to take. And it could be that we actually don't ever see the need to rate rises, because in some ways the talk that they have is actually doing the job for them in many ways as well.
What's looking most mispriced then in terms of the bond markets and where you want to be sitting on the curve?
I think it's that 2 to 5 year range where we see the most opportunity. We still are not so keen on very long duration because the term premiums are a much more important aspect, but actually in this shorter dated 2 to 5 belly of the curve, I think there's an opportunity there to get those higher yields, higher income, which is what everyone wants at the moment.
Do you think consumer expectations of inflation have become de-anchored? Because that's got to be the big fear now, isn't it? We go through inflation shock after inflation shock, and central banks they just keep looking through it. What's to worry about?
I think they're very aware of what happened in 22, and arguably they're a little. We looked through it a little bit too much, and inflation was regarded as transitory. But again, I think we are in a very different environment where we don't have stronger growth, we don't have such strong employment numbers. If we recall back then, we couldn't get hold of a car for 6 months. Second-hand car prices were raising very quickly, and the hospitality industry was short of staff. I think we're in a very different environment now, whereas actually I think there's much less chance of that inflation, especially if we do see a resolution of this conflict quite shortly. We'll see that actually those expectations never filter into the longer economy. The other thing is when we had 22, we had gas closed off for a much longer period of time, and clearly it wasn't going to come back.
If governments decide to protect consumers, would that change that argument?
I think that's one of the concerns as well, but so far the government policies have been very well targeted, not wholesale. I think that would change the argument a little bit, but having said that, we see fairly limited actions to help consumers from a government point of view.
Yeah, sorry, you finished that. Yes, that's certainly something that markets are alert to, isn't it? I wanted to ask you, James, about the IMF. Yesterday, warning that treasuries were in danger of eroding their safety premium and suggesting that actually, so we're looking at low corporate bond spreads and going so far as to say that these low corporate bond spreads that we're seeing in the United States, they are a gauge of the vulnerability of treasuries rather than the safety of corporates. I mean, how do you look at the tight spreads that we have in the corporate landscape in the United States?
I think we need to look at the lens, and when we look at corporate spreads generally, I think we need to look through the lens of the fact that actually corporates have entered this period. I think partly because of some of this volatility we've experienced over the last few years, they've actually adopted quite a cautious approach to their balance sheets. So in most cases, they're in very good health. They've refinanced when they need, they've long-termed out their debt. Generally, margins have held up and they've been in quite a healthy state. And I think that's why corporate spreads and indeed high-yield spreads overall, I think it's highly unlikely we'll see from this a wave of downgrades because of the Iran crisis or conflict. I think, similarly, I don't think we'll see a wave of defaults in the high-yield market. So actually, it's fair that spreads have not really reflected any of that and they've come back to normal. And I actually, although having said that, below the hood on this, I think we've actually got a lot of dispersion as well. And so AI is still going to be the biggest theme, I think, between the winners and losers, and we're going to see some segments do well, we're going to see some segments do poorly, and I think that's why it's such a time for this credit selection and where really most bond managers are going to generate alpha from that credit selection rather than beta.
Is it the right time to think, though, given the amount of issuance we're seeing from the Treasury in the United States? I mean, governments in developed markets generally, but including in at the Treasury, is it right to rethink what spreads tell us, I suppose, about safety and security?
I mean, I think the default expectation, if we're looking at it as a risk premium versus governments, that there's an argument that governments are not as safe as they once were, and we can see that in some of the term premiums. So perhaps that actually pushes people. I think, again, it's been a theme of ours for actually the last years that actually, in some ways, corporate spreads offer you a better way of getting extra return than it does pushing out your duration and taking long-term bets on government bonds. And so we'd rather take that corporate risk for exactly the reasons you're saying. I think that corporates are actually been, as we've seen government debt rise, corporate debt has actually come down in aggregate, and that makes it a more attractive environment or a more attractive source of income.
Private credit, is that behind us now as a risk factor? Is any contagion into public credit?
I think the reality is there wasn't really much risk of contagion. I don't think necessarily the issues of private credit are necessarily behind it, but having said that, do I think it's a systemic risk to the public credit markets? I don't think so. It's an important area, but it's not so large that it's going to disrupt the public credit markets. The other thing is that should, for whatever reason, the private debt markets not necessarily be so willing or able to finance leverage buyouts, we have the high yield market and leveraged loan markets fully open, fully able to finance. And they operate really as three markets that are available as a choice for private equity sponsors.
How do you think the market would react if President Trump tried to fire Jay Powell?
I mean, really, that's in the, I suppose, in the line of hypothetical and stuff. I think we see a lot of things that are mentioned in the press, but really not something
But if you see turbulence around, at the moment, there is a probability that Walsh does not get the gig anytime soon because of what is happening on the Senate Finance Committee. What happens if he doesn't get the green light until the midterms and we end up in this kind of hiatus period? President Trump's expecting rates to go lower. Is there any risk priced in right now around concerns around the Fed? I guess is the real question that I'm asking.
I don't think it's a possibility that the market necessarily looks at the moment, or something that we necessarily consider. I don't think it's necessarily priced in, because I think that actually the course of I don't think there's any real possibility that that's going to happen.
Okay.
It does suggest that maybe the markets could be wrong-footed if Trump follows through with these threats that he's come through time and time and time again. He said he's not dropping that DOJ probe, which goes to your point. Till is sitting on the committee, has said that is central to him. He needs to see that DOJ probe before he approves Kevin Walsh.
It is a massive tail risk in terms of it's far out. It's kind of all the way over on the left. But I guess it's one of those events that if it were to happen, it would have an extreme consequence. So it is an unlikely but highly impactful event that is really hard to price and deal with. Anyway, nice to see you. Thanks for
Thank you very much.
see us and dealing with that question. James Turner, EMEA Head of Global Fixed Income, joining us from BlackRock. OK, Qatar is warning that this worsening crisis in Hormuz will be a problem if it stays closed.
It goes way beyond the Gulf countries, even to the whole world. And what we have seen so far is really the tip of the iceberg, in terms of impact. Yet the full-fledged impact is coming, and it's not coming far away. I think in 1 month, 2 months' time, you're going to see really a huge, economical impact globally as a result of this war.
That was the Qatari Finance Minister speaking at the IMF Spring meeting. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Even if the war ends tomorrow, it would take quite some time for the recovery to kick in. Not only because of the infrastructure destruction. Tankers are slow-moving vessels. A tanker that leaves today would take 40 days to reach the Pacific Islands. So we have to keep in mind that the impact is already baked in.
The IMF's Managing Director, of course, Kristalina Georgieva, speaking to Bloomberg in Washington. Let us turn now to today's markets in 3 minutes on the opening trade with Adam Linton from the Markets Live team. Adam, let's start with stocks, because seemingly all over the world, not in Europe, which is perhaps notable, we seem to be going back to levels in stocks that we were at before the war started. Stocks really trying another day where we're trying to move on. I've been looking at the latest news lines, an extension of the ceasefire for 2 weeks, possibly. That's what people familiar are telling Bloomberg. Does that sound risk on, or is it risk off because the Strait of Hormuz stays closed for longer? I'm still scratching my head about that one.
Yeah, it's interesting. I think there is a large part of this which does feel like the market has moved on to some extent from the war. I mean, we saw that to some extent on display yesterday. So we saw some relatively negative headlines about troop movements in the US, some threats from Iran, and the market was relatively unfazed by this. So the market is still continuing to run with the optimism. I think, as Mark was on your show saying yesterday, there may be a potential economic reckoning whereby the economic impact becomes apparent, and that could become a factor for equities. But in the interim, we do have this kind of almost void, and it does appear that the AI trade in tech is filling that void. US tech is up about 13% month to date. We've just seen TSMC earnings, which are very positive. That's also helping prop things up, and that's kind of helping some indices to kind of reach pre-conflict levels and go beyond. As you say, things may become a little bit more regionally selective, and as you say, Europe is an interesting one on that front. Economic exposure doesn't have this big tech sector, and what we have seen from the tech sector, ASML, they were marked down yesterday despite good earnings, and then the earnings we have seen, okay, some of it may be idiosyncratic to the luxury sector, like Kering and Hermes, but ultimately there is a high bar for European earnings to impress.
Are bond markets listening to central banks telling them they're wrong?
Well, there was the Bailey comment about them being wrong, and that was, I think, when markets are pricing about 100 basis points of hikes, and we have come down since. I think with bonds, more generally, they're going to be a lot more cautious in pricing out the impacts of the conflict. And, we saw that on display yesterday. Bailey said the length of the war will be important, and, that reminds us there is still the conflicts going on. ECB, they're going to look like they're going to hold in April. They feel like financing conditions are doing some of the heavy lifting. So we've kind of gone back to 2 rate hikes price for the ECB, a little bit less for the BOE. I think we'll probably kind of stay there for a little bit until we get more clarity on the impact of the war, and that'll probably see that gains in short-term bonds are probably less pronounced than what we've seen in the equity market.
If the equity market is looking through this current conflict towards a ceasefire and a resolution, does that mean you get a further unwind of the hedging around the dollar?
It does feel like the dollar downside does have some more room to run, definitely. But I think, in terms of calls for the likes of euro dollar at 120, seem a little bit stretched. Either the ECB doesn't hike, we unwind some of that. Either the growth implications, if they do hike, come into view. I think you say a similar thing for the pound. And then if you look at the yen, BOJ is caught between growth and inflation. If the BOJ don't really hike, then if you're a yen bull, that's obviously a problem.
Adam, thank you very much indeed. Adam Linton from our Markets Live team, of course, with some analysis across different asset classes, with equities pointing higher again today. Remember, you can get up-to-date analysis and insight, of course, from Adam and the rest of the team. Just go to MLive Go on your Bloomberg terminal. Let's hit your stocks to watch for this Thursday and bring in Chloe Malley. Chloe.
Good morning, Tom. Let's start with Pernod Ricard this morning because it issued quite a gloomy outlook, and that is because, of course, of the war in the Middle East. So it expects the Iran war to drive down sales by as much as 4% this year, and that's actually compared to a previous expectation that sales would pick up in the second half. So walking back some of that previous outlook, and essentially the added uncertainty from the conflict is compounding existing challenges for the company, including lower alcohol consumption globally, but also lower demand for premium brands. And so we have seen Pernod Ricard already underperform its closest peer, Rémy Cointreau, for a while now. And so this weakness could continue today on the back of this outlook. Moving on to Tesco, which is also being quite cautious because of the same reason. So the operating profit actually beat estimates for this year. But then for the year ahead, the guidance is quite conservative because of the impact of those higher energy costs on household budgets. And so this is something that we'll be thinking about this morning, even though Tesco has been doing very well. Its strategy is really one of maintaining lower prices to try and retain that market share, and is probably going to have to continue doing that. And finally, Flutter is also in focus today after the gambling company was double downgraded by Citi analysts, with analysts saying that there was now lower conviction in the growth prospects for the company in the US, and also that there was the problem of higher regulatory scrutiny. And so that could put additional pressure on those shares, which, as we can see, have been taking quite the beating recently. But it is worth noting that it's the only sell that we've got on that stock, and there's 27 buys. So there is still some confidence in Flutter.
OK, thanks very much, Chloe. Chloe Malley with the latest on those stocks in focus. Still some minutes away from the start of the European trading day. We just wanted to correct something earlier from our programming. In Daybreak Europe, we mistakenly showed images of Blue Owl during a story about the US probing suspicious oil trades. We want to make clear, of course, that they are in no way related to that story, and the images should have been shown for a different story. We apologise for the error and for any confusion caused. Thinking about confusion takes me to the GDP story out of the UK, because it's completely irrelevant, really, what happened in February as far as what happens in March is concerned, because there's been a war. But I'm still amazed that the economist community could have so underscored the UK, I suppose, on growth for that one particular month. 0.5%, I mean, it's nothing to write home about in certain nations, but that's quite a big deal for the UK, and the market was expecting 0.1%. It seems the services sector actually did pretty well. It won't matter to gilts, probably.
Probably won't matter to gilts, probably won't matter to the Bank of England. But it just shows the challenge of trying to understand the UK economy right now. There's a huge data issue. Trying to just get a handle on what is happening here remains really problematic.
It's so opaque.
And I think that's just showing up in the volatility that we're getting in rubbish in, rubbish out. If you don't have good data going in to the model, you're not going to get a particularly good read on the way out. So we're just getting some real kind of variation in terms of expectations.
The gilt markets may move on the comments from Andrew Bailey. There's been a little bit of repricing around that, still expecting one additional hike later this year. It's interesting, James from BlackRock saying he actually doesn't think there's going to be, he thinks the BOE could end up cutting. He thinks that could change. There could be cuts, actually, later this year.
Across Europe, he's much more focused on the growth story, isn't he?
Yes.
Which seems to be where the market's thinking is right now, if that's what we're seeing happening in bond markets at this point, because we had been very preoccupied with inflation. Maybe we're starting to think more about growth.
The message from the ECB officials seems to be, though, that we're still thinking about hikes. There's still kind of one, maybe two on the table, and that's kind of what the market is now seeming to price. But basically the message is, though, we need more information. We don't know yet what's going to happen here. Are they going to be willing to look through? It seems they're going to be less willing to look through than other central banks.
On the stock side, are we going to see TSMC have an impact on what's going on in here in Europe? You've been trying hard to find, live prices that are moving on this.
The read across obviously would be to ASML, so we'll see if there's
Which
So
we heard
SML
from yesterday, which complicates it, doesn't
yeah,
it?
but say SML was already up. So I'm struggling with kind of cause and effect here in terms of understanding what's happening with these markets. But futures look broadly positive at the moment. We're a couple of minutes away from the opening trade. That's the picture right now. The FTSE's a little bit of a laggard. Anyway, we'll show you more data in just a moment. We'll get real pricing and figure out what's happening on cash in just a second.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Welcome back. A couple of minutes to go until cash trading here in Europe. This was the picture yesterday over in the United States. If you just look at this chart, it tells a very, very positive picture. Stocks are on a tear. Huge tear right now. You don't see moves like this, of this kind of length. The Nasdaq's been up, 11 days. It's a huge move. Why, I think, is a different question. We can debate that ad infinitum. But if you look below the surface, actually there are other things going on. The RSI has gone from kind of all the way over there to all the way over there. We're north of 70. It looks very extended, particularly for the Nasdaq. You look at breadth, it's not particularly good. But just focus on this. It basically goes from left to right, on the up, looking pretty good. And we've got to price some of that into Europe this morning, Tom.
Yeah, a solid session in Asia as well. So the handoff is there for Europe. Futures here pointing to gains of 0.3%, looking to add 20 points across the benchmark. When it comes to the UK, FTSE 100 pointing lower by 10 points, just a little softer by 0.1%. We continue, of course, to watch the oil price story, currently below $100 a barrel. DAX futures pointing to a pretty decent session as well, pointing higher by 0.3%, looking to add 69 points for the German futures. Anna, what are the individual names that you're looking at?
Yeah, we've got a few of those this morning, and a sector to watch. That's technology. We'll watch that because we had those TSMC numbers earlier on, lifting their sales growth outlook to more than 30% this year. AI leading the growth story there as smartphones. Of course, that segment is waning a little. We'll also watch Pernod Ricard in the drink space. They're expecting disruption from the war in the Middle East. They say that will contribute to a slump in annual sales of as much as 4% due to volatility and uncertainty. Also citing the war and the clouding of the outlook as a result is Tesco in the grocery sector in the UK. Their full-year adjusted operating profit came in above expectations, but it's the forward-looking stuff that everyone seems to be focused on this morning, Guy.
Absolutely. OK, here we go. Market open is upon us. Looks like the FTSE's going to underperform. The AEX may outperform. Let's show you some numbers, give you an idea of what is happening here and talk a little bit about what we are getting. So the FTSE 100 not expected to do much here. All prices have stabilised, and as a result of which you're not getting the lift we've seen over the last few days. Plus also maybe there's a bit of pound strength coming through. Anyway. FTSE 100, as expected, a little soft. Stock 600 not telling us much yet. I want to see what happens with the AEX this morning. I want to see what happens with the ASML. Is the ASML tied to TSMC, or is it just an echo of what we saw in yesterday's session over in the United States? The CAC had a terrible day yesterday. Luxury had a terrible day yesterday. Today we are stabilising a little bit. There you go. Some outperformance from the Amsterdam market. Clearly nothing's happening in Germany. It's up by 0.2%, but a little bit of outperformance. Let's see how much we get out of ASML this morning, out of that tech story that we continue to see driven higher in the United States and in Asia and now here in Europe. The AEX is up by 0.4%. The stock 600 is up by 0.2%. So a little bit of outperformance, Tom, coming through
in
from
answer
that
to your
trade.
question, that read across is there, up 2.8% right now for ASML. So given the weighting, of course, that is significant. Up 2.8% so far for ASML, and as Guy was saying, lifting the broader AEX index over in the Netherlands, lifting the tech sector to the top performing sector across the European space right now. So tech up 1.5%. Basic resources, you're seeing gains for the likes of copper, gold and silver in the session today. Basic resources is the second best performing sector, at least for now. Gains of 1.2%. On the downside then, on a risk-on day, travel and leisure is down 0.9%. Telecoms a little softer by 0.4% as well. You've got about, 7 indexes in negative, 7 sectors in negative territory. The majority are still in the green. Technology leading, followed by basic resources. Tech up 1.4%.
Yeah, absolutely. So the ASML story does stand out, and that's probably reaction to TSMC. It's probably also because it was sold off a lot yesterday on its own numbers. Interesting that the Tesco story also moving to the upside. So grocery stores is one of the sectors that's not doing too badly this morning, and Tesco's up by 1.5%. So there was the earnings story, but also the outlook talking about that being clouded by things in the Middle East. Pernod Ricard not doing quite so well on the back of its numbers, though. That particular stock is down by 1.1%. Food, beverage and tobacco is an area that's underperforming this morning. Pernod Ricard is down, and that's taking some of the other drinks makers down with it as well. But the balance of sectors is to the upside as we stage a bit of a rebound from the selling of yesterday.
10 stocks XD, so just bear that in mind. Some of the airlines are under a bit of pressure this morning. Ryanair's down a little bit, but the oil stocks certainly are under quite a lot of pressure. That's what we're seeing.
Yeah, absolutely. We've been reading and talking a lot about jet fuel, haven't we? We'll keep that in mind. Let's get to some market analysis. Karen Georges joins us, portfolio manager over at EcoFi Investments. Karen, nice to have you on the programme. Thanks for joining us. Do you think that the stock markets globally are kind of taking a lot on trust right now? They're wanting to move ahead, wanting to move back to other themes such as AI, and concluding that they've heard enough about the Strait of Hormuz. They've got conviction that it will at some point be reopened and therefore can move on.
But there's a kind of FOMO in the market. That's definitely true. That's why the market is up today. The hope of a prolonged ceasefire and also eventually the meeting of Trump in China. So there is a lot of FOMO in the market and also expectations of solid earnings, especially in the U.S. And obviously investors are waiting for comments on the impact of the Middle East before taking a very clear direction. That's why there is a kind of floor, very short term, on equity markets, and that we have almost erased all of March's downturn, contrary to oil that has erased half of the increase.
I was reading a note from a fixed income manager that was talking about a lot of dry powder and a lot of people sitting on the sidelines waiting to see how this plays out. Doesn't maybe look that way from where we are on global equity stories, Karen, but what are you seeing? Are you seeing investors having pulled back and waiting, or happy to jump back in on these AI themes?
Well, positioning is still very high, so investors have not really retreated their equity exposure. Some hedge funds have put shorts in place, and they have obviously removed them very quickly when there was the announcement of the ceasefire. But there is a clear mismatch between bond investors and equity investors. I mean, I'm talking really about yields and not about credit. There is this mismatch, and the AI narrative will be really dispatched into two clear narratives. So the AI enablers and obviously disruption. So the market is waiting for more information on how AI can disrupt. Every news flow on Anthropic or other themes like that can have a very big effect. The software and IT services is already down around 25% year to date. So that will be a clear issue, obviously, with the impact of the Middle East for the earnings season.
Karen, are you feeling the FOMO? Would you chase the rally from here? How are you feeling about what you've seen thus far and what comes next?
Well, from an index perspective, it's really hard to chase the rally when we're at 17 times for the Eurozone, 25 times for the S&P. But this market, contrary to last year and the year before last, has much more divergence between stocks. So there is less concentration, which is good for active equity managers. So this is what investors need to chase. It's stock ideas and not passive investment into the index or other kinds of sectors. Okay. It's really a market of stock picking.
What's still under-owned then?
Probably defensive stocks, because a lot of defensive names have even become value stocks, which is very odd because historically they've been growth stocks, for example, consumer stocks. But it's really hard to chase those stocks today, given the fact that there's going to be an impact of oil on COGS for most of these stocks. So it's hard to chase those names. But defensive stocks have had a very big lag against cyclicals recently. So short term, maybe there's an idea to go and find value there. And on cyclicals, it's really important to be positioned on those who have very solid end markets. For example, electrification, renewables, so themes that have very strong growth drivers today. And so it's that positioning, so the end markets, that is key, more than the style, more than value against growth or cyclicals against defensives. It's really the end markets that count.
Karen, on earnings, are the earnings growth expectations underpricing the supply chain impacts from the Middle East?
Today, earnings are probably mismatching that impact because they have not been revised down. They have even been revised up for the S&P. So there is a clear risk of disappointment on that front. The thing that can balance that disappointment is the fact that at the beginning of the year, we had very cautious guidance. So even the luxury names that you mentioned before, they had cautious guidance in January. That's why the reaction was not that harsh on LVMH, because they already were cautious before the war. But there is clearly lack of information for most companies on what the impact will be, oil and other commodities, on their COGS. Companies are already saying that they cannot put price increases like they did in 2022 because the inflationary context is not the same. So it will be harder for them to be able to pass a price increase for a lot of companies.
You touched on tech and on AI, and at least in the session yesterday, you saw this reversal of a trend that we've seen, which is that software stocks actually outperformed the chip stocks yesterday. Are you finding any value in software and in the IT space, given the sell-off that we've seen?
There is a clear value, so I'm going to be very affirmative, on this point, because of passive investment, and there have been baskets and ETFs on AI risk names, so everything is being thrown out in a very harsh way. But there are clear winners in that space. Companies that are not disrupted by AI, and AI will be a key growth driver for them, especially software companies that are on critical markets such as infrastructure, construction, for example, also on defense, on auto, airlines, etc. So it's not everything is the same. Some companies have true competitive threats, but others will be able to outgrow expectations and to prove that AI is not a disruption risk for them. So there will be clear differences between those stocks in that area, and we are positive on some of those stocks here at Equifax.
Karen, let me ask you about the aviation sector, but I'm just going to quote what we've heard from EasyJet this morning and ask a broader question about what visibility we have here. EasyJet basically giving some guidance about how much they're impacted by the war in the Middle East. They're saying that the booking curve has shortened as expected, resulting in lower than normal forward visibility. And I wonder how much you're thinking about that, the really reduced visibility from certain corporates, and yet stock markets that seem to want to find the positive often. How much are you thinking about these pockets of weakness that maybe are not fully priced in yet?
I totally agree. So you mentioned before I came on air that the real issue now is probably growth more than inflation. People have been focused on inflation since the beginning of March, but the area of worry is more on growth. And as you said, demand will probably take a hit because of the situation, and very few companies have spoken about this. So EasyJet obviously is a loser airline companies of the situation today. As I mentioned about price increases, a company like Procter & Gamble mentioned that they cannot pass on price increases. They can only reduce promotional activity. So you have a double problem. You have a lower demand, so lower volumes, and you don't have the capacity to increase prices. So there will be probably a squeeze on margins for many companies, and there is an issue on volume. And as you said, also reduced visibility. So for even B2B stocks, so industrial companies, there is also a risk on backlog, so on orders for the next quarter. So this is going to be an issue not only for airline companies, but for many stocks. We share that worry on demand, on volumes, and the market is still a bit of complacent because of that FOMO theme that I mentioned earlier, the fear of missing out if there are good news on Iran, on the Hormuz issue. So this is going to be a driver very short term, but earnings will differentiate stocks and we will have a very strong divergence.
Okay, so that's the margin erosion story. Where are you finding, Karen, margin resilience in this environment?
Margin resilience is, for example, companies that also have clause indexes in their contracts. So, for example, some utilities or industrial companies, when for example, the copper price is up, they can increase prices. So they have protection on that front. And obviously, companies have strong pricing power. They have a leadership in a very tight market. So when I mentioned electrification, some cable companies have a very strong pricing power. Some industrial companies also have pricing power, given the strong demand. I was talking about electrification, for example, electricity, which is now 25% of energy demand in Europe, will reach 50% in 2050. So there is a clear growth increase for that theme. And so those companies, for example, have strong pricing power. And obviously other companies in the tech area can have pricing power when they have leadership. So those companies will have that protection. And obviously those who are not sensitive to oil and derivatives on their costs.
Karen, great to catch up. Really useful insight as to what is happening here. Karen Georges, portfolio manager over at Ecofy Investments. Let's talk a little bit about what's happening, big picture with these markets right now. ASML is, as you can see, up quite nicely. Is that a reaction to TSMC or just yesterday's move over in the United States? Defence stocks are down a little bit. Defensive stocks are also down a little bit. LVMH bouncing back just a touch. The chip story is absolutely front and centre, though, for global markets right now. Let's get some more details as to what is happening there with Chloe.
Good morning. Indeed, we are seeing green across the screen for that chip sector after TSMC raised its revenue outlook. And so this really shows the resilience of this AI chip demand despite the macroeconomic impact of the war in the Middle East. And so this is driving those stocks higher across that chip sector this morning, with ASML in particular benefiting. On the other hand, Pernod Ricard is not doing so well this morning. It has warned about the impact of the war in Iran on those sales for this year, despite the fact that it had said earlier this year that sales would actually improve in the second half. And so we are seeing that driving down the stock this morning. It's really compounding existing challenges around lower alcohol consumption and lower demand for premium brands for the alcohol sector as well. Moving on to some boardroom drama, and Monte Paschi shares are up this morning after investors backed another term for CEO Luigi Lavaglio after the board had tried to get rid of him. And so this is a triumphant return for the CEO, and we are seeing shares react quite positively to that, with Paschi shares up 3.5% this morning. On the airlines and travel front, we're seeing a little bit of weakness this morning, with EasyJet down 4% after guidance disappointed. So the outlook has been hit, of course, by flight disruptions and those higher fuel costs because of the conflict in the Middle East, and is dragging down the rest of that travel and airline sector, with Ryanair and TUI also weak this morning. And finally, let's end with Mighty, which is a facilities management company listed in the UK. It said in a trading update this morning it expected a double-digit profit and revenue growth for this year. So quite a bright outlook for the company, and we're seeing that reflected in the shares this morning. We're up almost 4% for Mighty.
Chloe, thank you very much indeed on some of the stocks on the move in this Thursday session. Chloe Melly, thank you. Coming up, we're going to get the latest on TSMC surge in profit as the war in the
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Welcome back. You're watching the opening trade. 19 minutes into the session. This is what the picture looks like. We're holding on to gains. It was a decent session yesterday. Really decent session over in the United States. You are seeing definitely the chip story on the front foot this morning. The AEX has been outperforming. There are other sectors that are certainly under a little bit of pressure. Travel and leisure in particular is certainly seeing some downside on the back of the update we've had this morning from EasyJet.
All of this, of course, as TSMC raised its revenue outlook for 2026 and an upbeat forecast, underscoring the resilience of AI chip demand despite concerns about the economic fallout from, of course, the Middle East conflict. For more, let's bring in senior strategist Neil Campling, who's going through the TSMC numbers for us. We're seeing the read across to ASML. That stock is up as a result of the demand that we're seeing, the capex spend. Margins are looking healthy for TSMC. There's no suggestion, it seems to me, from the initial look at these numbers, that the demand around AI and its chip production is slowing.
No slowdown at all. We are seeing demand high, we're seeing supply constraints, we're seeing pricing strength, we're seeing the most leading edge of their fabs now 25% plus of revenues. They've raised guidance again, even though they've already raised guidance this year. So, I mean, every time we think it's as good as it gets, it still gets better. I mean, the demand trends are off the charts, so it's as strong as can be. So TSMC is up triple digits over the last year. It's led AI winners gains. It's one of the three kind of global key enablers of AI alongside NVIDIA and ASML, I'd argue. So everything is bullish in the AI camp, for sure.
Everything's bullish. The hopes and fears of what AI can do for us, very much demonstrated by the latest out of Anthropic. And whilst we've been busy talking about rightly, the story in the Middle East, Neil, maybe we haven't talked enough about the new release from Anthropic. Tom's going to be speaking to the management from Anthropic shortly. But this is quickly becoming a preoccupation, isn't it? Mythos of governments, of central bankers, of regulators. Everybody either wants to use it or is a bit scared of it or wants to stop people using it. I mean, what's your take?
Well, we get those scares around every new big technology leap, for sure. And the fact that the cybersecurity angle of this is that sometimes a flaw or an issue that takes 10 to 20 years to discover now takes mere seconds. So it's kind of this paradox for any kind of new technology that the risks are there alongside the big technology gains. The big thing with this particular product set from Anthropic is the kind of size of the revenue potential that we're seeing. There are some suggestions that by the end of this year, the revenue run rate for Anthropic could be 13 times bigger than Salesforce and Adobe and ServiceNow and Workday combined, for massive SaaS companies that are well established. So the numbers are just huge.
Elon Musk is struggling to get what he wants, which doesn't often happen.
Couldn't happen to a smarter man, yes.
Yes.
Clearly, what's happening here is a chip equipment war in terms of trying to get access to the chip equipment. And
he wants to build his own fabs, doesn't he?
He wants to build his own fab, the Terra fab. Now, it could cost up to $13 billion to build this particular fab. Big numbers again. The key thing for me in this exclusive overnight that we had was the fact that Musk is prepared to pay over the market price for the chip equipment. That tells you there's massive high demand for the equipment, for the fabs. So who's going to build this? Who's going to build this first? There's only limited enough of machines from ASML and Applied Materials around to fit these out. But it's a massive war going on in terms of the chip equipment race to get to the AI leadership that Musk and everyone else is after.
Yeah, every now and again we go round in circles, don't we, and rediscover the limitations that there might be around the AI build-out, and they're not always in the places that you thought they might be. Neil, thank you very much. Senior strategist here at Bloomberg, Neil Campling. Thanks for joining us this morning. Let's check in on the grocery sector in the UK then. We have the Tesco share price going higher this morning. That's as Britain's largest grocer gave a conservative guidance as it faces uncertainty over costs and the impact on households due to the war in the Middle East. For more, we're joined by our consumer reporter, Maddie Parker, to talk us through the Tesco numbers and some other consumer-facing stories. Good morning to you, Maddie. Nice to have you with us. So what have we learned from Tesco's and the earnings story this morning?
Yeah, so Tesco kind of joining this kind of growing chorus of retailers who are warning about kind of impact on both their costs and on UK households following the outbreak of conflict in the Middle East. They weren't quite as forthcoming as some other retailers in terms of saying this is exactly how much it's going to cost us. Having said that, as you say, they have been cautious. They've given kind of wider guidance than they would have previously wanted to do. That's between £3 billion and £3.3 billion for the current year. Ken Murphy, Tesco CEO, this morning was very keen to emphasise that they're yet to see major supply chain disruption, saying their suppliers had not yet communicated that to them. But they also confirmed, and we've heard from the UK government this morning, that they are kind of working with the government on contingency plans if there are to be any food shortages, if there are going to be any sort of fewer supply and variety on shelves going forward. And they've also seen, of course, an increase in demand for their fuel and their forecourts and their supermarkets.
OK, Tesco stock is up 3.2%. It's giving a lift to the likes of Sainsbury's. M&S is up 1.7%. Sainsbury's is up 1.8% as well. So we'll see if they communicate similar relative resilience in terms of the supply chain story, at least for now. It's a bit of a different story. It's a different business, of course. Pernod Ricard, the drinks maker, they have seen a hit as a result of what's happening in the Middle East. It's a demand picture, it seems, rather than necessarily a supply chain story for them. What stood out to you for Pernod Ricard?
Well, Pernod, they also gave a very cautious update. They actually think that organic net sales could decline 4% this year, and they've said that is exactly because of the conflict in the Middle East. They've also, having said that, they did beat analyst expectations this quarter, but they are seeing demand problems, as you say. I mean, China was a bit of a problem child for them for a long time. It seems that the US now might be another issue. They're seeing kind of persistent weakness around there. And just on Pernod, another thing that everyone's looking out for is some talk about a potential deal they might do with Jack Daniels maker Brown-Forman. There's yet to be any word on that this morning, but we'll see what happens.
Maddie, great stuff. Thank you very much indeed for joining us, updating us on a couple of key stories this morning. The other one we're watching in terms of the European equity story is what's happening in the airlines. EasyJet's come right back. It started off, I think, down 7. It's now only down by 1.2, 1.3.
And it pulled the broader sector down.
It did pull the broader sector down. A couple of stories here, one of which is kind of what is happening on fuel costs, which they're kind of having to factor in, and talking about the impact that that's going to have on the losses, and also what consumer demand is, the point that you were making about the fact that it's being pulled in a little bit, the consumer being a bit more cautious. If you have to pay more at the grocery store, are you going to pay less on holidays?
Yes.
Kind of how these things, kind of what do you do with your money?
And if you see all these stories about how, yeah, sure, there's enough jet fuel for April, May, we'll get back to you. We're not quite sure. It's not going to, maybe that weighs on people's thinking as they consider what to do with their cash.
Also, do you want to stand in a big long queue at a European airport at the moment?
Yes, for other reasons. Nothing to do with jet fuel, but to do with
That's biometric data. Biometric data challenges, so long queues, concerns about whether or not your flight... On the flight fuel question, it's you book your holiday in the summer, and there's concern that, well, will it actually fly, and will I get my return?
Staycations all round.
Excellent. How do you get to the staycation?
Coming up, as businesses, as Anna thinks about her holiday and her staycation...
I nearly said EV, but I thought that might be a bit triggering. So.
Governments weigh the potential impact of Anthropic's new powerful AI model. This might make you want to stay in your basement rather than go anywhere on holiday. Mythos. We're going to speak to Pip White, head of EMEA North at Anthropic. That exclusive interview is next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back. This is the opening trade. 30 minutes into Thursday's session, and this is a picture across European equity markets. Then we're up by 0.3%. Another day where FOMO, in the words of one of our guests, is causing equity market investors to try and look through what's been happening in the Middle East, or at least not take a negative interpretation of reporting around the extension of a ceasefire, and decide to focus on other things. And technology is one of those things. Meanwhile, we have grocery stores cushioning the impact on the FTSE 100 and helping that one go higher. So the FTSE is up by around 0.25%. But broadly speaking, Guy, we're making modest gains across this market this morning.
Modest gains. Let's talk about what the internals look like. 2-to-1 in terms of the ratio. 300, let's call it 400 stocks up, 200 down. The internals don't look quite so good, though, if you look at some of the other metrics. And volume is one of those things you want to look out for. Breadth is another one that you want to focus on as well. So while you've got this kind of FOMO rally on, there are internals that you want to pay attention to which aren't telling you quite such a positive picture. OK, let's break it down. Let's talk about where we are seeing some gains this morning. TSMC numbers were good. You also saw a strong session yesterday, which is going to lead into ASML. So there's two factors which is driving the lithography equipment company. SMI is also tracking higher as well. Another factor lifting the FTSE 100 is some of the metal stocks, which are up. Metals are having a better day today. So Rio is up by 2.2%. On the downside, some of the consumer-facing stocks are not looking quite so good. Pernod is one of them. It's down by 1.1%. Ashmore's down by 5%. But EasyJet was the one that initially looked really bad, but has come in really quite considerably since then. You're seeing a ripple effect into names like Ryanair as well. It's warning on a couple of things, one of which is the kind of demand visibility. The other factor is the impact that we're seeing from higher jet fuel costs. Both of those impacting the EasyJet numbers this morning. The stock is now down by, let's call it 1.5%, Anna.
Let's talk about technology, Guy, because it is a conviction around AI that is helping markets to regain their positivity. Now, the AI frontier lab, Anthropic, is the focus of attention across boardrooms and governments after the partial release of its most powerful model to date, Mythos. Now, warning of cyber attack risks if it got into the wrong hands, the company has limited the release to a handful of major firms. It's quickly gained the attention of governments, regulators and industry leaders.
The issue is, to what extent is this new version of their product going to be able to, in a sense, identify vulnerabilities in other systems which can be exploited for cyber attack purposes? We've all got to get to the bottom of this.
The impact of it can be so disruptive for good or for bad. I think the development we've seen with Anthropic and Mythos is a good example of a responsible company that is suddenly thinking, that could be really good, but if it falls in the wrong hand, it could be really bad. We need to do something about it.
The way the compounding of these models learning works, this Anthropic Mythos model was a step function change in abilities, learning, capabilities. It's all logarithmic. You go from x to the 10th power to x to the 12th, and then it's very difficult to catch up.
Now, this comes as demand for the company's initial AI model, Claude, has spiked, and the company's annual recurring revenue has topped $30 billion. Now, as Anthropic's growth has surged globally, Europe has emerged as its fastest-growing region. To capitalise on this, it's been expanding across the continent, with 5 offices now established. Here in London, Anthropic is doubling down on its operation with a new 158,000 square foot office with capacity for around 800 people. So let's talk about the opportunities and excitement around this product and also some of the vulnerabilities. Tom.
Yeah, Anna, thank you. Very pleased to say that we are joined now by Pip White, head of EMEA North at Anthropic, who joins us for an exclusive interview. Pip, thanks for joining us in the studio this morning. Let's start with the London office then, and what that tells us about Anthropic's ambitions for the UK and for Europe.
Yeah, I mean, thank you very much, Tom. It's great to be here this morning. Yeah, I mean, I think we have seen unprecedented growth here from our enterprise customers. At the end of 2025, our revenue was at around 9 billion revenue run rate, and as you just said, last week our revenue has now hit 30 billion in run rate, and we're seeing really significant demand from customers in 3 key areas. Firstly, in terms of how customers are thinking about transforming their general day-to-day employee work, how customers are thinking about transforming their knowledge work, so automating a lot of that through an agentic process, and then how customers are thinking about building products on top of our large language models to kind of accelerate innovation and bring that innovation to life. So customers like Spotify, Lovable, for example, that are really using and harnessing the power of the technology to really accelerate their growth and demand. We've also seen a significant growth, even in just the last 2 months, around customers using Anthropic above $1 million. So in 2 months ago, we had 500 customers that were spending over $1 million with us. That's doubled in size just in the last 2 months. So we're really seeing a lot of amazing growth. And I think as a result of that, we're delighted to announce the opening of our London office today, which will open in Q1 of next year.
Yeah.
And that's really a detriment of like the opportunity that we have for our customers, the opportunity for growth, and the excitement that we have in this marketplace.
What does that mean for headcount for Anthropic here in the UK?
Yeah.
And what are you targeting in terms of adding headcount over the next 12 to 24 months?
Yeah. Currently, we have around 200 employees in London right now. 60 of those are members of technical staff, and the rest are a wide variety of roles, particularly in go-to-market. Our ambition to fulfill in terms of the new office is that we will have the capacity to get to 800 employees in that time. So, as I say, the office will open in Q1 of next year. We're really excited about the opportunity as well to attract the best talent across Europe here. We've always been very thoughtful about, we want the best talent, but we want talent that really are very thoughtful about the way in which we collaborate with our enterprise customers and how we think about deploying AI in a safe and responsible way. So we want that kind of bridge of talent, but that really believes.
Does Europe and the UK have that talent still?
I certainly believe that, yes. I mean, we have a fantastic team already who are hugely passionate about working with customers and collaborating with our customers and helping our customers on this journey. But also, I think, we want to make sure that we hire employees that are really aligned to the importance of thinking about this in a safe, considered, and a very responsible way.
Well, talking about being responsible and safe and considered.
Yes.
I mean, Anthropic's making headlines almost on a weekly basis, and most notably now around Mythos, of course. We know that some US banks have had access through Project Glasswing to this latest model for testing. Have you released it to UK financial institutions? Where are we on that journey?
Yeah, so great question. And I think where we are on this journey is that, as you're right, we've opened this out to a number of organisations, including Microsoft, AWS, some financial institutions, a very small cohort. And essentially, Mythos has really showed us that there are a lot of very severe vulnerabilities right now. Mythos found vulnerabilities in every single operating system and in every single web browser. And so we wanted to build this small cohort first, to basically learn from what they found in a very contained and controlled manner. But you're right, our intention is definitely to expand this out in a very intentional way.
To be clear, it hasn't been expanded to UK financial institutions yet?
No, but I think that is in the very near term. like in the next
weeks away?
In the next week.
In the next week?
In the next week, yeah.
OK, and these are top UK financial institutions?
Yeah, we've been, I mean, as you would expect, the engagement that I've had from CEOs in the last week in the UK has been significant. Customers, firstly, want to say that they appreciate our very thoughtful approach to the way in which we have released Mythos. But secondly, of course, they want to understand the opportunity to be considered to gain access to that model in a controlled way. And so we've been having a lot of conversations with CEOs about the reason why, firstly, we did Project Glasswing and the way that we thought about that intentionally. And then secondly, being very clear and to understand exactly why they want to get access to Mythos, and then working in partnership with those customers to think about the next kind of phase 2 and 3 and 4.
Does the system of release from Frontier Labs need to change? Some will be looking at this and thinking Anthropic has made this decision to limit the release of a model that can prove very dangerous.
Yeah.
There's the upside, but there's also clearly the dangers that you've articulated and that the team have articulated. It's come down to decision-making at Anthropic as to whether or not and how to release this. That has to change, doesn't it?
I think where I would position it is that this model in particular, we saw a significant leap in cyber. And as a result of that, we were very concerned about a mass release and made the decision not to do that. And obviously, I've already articulated our kind of approach with Project Glasswing. I think labs have to take a responsibility for thinking about safeguards, for thinking about safe and responsible AI as it gets into the hands of the enterprise, particularly highly regulated organisations like financial services.
But we don't release a new car onto the market if it hasn't and doesn't meet the regulatory safety tests of a particular nation, and the same with airlines, whether it's Airbus or Boeing or Embraer.
Yeah.
We need a system like that for AI, do we?
Well, I think what I would say is similar to how we've approached it now. We are being very thoughtful and intentional about our release. We have not released this in GA, and we don't have any ambitions right now to do that. We are essentially putting our own safeguards and our own limitations around the release of this product because we know how powerful that it can be. And I think, I'll just say back to the customer meetings and conversations that I've had, they are very grateful for our very considered and intentional approach in terms of this release.
What is it? The models only get better from here, presumably. What does it mean for the business model of Anthropic and others if you have to... They're getting so good that you have to constrain their release?
I think Dario has always gone on record to say that if we have to slow down the release for the safe and responsible development of AI, and that has a commercial impact, we will do that. Because our most important mission here is getting this technology into the hands of employees, into the hands of customers, into the hands of enterprises in a safe way. And so I don't think that we will change anything to do with our approach here. I think we will always have a safeguard approach, we will always have a safety approach, and we will always make sure that we're doing it in a very considered, intentional way.
Are you building out your data centre capacity in Europe?
Yeah, so I think this is a great question. And actually, we look at capacity globally. We're always looking for opportunities to grow capacity. And actually, only last week, we announced a multiple gigawatt capacity with Google and Broadcom. And so how I think about this, particularly in the UK right now, is we have fantastic relationships with all three hyperscalers, with AWS, with Microsoft and with Google. And we continue to partner with them in a meaningful way in the UK to release safe, responsible technology.
You haven't directly answered my question as to whether or not you're building out more data centres, more infrastructure. Is that in the pipeline, or are there hurdles?
Yeah, I mean, I don't know that. I don't believe there are any hurdles. I think right now we look at it from a global perspective, Tom, quite honestly, and we consider that in terms of a global outcome. Right now, our relationships with the hyperscalers allow us to scale very quickly and to meet the 11x demands of our European customers in order to serve the requirements that they expect of us.
There are reports that the valuation for Anthropic, which could be listing later this year, we'll see, the IPO, is now around $800 billion US or thereabouts. Does that seem reasonable to you from your position, Pip?
I mean, I think I would just say we have been, so privileged to be so engaged with customers in the enterprise. There has been so much demand, as I said from the outset, $9 billion at the end of 2025, just over $30 billion as we sit here today. The level of demand has been unprecedented, and we feel very privileged to be in that position to help serve our customers on this AI transformation journey.
And you talked about that $30 billion annual recurring revenue, which is remarkable.
Yeah.
what is the cadence going from here? What are you projecting out in terms of where the upside is to that over the next, say, 12 months?
Yeah. I mean, I think we have a significant amount of opportunity still to bridge into the enterprise. I don't like to say we're only getting started, but
do you feel like you've won on enterprise versus OpenAI?
I think we have always maintained a very clear focus in the enterprise. We've never been distracted by building a consumer model or a consumer product. Our intention for the last 5 years since we started this business has always been that our focus is the enterprise. And I think that really resonates with customers. We're not distracted by, other ideas or other desires. Our focus very much here is like winning in the enterprise, helping our customers on this transformation journey, and being a true partner of choice.
Thank you very much indeed for your time, for coming to the studio. Pip White, Head EMEA North at Anthropic. Bloomberg is going to be hosting, by the way, a live Q&A on Anthropic's Mythos model tomorrow. It's open to everyone to listen in. Terminal clients and digital subscribers have the opportunity to send in questions for the team to answer in real time. So take that opportunity. That's Friday, 6:30 p.m. London time. Coming up, we're going to switch our focus back to the banking space. Morgan Stanley CEO Ted Pick telling Bloomberg he's not concerned about the firm's private credit exposure. That also partly links, of course, to AI. We're going to bring you more of that interview next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
To the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Welcome back. This is the opening trade. Now, Morgan Stanley stock traders had a record-breaking first quarter, reporting $5.15 billion from equity trading. The firm's wealth business pulled in $118 billion in net new assets, and investment banking fees climbed by 36%. Speaking exclusively to Bloomberg, the CEO, Ted Pick, said he wasn't concerned about the firm's small private credit exposure, but added that the sector is going through a learning moment.
When I say adolescence, I mean it's a learning period. You know, it's grown like a weed. And that, as you know, is a function of an asset class that didn't exist 10, 15 years ago. Effectively, the street was replaced on that. It's around $1.7 trillion. High yields at about $1.7 trillion. Levered lending is at about $1.5 trillion, $1.7 trillion. So it's relevant, but the IG stack, as you know, is the investment grade stack is 10 to 15 trillion. It's all credit. It's all credit. So all things being equal, if the economy is growing, credit does fine. It does fine. When there's a recession, credit struggles. And then the question is then, which of the borrowers were really doing the work around what's in underlying portfolios? How quickly was the capital put to work? And I think what we're going to see is we're going to see dispersion of returns among great asset managers who really stuck to their knitting, thought about sector diversification, thought about how long it takes to put those investments to work, and managed to do less well. And over time, I think the alts will find their place as a growing asset class for all kinds of institutions and investors.
Morgan Stanley CEO Ted Pick talking about private credit being kind of like a teenager. You know how that ends. Anyway, let's talk more about what we are getting out of Wall Street right now. Bank of America's stock trading desk also set a record, riding a wave of volatility that has helped push the bank's earnings to the highest level in nearly 2 decades. We're joined now by Philip Richards, team leader for financials at Bloomberg Intelligence. Joining us around the table. Good morning.
Good morning.
Can I draw a line between what is happening with the Iran conflict, the volatility that we're getting off it, and what is happening on Wall Street in terms of trading?
Well, clearly there's been a boost this quarter, and that's why we have hit a record 20-year high, you said. But also this time last year was also a record quarter. Recall Donald Trump coming into power, about deregulation, tariffs was quite a big theme at the time. We all recall. So yes, it has been on a trend of basically a 2-year path of a big improvement for the banks overall.
How much exposure do they have to private credit? How concerned are CEOs of these banks?
They're rightly concerned, as we heard there, that the losses are not coming through yet, but we haven't gone through a whole cycle yet. And that's always the case of banks. You can't look at the times when they begin to slow and say, have we got losses, yes or no? Until we've gone through that whole cycle, we won't know for certain. And that's the case, what might be coming in the future.
Yes, I mean, bank CEOs want to talk about growth. That's not necessarily coming with new jobs, or maybe it is, but just different jobs. Wall Street banks cutting about 5,000 jobs in the first quarter. What's the actual story there, then, Phil? What do we need to know?
Well, some of what we've looked at, we actually think is short term it might actually pick up in terms of employment at the banks, because as you bring in AI into the banking, you need people who know how to work the processes, and it takes time. So yes, there might be job cuts coming through, but actually might be a bit more delayed than many are thinking.
Is there a read across from what we're getting on Wall Street to what is happening, what will happen in terms of the European bank reporting season?
Definitely, I think so. And obviously, a lot of what they're working in is very similar markets. And for the outside the US banks, support about a 17% rise in trading in the quarter. That's about 4% beat versus consensus. For European banks, we're expecting about a 10% rise. So if they're in the same markets, there's a chance they'll also do better as well.
Philip, how are they looking? How's the banking sector looking at all of the innovation coming out of the likes of Anthropic? Tom was just talking to about. Well, even Claude, nothing to do with Mythos, but Claude, how nervous are they about what can be provided by some in the tech space?
Well, they're certainly telling us. So there's risks coming, but there's also opportunities too in terms of how they can implement the new rules, new changes, and the new technology. So yes, there are challenges, but it could be positive as well.
Okay. Philip Richards, thank you very much indeed. Team leader for financials at Bloomberg Intelligence. Let's look ahead to what else we are watching throughout this Thursday, 1:30 p.m. UK time. We're going to get US jobless claims. IMF spring meetings continue, of course. The ECB speakers today include the Bundesbank's Joachim Nagel and Germany's Vice-Chancellor Klingbeil. And later there's going to be an informal meeting of EU tourism ministers in Cyprus. Guy Johnson's very excited about that. Travel and leisure, airlines, what happens in terms of the disruption around that. US earnings, Netflix, PepsiCo and Bank of New York Mellon, speaking of the financial space. And when it comes to Fed speak, we're going to be hearing from Williams and Myron as well.
Absolutely, yeah.
Yeah. Let us find out what is on the minds of the Markets Live team. We're joined now by Skylar Montgomery-Koning, Markets Live strategist, with us on set this morning. Skylar, good morning. There's a lot happening in markets right now and a lot to keep track of. What are you chasing?
Yeah, I mean, I think right now the high-level idea that I'm thinking about is kind of timing the pain. In terms of right now, the market's rallying very aggressively, and so the pain is to be short. But in the medium term, we're going to have a stagflationary shock. So I definitely am still worried about this idea that oil prices are too optimistic when you look at the curve in terms of the decline that's expected. We haven't priced the kind of growth downgrades that will likely come at some point. And by that I mean, you see the inflation impulse before you see the growth decline. And so it's really all about timing. So, eventually we will have that data come in weaker, but it used to be you'd get an early warning signal from soft data, but soft data is very partisan now. It's also negatively correlated with inflation. So since COVID, it's done a really bad job of showing you that. And so it's not the data that's really going to get the market to turn. It's unlikely to be earnings season, given that that timing impact is relevant there too, in terms of it's more likely to come through in 2Q earnings than 1Q earnings. So maybe it's the ceasefire, but again, we've already seen that pushed out potentially from next week. And then that just brings you to kind of over-exuberance. Our team has done some work on liquidity tightening post-taxes. Also, the strength of the rally that we've seen points to some frothiness, but there's also still evidence that there's money sitting on the sidelines that can be put to work.
Back up a little bit. Is the oil market not telling me the truth?
It's interesting because there's been some commentary from an energy CEO overnight that essentially is saying the futures curve doesn't really tell you where prices are going, and that backs up analysis that I've done as well, where when you have steeply backwardated curves, that's more of a relevance to incentivize inventories to be drawn down now. And you can actually have a profitable systematic trade by buying steeply backwardated commodity curves that have positive momentum versus selling steeply contangoed curves that have negative momentum. And the idea is that usually supply constraints stay around longer than you think. So oftentimes you roll off that forward contract rolls up into spot. And then the other bit is that the curve isn't exogenous, right? So the fact that future prices are lower tells energy companies that they shouldn't invest. If you look at U.S. rig counts, they haven't risen since the conflict began. And so because they're worried about prices being lower in the future, they don't do investment now, which means there's not more supply in the future, which kind of means that it becomes self-reinforcing.
So on the earnings story then, in that scenario, do you need to be screening out the companies and the corporates that have overexposure to those energy inputs? To what extent, how do you think about factoring that into the earnings calls and whether or not that is priced in?
Yeah, I mean, this is the interesting component, is that I think you likely see two waves in terms of right now you will see an impact from directly impacted companies that have energy exposure. So, EPS expectations for energy have risen in first quarter, they've risen more in second quarter, but that will definitely have an impact versus your input cost. And then the second wave is we've not had energy prices high enough for first quarters, and we've had 1 month, March of the war, to see broad-based demand destruction. But eventually you will get some kind of demand destruction that means, cyclicals underperform defensives. And you need to consider that as we head further into the conflict with energy prices staying elevated.
OK, Skylar, thank you very much indeed. Bloomberg's MLive strategist Skylar Montgomery-Koning, thank you. Before we go, we want to take a moment to mention that emerging markets investing pioneer Mark Mobius has died at the age of 89. A partner at Mobius Investments says he passed away in Singapore. Mobius spent over 30 years with Franklin Templeton, championing opportunities in Africa, Asia, Eastern Europe and Latin America. He founded Mobius Capital Partners in 2018 and continued to seek out investment opportunities in recent years, including setting up a new venture in Dubai.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Global stocks surged to record highs on signs that Iran and the US may extend their ceasefire. UK monthly growth smashes expectations. Meanwhile, China's GDP also tops forecasts, signalling limited fallout from the Iran conflict. Plus, European chip makers rise after TSMC lifts its full-year outlook, pointing to strong AI chip demand despite geopolitical uncertainty. Good morning, everybody. Let's have a look at what's happening on these markets then. Here's a host of assets for you. Stocks Europe 600 trying its best to once again move through the tensions in the Middle East and think about earnings, think about tech in particular, up by 0.25%. S&P futures also a little bit stronger this morning. The French 10-year yield, we put this in here. PIMCO expressing a lot of interest in European bonds right now as we pivot from thinking about inflation to maybe thinking about growth. That was the BlackRock view a little earlier on. And Brent crude still keeping that in focus under observation. 96.35 is where we trade, up 1.5%, not quite commanding the attention of the European markets as that has done in recent weeks, of course. So we see a higher oil price, but we don't see weaker stocks. We've got the UK market up by 0.25%. The CAC doing pretty well as we see some recovery after the sell-off yesterday of luxury. That market and the FTSE MIB both up by around 0.4%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse, everybody. I'm Anna Edwards, in for Francine Lacqua here in London. Now, Bloomberg understands that the US and Iran are considering a 2-week ceasefire extension to allow for more time to negotiate a peace deal. Mediators are said to be seeking fresh talks to overcome the issues preventing a longer-term agreement, including disruption to the Strait of Hormuz and Iran's nuclear program. This comes as President Trump says the leaders of Israel and Lebanon will speak tomorrow after the first high-level talks between the two countries in 3 decades. Let's bring in Bloomberg Horizon's anchor Jumana Versace, who's in Dubai, can bring us up to speed on all of these fronts. And what more do we know then about the potential of returning, Jumana, to the negotiating table?
Yeah, well, certainly there's a lot of chatter about the possibility of a second round of talks, but I should say that neither the time nor the venue had been set at this point in time. Caroline Leavitt, the White House press secretary, strongly indicated that she's optimistic that another round of talks will take place. If they do take place, they will likely happen in Islamabad. But she said also that the U.S. did not formally extend or ask for an extension of that ceasefire. And remember, the ceasefire is set to expire on April the 21st, at technically 22nd over here in the region. So the clock is ticking when it comes to the actual ceasefire. Now, in terms of the diplomatic channels, there has been a huge effort in the last 24 hours. The Pakistan chief of the army is in Tehran, visiting some of the key representatives of the Iranian delegation over there, and the Iranian state media reporting that a new message has been passed from Pakistan, from the U.S. to Iran, yet to hear a response from them. At the same time, the Pakistani Prime Minister is also doing a trip around the region. He was in Saudi Arabia yesterday. He's making his way to Qatar today. Will be heading on to Turkey. And then over here in the UAE, I will say it was quite notable yesterday that a call took place between the Vice President of the UAE and the Speaker of the Parliament of Iran. This is the first call that has taken place since the war started about 7 weeks ago. And of course, UAE received the lion's share of most of the attacks and the projectiles that came through from Iran. So another indication that perhaps things are moving towards the diplomatic angle. Now, one thing you need to be mindful of is there is no ceasefire as of yet in Lebanon. And once again, overnight, Iran has reiterated, the Iranian Speaker of the House, Mohammad Ghalibaf, put up a post saying that the Lebanon ceasefire is an important part of the discussions. And the view here is that there is a potential for the lack of ceasefire in Lebanon to derail the potential for the second round of talks. And equally, overnight, President Trump has now posted that the two leaders of Israel and Lebanon will be holding a call today that has not been confirmed yet by the Lebanon side. But it does tell you that there is an intention from the U.S. side to keep the channels separate, i.e. to continue the discussions between Iran and the U.S., but then also have parallel discussions between the Lebanese state and Israel about the potential for a ceasefire and perhaps a more broader peace agreement there. So something to bear in mind as we head into the weekend.
Jumana, thank you very much. Bloomberg Horizons anchor Jumana Bersetchi. Now, let's pivot to the Chinese growth story. China's economic growth rebounded more than expected in the first quarter of 2026, suggesting limited impact so far from the Iran war. Let's speak now with Bloomberg's Laura Davison, who's in Hong Kong and tracking the story for us. What stands out to you then, Laura, from the data out of China? How much resilience is there now in the economy? Quite the divergence between the domestic and the global story, perhaps.
Yeah, this 5% GDP growth is really a surprising number, was at the far upside of what the estimates were. But again, it continues to be the story of really strong exports, industrial growth, and manufacturing at the expense of weaker retail sales, weaker consumer spending. And this is a dynamic that is dogged China for some time now, and continues to be part of the trajectory, but clearly being able to buoyed by the manufacturing side. In particular of note on some concern are the unemployment rate, as well as that wage growth and consumer spending are at some of their lowest levels since the pandemic and some of those really COVID-0 lockdowns. However, there was lots of concern that China, being one of the most exposed in this Iran conflict, that is not showing up in the data yet. Though I'll note that this quarter only covered about 1 month of the war, 2 months of more normal times. So there's still a lot to be seen here, but for right now, China has proven to be resilient.
Laura, thank you very much. Bloomberg's Laura Davison in Hong Kong for us. Now, central bankers have indicated that they're in no hurry to raise rates. The Bank of England's Megan Green says relevant data will take a while to come through.
Unfortunately, we won't have definitive data on whether there are second round effects or not for months. And if we wait until we see it, then it will be too late. So for me, I'm looking at inflation expectations, certainly. I'm also looking at the pay settlements as they actually come in. But I'm looking at some forward-looking indicators as well. So we run a survey of businesses. We ask them all kinds of questions, but they talk about their year ahead price expectations and their year ahead wage expectations. And so that will be important too.
Meanwhile, Bloomberg understands that ECB policymakers are leaning toward keeping rates unchanged this month, delaying assessments of the war's impact. The Bundesbank President Joachim Nagel weighed in on the impact the Middle East conflict is having on monetary policy.
I would say we are somewhere in between our baseline scenario and our adverse scenario. Now we have to find out where it's going. It's going back to the baseline scenario. I'm very heavy person. But as I said, we should keep our flexibility.
European stocks are up this morning as investors focus on a flurry of earnings and signs that the US and Iran will extend a ceasefire by 2 weeks. So there's a lot to unpack, a lot to put together. Let's talk about where we are in the markets conversation. Claudia Pansari joins us, France CIO at UBS Wealth Management. Claudia, thanks very much for being with us. So we do see markets pretty risk on. There's an argument that maybe that's about AI and it's about earnings, but maybe it's also about the ceasefire. I mean, do you see an extension to the ceasefire as being a risk-on dynamic for markets? Is that how we should think about it? We haven't had confirmation that that's going to happen, but it is certainly possible. I guess it wouldn't be war, but it also would not be a reopening of the Strait of Hormuz. Help us understand how we should interpret these latest news lines.
Good morning, Anna. Thank you for having me this morning. I think we should probably interpret thinking the market and investors are looking forward. So we know that the time horizon of investment is always longer than few weeks. And for me, the market is already pricing that some negotiation will come to a positive end. I have to say that there is this discussion around conflict, but also in the meantime, the market is driven up essentially by AI stocks. Dispersion is still very high, so all the sector and companies which are still linked to conflict, higher energy price, are still under pressure, and we have seen some consumer name yesterday to be down quite a lot. So the dispersion is high. Only part of the market is repricing, and this repricing is also due to the earnings season, I think.
Do you expect there to be some sort of reckoning for the global economy on the effects of this, Claudia? I mean, we still don't know how long the Strait will be closed for. It's still not open. Some vessels trickling through, of course. Is there going to be a reckoning for the global economy? And if so, will that need to be priced into stocks?
Yeah, I think we haven't seen yet the impact of the rise in energy price in the economy. We just see this morning strong data out of China, strong data out of UK, and all the lead indicators, essentially even in US, are holding up quite well. So it takes time usually to have an impact on consumption, and usually have a time take times also on corporate earnings. But I think if we have this conflict to get to a negotiation in the coming, let's say, 2 weeks, we may probably have a reduced impact on the economy. We know we did some text and some scenario analysis a few weeks ago, and we realized that to have a big impact on the economy, on inflation, you need to have a rise in energy price for an extended period of time. An extended period of time is more than 6 months. If the energy price stay at current level for a few weeks, then the impact on the economy, even on the economies which are the more sensitive to the high energy price, will remain contained. So I think in that case, the market can continue to run on the positive side.
So if higher energy prices don't necessarily mean tighter monetary policy, Claudia, and we'll take on board the timescales you're talking about there, where does that leave you on European bond markets? We've heard from BlackRock this morning saying that the market is pricing in too many hikes. We've heard from PIMCO overnight saying that they like bond markets as we rethink inflation versus growth, perhaps. So what are you thinking about the European bond space?
Yeah, I think it's a good opportunity to re-enter the market for everyone or for every people which are not invested. I completely agree. Investor and within the future, we see too many rate hikes, not only on the ECB, even on our central bank, on the Bank of England, for instance. I think the ECB will make a pause. We'll continue to watch the inflation data. Market is expecting by the end of the year 2.5 rate hikes. We don't expect the ECB to move into 2026 and early 2027. So I think when you have like 50, 60 basis points of rate move and the translation of the yield curve on the upward side, you have opportunities. Opportunities, however, I think are more related to the short term of the yield curve, not the long term. The short term, I'm thinking about duration between 3 and 5, 6 years, no more. So clearly, the movement we had on the bond deal is a great opportunity for investors which are not exposed to fixed income yet.
You mentioned the positive data we had out of the UK this morning, Claudia, and you've also said that you think too many hikes are priced in for the BOE. So give me an update on your thinking there. The number on GDP for February was really much higher than expected, 0.5% versus an expectation of just 0.1% higher for the GDP rate. But of course, the market is entirely discounting this and ignoring it, really, because this is for February and so much changed in March.
Exactly. So I think our thinking is rather that the Bank of England will cut interest rate later this year. The market is repricing too many hikes. It's just focused on inflation. The gilt has been moving quite a lot, probably one of the markets which has moved the most in terms of yield change. I think there is still some pressure on the upside on inflation, and the Bank of England will make clear that the rate cuts are not coming very soon. But at the end of the day, the level of interest rate is still very high. And as you mentioned, we haven't seen yet the disruption coming from higher energy price. It's not only higher energy price because we only think about higher Brent, but the financial conditions have tightened quite a lot. When you look into the bond yield rise across sovereign, especially within Europe, the movement has been so hard and credit spread has been widening as well. So you have a sort of, multi-factor element which are tightening financial conditions, which will have an impact on consumption. So I think it's still too early to think that we will not have any disruption on the economy in the coming weeks or months.
OK, too early to think that. And investors are keen to move on to other themes, perhaps, Claudia, including AI and investment around tech. What is the best way to get exposure to the AI theme right now? Is it over in the United States with some of the businesses that are rolling out data centers, for example? Or is it in Asia? We had numbers out of TSMC. Is it the European space? Where do you see the opportunities?
I think the biggest opportunity are across the world. We are essentially more exposed to US and China to be exposed to AI. But the way we are exposed today is very different from the way we were exposed 2 years ago. 2 years ago, we were fully invested in IT, all the segment within IT, from semiconductor to communication services. Today, our exposure, I will say, is probably more specific. So we are not buying the overall indices, not buying the overall sector, but we are more selective. So the way we are looking to AI today is searching for companies which are invested, but companies which will see a monetization of the current investment. We also prefer companies which are still investing using cash rather than companies when issuing bonds and trying to fund the CapEx with debt. And within the global exposure to AI, semiconductor is still very present in our allocation.
Claudia, thank you very much. Thanks for your time. Claudia Pansari, the France CIO at UBS Wealth Management. 16 minutes past 9 here in London. Coming up on the programme, how debt markets have reacted to a series of shocks in recent years. We'll discuss the latest OECD report on global debt markets with its Director for Financial and Enterprise Affairs. That's next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. and rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back. This is The Pulse. I'm Anna Edwards, live in London. Now, the head of the IMF has warned that markets should be more cautious when it comes to the war in Iran. Kristalina Georgieva also told Bloomberg that the length of the war will determine the impact on the global economy.
Even if the war ends tomorrow, it would take quite some time for the recovery to kick in. Not only because of the infrastructure destruction. Tankers are slow-moving vessels. A tanker that leaves today would take 40 days to reach the Pacific Islands. So we have to keep in mind that the impact is already baked in.
Yeah, talking perhaps of physical and metaphorical tankers. Now, a new report from the OECD reveals global debt markets proved resilient in 2025, despite borrowing levels reaching record highs. So even as markets grapple with geopolitical tensions and trade disputes, the OECD's latest global debt report says the landscape is showing few signs of strain. To discuss, I'm joined now by Carmine De Noia, who's Director for Financial and Enterprise Affairs at the OECD. Carmine, nice to have you with us. So there's lots of news coming at markets all the time right now, Carmine. So do you see few signs of stress in a good way, or you see a few signs of stress that we need to worry about?
Well, thank you, Anna, for having us here. We just issued our global debt report. Actually, on the 1st of March, the new war just started, so we had also a stress test of our conclusion. I mean, obviously this situation is increasing. Market volatility is also is increasing. The risks and expectation of higher inflation. But I have to say, and this is the message of the report, and also I think we are testing now. Resilience is there. Structurally, I have to say last year volatility was reduced. Now this period is higher, but always less on financial markets than on energy prices. Also, liquidity is there. And governments are on and tapping the market even in these weeks. Without particular problems, okay, including UK, Italy. Italy was that week on the market. So, but it's true that we are seeing more and more what was already structured into 2025. So the fact that issuance is more on the short-term side, yes. This is due because high yields, already also allowed, government want to save in a sense money, so going short-term. Other things being equal, these may increase refinancing costs. Right, yes. So I want to ask you about some of these areas of vulnerability then in the global debt markets. And we'll start with that shorter maturity. I mean, how worried are you that governments, and to some extent corporates, but certainly governments, are increasingly tempted to issue at the short end rather than the long end? On the one side, it's true that we have long-term demand that for positive reasons have been reducing, for example, in many countries due to, pension reform, so there is less long-term demand. On the other side, other things being equal, if you go short-term, again, you may in the short-term, save some money. And, yields were so high that already we had the move from corporate. In the report, in Chapter 1 is sovereign, Chapter 2 is corporate. And the two markets are strictly linked. And many, investors, they went, typically you go to corporate to get higher yields, but the yields were so high on the sovereign that actually we had a lot of movements there. So, but with these high yields, high volatility, then is obviously you are tapping the market. You are a price taker from in a sense from the primary market point of view if you are the government. So in a sense you tap the market, you try to get quantity, but you have also to adapt to the condition. On your question, I think the second part is who is buying. And this is also another part of the report. This is chapter 3. So we have more and more price-sensitive investors buying both sovereign and corporate.
Because this is central banks are buying less, so others are buying more.
Yeah, this already started with monetary tightening, so they are buying less, they're even selling. So a central bank is keeping, sovereigns for monetary policy reasons, so until, maturity. So I would say it's less price sensitive with respect to what happens in the market. Others are more price sensitive. They're not bad. So we have a lot of leverage investors, asset managers, hedge funds. They give a lot of liquidity on the market. If you talk with public debt managers, they like it. But obviously they are more, I would say, volatile. The issue is that what you need on the market for having strong and consistent liquidity is try to tap the market with different class of investors. So it's important that they are there. Obviously, international tension may increase volatility and market movements. Markets are more integrated than what people think.
Okay. You've mentioned the corporates and the governments and the relationship between the two. I wonder how you're interpreting tight spreads right now.
Yeah.
Because the IMF had this interesting take yesterday talking about tight spreads not as an indication of strength from corporates, but of weakness from sovereigns. Is that something that you would that you've been reflecting on as well?
Yeah, I'm happy IMF is following our analysis. We published on the 4th of March, but it's also on date of last year. It's very interesting. Now, the spreads are reducing. On the I would say it's a mix of corporates going down and sovereign going up. But the corporates going down is, okay, corporates more or less were doing well, okay. But really, this is not exactly the reason. The reason is that on market microstructure, more and more bond market are more electronic, bid-ask are reducing. So these other things being equal going down, more liquidity, then more people go on the market, and so there is more liquidity and bid-ask is going down. And then again, it's the high yields of sovereign. So that's why spreads are reducing. And also, these also may go to the topic we analyze a lot of bond market more equity-like.
Okay, yes, indeed. And talking about corporates and where they're raising money, when people ask questions about whether the AI boom is a bit like 1999 and 2000, people point to the difference being, but that was all done on debt. Whereas now we're seeing big corporates use a lot of cash. Are you concerned that tech companies, the AI build-out might lead corporates into taking on more debt?
Anna, this is very important because, in the past, also in the recent past, I would say, AI companies typically were funding also their needs, through cash flows. It was easy also because big, revenues, profits, and so on. But now the order of magnitude of the investment that they need is huge. So already we saw last year what we call our 9 hyperscalers, the 7 US plus Alibaba and Tencent. They issued 122 billion of bonds, okay, which is half of the global tech supply last year. But they are all listed. They represent 12%, these 9 of global market cap, and we know the story. They are big. Market cap is big, but also their weight in all the indexes is MSCI and the others is big, and so passive investing ETF. Now, they forecast $4.1 trillion US dollars in capex in the next 5 years. Now there is no cash flow, no bank that can fund this. So we make some estimation. Even with, if you estimate that 50% will be funded by bonds, now this will represent basically 15% of the global issuance of all the markets. So this makes bond market similar to equity market. This is a feature, could be also change the dynamics in the market. Typically, you hedge the equity with the bond, but now they are more and more alike. Okay. So this is something that we should keep into account.
Certainly something we should keep in mind in 2026. Carmine De Noia, thank you very much. Thanks for joining us. Really good to speak to you, Director for Financial and Enterprise Affairs over at the OECD. Coming up on the programme, former Secretary of State John Kerry says the war with Iran could have been avoided. More on that interview next. This is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. Global stocks surged to record highs on signs that Iran and the US may extend their ceasefire. UK monthly growth smashes expectations. Meanwhile, over in China, GDP also tops forecasts, signalling limited fallout from the Iran conflict. Plus, European chip makers rise after TSMC lifts its full-year outlook, pointing to strong AI chip demand despite geopolitical uncertainty. Welcome back to the programme, everybody. Now, the former US Secretary of State John Kerry says the war with Iran could have been avoided. Speaking to Bloomberg, he reflected on the former deal that he helped broker during the Obama administration.
Well, obviously, it's not the picture that any of us wanted, point blank. It makes the world more dangerous. But it really underscores that the agreement that we had back in 2015, 2016, that agreement was the strongest nuclear agreement on the planet. It absolutely allowed us to see anything they were doing, any program, to have challenges, inspections, put back the sanctions. There were so many options, and ultimately even to bomb them. So rather than renegotiate that agreement, if President Trump came in and said, hey, I don't agree with this or that, they could have renegotiated. And we had moved the breakout time to more than a year. So you had this whole year where if we suspected, oh, they're doing something, we don't like it. And by the way, we didn't do trust but verify. We did don't trust but verify, which is why we had the most exhaustive inspection scheme you could possibly have. And every intelligence entity, China, Russia, Germany, France, Britain, the United States, our own intelligence said, we will know what they're doing. They can't break out. There is not a risk.
But is it realistic for, President Trump now to demand limits on Iran's ballistic missile program and support for proxies, or is it wishful thinking?
Well, it's legitimate to be concerned about the missile program and to decide we want to make that part of a negotiating process. But our decision under President Obama decided, look, if we make the missiles and Hezbollah and Houthi, all those issues are on the table, we're never going to get to the nuclear. Because one will become the pawn and trade to the other, and there wasn't any room for trade. So we pursued the nuclear precisely to take the nuclear potential weapon off the table completely. And then we did agree with them. We said, then we go to the missiles, we go to these other issues. I think for some of the demands of the president are just unfulfillable. They can't do it, and they won't do it for various reasons. And what's happened is a war that had been certainly postponed and probably avoided, most likely, was made inevitable almost when the president pulled out and we are where we are.
So what do you think happens now? And should the Iranians, can the Iranians actually trust the Trump administration, given they've been bombed twice since the negotiations started?
Well, again, I don't think either side is going to do something based on trust. There is no trust. It's not going to be there. You can't take the time to build it. You've got to make decisions now to deal with this crisis.
That was the former Secretary of State, John Kerry, speaking to Bloomberg's Francine Lacroix. So what does any of this mean for energy markets? Oil prices are steadying in an upward direction on signs that the US and Iran may extend a ceasefire and restart talks to end the war that's rocked energy markets. Bloomberg's EMEA News Director, Will Kennedy, is with us on set this morning to give us his thoughts. Will, good morning. What does this talk of a ceasefire, not confirmed, but that's what our reporting suggests, is being worked on, an extension, to the ceasefire. What does that mean for oil prices? We see them drift higher this morning.
Drift higher, but they're still well below $100, and they're well below the prices you would expect if the market still believed there was going to be a prolonged closure of the Strait of Hormuz. I think, to me, these prices suggest that the market expects the ceasefire to hold and for the situation in Hormuz to be resolved. These are futures prices. Look at what's going to happen in the future. It's worth pointing out that prices, physical prices, if you want oil right now, are much, much higher than this. And I think that most people you speak to in the oil markets would say that the risk of disruption remains until that strait is open. So the oil market, at least in the futures, seems to be pricing in that will get resolved.
Yeah, how much is that telling us the full story then, Will? I mean, we got this story quoting the boss of Diamondback Energy saying that the oil curve might be kind of lying about prices.
Yeah, I mean, that's one way of putting it. I think the oil curve is trying to balance expectations and how this might resolve itself. If there is a ceasefire agreement and Hormuz opens, then it's probably reasonable for the futures curve to price in lower oil prices. If it doesn't, then you'll see futures prices rise towards where the physical prices are today. Yeah. It's just a reflection of different possibilities at different stages of the future.
Out into the future. Will, thank you very much. Bloomberg's EMEA News Director, Will Kennedy. For a further look at global energy markets, let's bring in Lydia Rainforth, who's Head of European Energy and Energy Transition Research at Barclays. Lydia, really nice to speak to you, both on the subject of energy, traditional energy, and also the transition side and how much that is changing and thinking is changing. Let me start with the same sort of question I put to Will there. I mean, what's your expectation about where oil prices head? And do you share this view that the oil curve is sort of not telling the whole story?
Yeah, I think that's right. The physical market is really demanding much higher prices. And if we take a step back and look at previous crises that we've had, be it around Russia, Ukraine, prices spiked at that point, but we didn't actually lose any physical volumes. Equally with Liberation Day, the expectation was that prices would move much lower, and we never actually did. And so I think there's a reaction to go, let's just wait and see. But actually on physical markets, on what producers are actually getting paid today, and then what refiners are having to pay for physical barrels to get them delivered to their refineries, it's much, much higher. And we've lost over 10 million barrels a day of supply. These are big, big numbers.
So where is the physical market right now, Lydia? Because I saw at the weekend stories talking about $140. There's other things I've read say $120. I mean, at some time, the gap between just even the front end of the futures curve and the physical market, it has to close if we get some sort of clarity on how long the strait will be closed.
Yeah, that's exactly it. It does have to close. So you're seeing dated Brent trade about 120, 125 at the moment, but the companies are actually getting premiums over and above that. So you're seeing 40s, as an example, go at 145, close to 150, but that's actually what you're paying to get it onto the ship. To get it to your refinery can cost you $10 to $20 more than that. So you're seeing really extreme pricing coming through, but we're having to price demand destruction, because ultimately we've lost 10 million barrels a day of supply. That's what demand was down at the peak of COVID. So there's that sort of scale that I don't think the markets are pricing. And how quickly does it take us to get Hormuz flows back up and running? That's going to take a little while as well.
I mean, we heard some quite, startlingly negative language from Qatar over the last 24 hours. I mean, clearly that's an economy that relies very much on energy, and so you'd you'd expect them to be at the forefront of understanding what it does to their economy and be very negative about it. But clearly there's a sense in the Middle East that maybe the rest of the world is just not alive to the damage to the global economy that could be done here. Do you share that view from seeing what's happening in the energy market?
It's interesting that you're seeing at the moment the initial GDP data, the initial figures are coming out probably better than expected. But the reality is the physical prices don't hit you until April, May. So the markets were priced, what you were getting in March was what you'd already paid for in February when prices were lower. And I think the governments, in terms of the SPR release, the Strategic Petroleum releases, have done a great job in trying to manage supply to the market. But we are using up those inventories very, very quickly. And we're going to have to replace those inventories. And if we've lost the best part of 500 million barrels over the course of this, that's 3 years of more higher demand growth that we have to rebuild those.
OK, that's really interesting. So when we see the GDP data and other data for March, we shouldn't get too excited in thinking that that price is in war impact, because it might not necessarily. Let's pivot to thinking about energy transition, and the conversation here in the UK is perhaps helps to tell a bigger story. You hear both things at the same time. You hear, let's find more fossil fuels, and you also hear, let's speed up energy transition. How is this developing as a global narrative, do you think?
I think that's both, actually. So, again, you go back to that idea of, will the flows ever be the same? Can we rely on the Middle East, or do we actually need to do our own energy security more? Particularly if you're being the Asian countries, do they look at developing more of their own resources? Do they look at going further down renewables? Have we pivoted back to coal? And the same is going to be true for the UK. So it's going to be more energy security, more domestic resources, and I think you'll see more exploration rounds, more licensing rounds on the oil and gas side, particularly in Asia. In UK as well, I suspect you'll get that as well. But it's going to be, we need both. And I think that you will see a step up again in renewables as we try and go, what are the solutions to this long term?
What is the end game then, if we see a step up in the short term in both renewables and coal?
So it is probably less LNG through time. We've had two crises now where you've had the Russia-Ukraine crisis spiked gas prices. You've then had this crisis spiking gas prices and removing a really secure source of supply. Is that going to be something that when you're setting an economy up for where do I want my long-term power, where do I want my long-term energy from, can I trust LNG? So we may have taken down some of the growth forecasts on the gas side a little bit.
OK, that's interesting. So what about the impact of higher interest rates? I mean, we're worried about inflation. Interest rates rose in the initial period after the war started. Is that going to be something that dents appetite to doing investment in renewable energy or changes the pricing of it?
I think it's changing the pricing of it. So there was that wave immediately post-COVID when you still had very low interest rates where you could do a lot more. Now it is just costing you more, but that you've got to balance that cost versus what's the cost of your gas side and the cost of this sort of crisis. So it really is both. But the cost of energy being delivered to consumers, to being delivered to businesses, is going to be higher at the end of this than it was before.
And Lydia, what about the build-out of renewables in the Middle East, North Africa region? We've heard from the UAE, the Saudis, they're interested in solar, for example, and doing things with solar despite their, deliberately to try and diversify their energy sources and their economies. What's the prospect there?
We're still seeing a lot of investment there. And I think ultimately it was to allow more exports to come through. So the more that they can do domestically on replacing their own power generation. So Saudi still uses a lot of oil in its own power generation. If they can move that to solar, they can export more oil. And that's really why they were trying to transition the economy. And that doesn't change.
In the United States, of course, we've heard a lot about offshore wind. President Trump's very vocal in his dislike of offshore wind. What impact is that really having on the ground? Because sometimes the courts are moving in a different direction to the one that is indicated by the president.
You're seeing things stop, really. And we've seen TotalEnergies, as an example, pull out of their offshore wind contract. But they have then said, we will invest that same amount into the oil and gas industry. And the US does seem advantaged on the energy supply side. Natural gas prices are still only trading at $3 per unit compared to what we'd be over in Europe at 16, 17. So there's still a big gap that there's not as much demand for offshore wind in the US as we have in Europe.
Yeah. Back to where we started the conversation, Lydia. We've talked about, we've seen Asian governments take seriously the prospect of shortages. So not just higher prices, but shortages of energy product. In Europe, the conversation has been about helping people with the price and not so much around shortages, except maybe people asking questions about jet fuel. I mean, what are your expectations for Europe and shortages?
So jet fuel is the part that of the barrel that is most exposed at the moment, and you are seeing those warnings across the board. That the idea of we find through to the middle of May, but how do we get cargoes in from there? Diesel is the other area that is going to be tighter around that, but the governments have stocks to be able to manage this. And at some point you probably think, well, do you end up looking at introducing lower speed limits temporarily? Do you offer more advice to people as to how to save money on that side? I don't think we're in physical shortages at this point. Jet fuel is the one that we're more concerned about.
OK, yeah, interesting that the EasyJet CEO said this morning no concerns about jet fuel availability, but we'll certainly watch that with the percentage that comes from that Gulf region. Lydia, thank you very much for joining us. Lydia Rainforth, Head of Energy and Energy Transition Research over at Barclays. Now, emerging markets investing pioneer Mark Mobius has died at the age of 89. A partner at Mobius Investments says he passed away in Singapore. Mobius spent over 30 years with Franklin Templeton, championing opportunities in Africa, Asia, Eastern Europe and Latin America. He founded Mobius Capital Partners in 2018 and continued to seek out investing opportunities in recent years, including setting up a new venture in Dubai.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
We've opened this out to a number of organisations, including Microsoft, AWS, some financial institutions, a very small cohort. And essentially, Mythos has really showed us that there are a lot of very severe vulnerabilities right now. Mythos found vulnerabilities in every single operating system and in every single web browser. And so we wanted to build this small cohort first, to basically learn from what they found in a very contained and controlled manner. But you're right, our intention is definitely to expand this out in a very intentional way.
To be clear, it hasn't been expanded to UK financial institutions yet?
No, but I think that is in the very near term. Like in the next
weeks away?
In the next week.
In the next week?
In the next week, yeah.
OK, and these are top UK financial institutions?
Yeah, we've been, I mean, as you would expect, the engagement that I've had from CEOs in the last week in the UK has been significant. Customers firstly want to say that they appreciate our very thoughtful approach to the way in which we have released Mythos. But secondly, of course, they want to understand the opportunity to be considered to gain access to that model in a controlled way. And so we've been having a lot of conversations with CEOs about the reason why, firstly, we did Project Glasswing and the way that we thought about that intentionally. And then secondly, being very clear and to understand exactly why they want to get access to Mythos, and then working in partnership with those customers to think about the next kind of phase 2 and 3 and 4.
That was Pip White, head of EMEA North at Anthropic, speaking exclusively on Bloomberg's opening trade a little bit earlier on this morning. Let's get more on the concerns and the very careful rollout of Mythos, Anthropic's new AI model, of course. Today's Bloomberg Big Take story reveals how the company came to realise it had created a model that was too dangerous to be widely released. Bloomberg senior strategist Neil Campling is with us. Neil, this is a really fascinating deep dive. So take us into the timeline then of when Anthropic really fully understood what it is that they had built and how powerful it could be.
We could go back to late 2024, actually, with Opus 3 from Claude, Anthropic, where they found the sort of original problems around some of the risks of some of the Chinese hackers could get into some of these AI protocols. With Mythos, it is the most advanced AI in the world, as far as we know. And it appears, according to the Big Take this morning, that they found in late February, through their red team of 15, they call them ants, they're big developers, they're the super developers within the company, found that some lines of code even had that had been tested 5 million times. They found flaws in some of those systems. So this super powerful AI tool that they have here is basically not fit for public release.
Yeah.
It has to be tested, rigorously tested, before it can be
The
released.
line that stood out for me from the interview there with Pip over at Anthropic was that they found, using Mythos, they found problems with every single operating system that exists, which I thought was quite revealing, and hence the very careful rollout, releasing it to the defenders before it can get into the hands of the attackers. So where does that put us in terms of global tech security and what those who want to do bad things could use this tool for?
This is known as a technology paradox, where sort of bad actors can use a technology that's been designed for good that can be also powerful in the wrong hands. This is not a new thing, sort of specifically for Anthropic. We've seen this with every sort of tech advance over multiple years, decades, in fact. But what this clearly shows is that the risks and the flaws in something that is so powerful that it has taken mere days or even hours to find flaws that have gone undetected for as many as 40 years shows how powerful some of these tool sets are. So they have to be sort of very, very resilient before they get in the hands of many users.
OK, and in other tech news, we are following with great interest Elon Musk's attempts to start producing chips. And we have some really interesting news flow, sort of iterative progress on this story, but really interesting news flow that gives us a sense of how committed he still is to this project.
Very much so. The 1 terawatt of compute power he talks about with regards to this new fab is an incredible amount of compute power. What also we heard overnight is that the willingness to get this fab into fruition is that they are willing to pay over market prices for equipment, which is a major stumbling block, which even TSMC talked about this morning on their call. There's huge demand, obviously, for AI chips. That also requires, the leading edge equipment, and so Musk hasn't got necessarily the same same pricing power relative to some of the leading players, so he's going to have to overpay in order to kit out the fab.
OK, Neil, thank you very much. We'll watch that with interest. Neil Campling, senior strategist for Bloomberg News. And Neil was just talking there about the wider tech sector, and Bloomberg is hosting a live Q&A on Anthropic's Mythos. That takes place tomorrow. It is open to everyone to listen in. Terminal clients and digital subscribers have the opportunity to send questions for the team to answer in real time. That is tomorrow at 6:30 p.m. London time. And Neil was talking there about TSMC in passing, so let's go there to that story next. European chip stocks are rising this morning. That's as TSMC booked a 58% surge in profit, a sign that the Middle East war did not depress booming AI investment. It hasn't yet, at least. For more, let's speak to Charles Shum, Asia technology analyst at Bloomberg Intelligence, joins me on set this morning. Good morning to you, Charles. So what is your takeaway from these results? What did you make of them?
Honestly speaking, I think the TSMC just delivered a very exceptionally well result for the first quarter. Not just that it's the first quarter sales, the gross margin, operating margin, all above the upper level of the guidance, but also look at its second quarter guidance. Actually, it's also beat the consensus. The gross margin after the first quarter hit a record high of 66.5%. Actually, the management team indicated that could actually going as strong as the 67% in the second quarter. Actually, that's more than consensus expected. And also the sequential sales growth actually could be actually 10%, more than the 8% that consensus is expecting. So that's a very good result. But the only thing that we should look into is was a little bit worrying about is the smartphone chip demand. Actually, it's down 11% sequentially. That's a little bit actually worse than what the management said in the last quarter. They say that there's no impact from the memory chip price highs, but we see that actually the decline in the smartphone chips actually is more than we expected.
Okay, and it's interesting. That's the area of weakness. The area of AI is clearly the area of growth. So how concerned should we be about the prospect that the Middle East conflict, as it becomes more prolonged, if it does, and we're in a ceasefire right now, but still with the Strait of Hormuz closed, how is that going to affect chip demand?
Honestly speaking, at this point, I actually have less concern on this based on what the management just told us this morning. Actually, usually if there's any disruption on the gas or the power delivery, you will see that from the guidance. But as I just said, that they actually project a strong guidance in the second quarter. So that's a supply chain side. And on the demand side, yes, you can say that the prolonged conflict actually will have a broader macro impact, like the high inflation, weaker consumer sentiments, but these are all the short terms. But look at the fundamentals of the growth driver these days for TSMC is AI chips. It actually accounts for more than 60% of the sales in the first quarter. It's going to be bigger in the coming quarters. So that part actually definitely will overcome the softness in these smartphone chips.
Okay, that's interesting, because my last question was going to be, can TSMC maintain this momentum? From what you've said, the answer is yes, is it?
Yes, correct. In the short term, definitely yes. We will see that already, that from what the analysts are questioning about, people is actually worrying that TSMC whether can provide enough capacity to meet all the demand, not just the advanced NUC process, but also the CoWoS, the advanced packaging capacity. That part actually is fine. But in the longer term, actually, I would be a little bit worrying about. Also, I want to highlight that actually CCY also mentioned that they will probably revise the 2026 sales target in the coming earnings call briefing. So that's a very positive sign. But a little bit, there's something I still want to reflect here. It's about not about the demand, it's about the execution. TSMC right now is actually building 6 fabs in 3 continents. That requires a lot of talents, a lot of engineers. Yes. So how can they find that many talents? That's a big question mark in my mind.
Yeah, it's really interesting how some of the very real-world requirements of fab production, of data center production, are the things that might slow down the AI push rather than other dynamics. Thank you very much for joining us, Charles. Good to have you on the programme. Charles Shum, Asia Technology Analyst at Bloomberg Intelligence. European equity markets then overall pretty flat. The FTSE 100 is pretty flat. The CAC 40 goes a little higher, up by 0.3%, rebounding from some of the losses on luxury stocks yesterday, perhaps. It is the technology sector that is out front, and that has to do with that TSMC story we were just talking about. Food, beverage and tobacco, telecom and energy stocks are some of those that are in negative territory right now. I see the US futures are pointing a little higher, up 0.1% on E-minis, and NASDAQ futures up by 0.3%. We continue to monitor news out of the Middle East, of course, and also the latest AI developments. Up next, Bloomberg Brief. This is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news.
Geopolitical news.
Economic news.
Up-to-the-minute global news.
Whenever, and wherever.
Wherever
it happens.
In Washington.
Buenos Aires, Argentina.
Sintra, Portugal.
Ottawa, Canada.
Bangkok.
Tehran.
Jackson Hole, Wyoming.
Windsor Castle, England.
The Circuit de la Sarthe in Le Mans.
And this.
And this.
And this is Bloomberg.
What you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
Helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Listen carefully.
Good morning. It's 5:06 a.m. in New York City, 10:06 in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Taking a look at markets first, because we hit all new closing highs yesterday, finishing the cash session above 7,000 for the first time ever. S&P futures now up 0.1% to add more. NASDAQ futures gaining a third. Take a look at what's going on in treasuries right now. We don't see a lot of action there, to say the least. The two-year yield at 375 holding firm. The 10-year yield even less changed at 428.15, and the 30-year yield at 490. Brent is, as always, or as has been the case for the past 6 weeks, where the market is focused. We do see some slight gains, but NYMEX crude for May delivery still at $92.37 a barrel. Brent still at 96 and 30 cents a barrel. You see a slight creep higher in gold. For the individual stocks that we're watching, let's get out to London and Chloe Melee. Good morning, Chloe.
Good morning, Matt. The chip sector is in the green today after TSMC's very upbeat outlook, which really showed the resilience of this AI chip demand and those AI investments despite the macroeconomic fallout from the war in Iran. So that's helped to ease, at least for now, some of those concerns around the impact of higher energy costs on the AI sector. So we are up across the board there. Moving on to Hims & Hers, which is also moving higher this morning after the Health Secretary, RFK Jr., said that the FDA was looking to ease some restrictions around peptides. So peptides are increasingly popular. They help with things from muscle recovery to weight loss. And this is something that Hims & Hers can really capitalize on because they just acquired a new manufacturing facility that is dedicated to peptides in California. And so we're up almost 10% this morning. And finally, Voyager Technologies is also moving higher this morning because they signed quite a cool contract. They signed an order with NASA for the 7th private astronaut mission to the International Space Station. That's a mission that will happen at the earliest in 2028, and the prospect of that is really boosting those shares this morning. We're up more than 7% for that company.
Chloe, thanks very much. Chloe Melee joining us out of London with your single stock stories. Coming up this hour, more on the equity market with Robinhood CIO Stephanie Guild. We'll cover everything from energy to banks to tech with her. Right now, just taking a look at the broader market, stocks extending their highs as investors pile into equities on optimism over the ceasefire between the U.S. and Iran, along with corporate earnings. Joining us now is Bloomberg's Skylar Montgomery Koenig. Skylar, it's interesting to see that, you know, even with a war in the Middle East and oil that is still trading for more than $90 a barrel on both of the major contracts, we see record highs again on the equity indexes. Why is that?
Yeah, absolutely. And it's really interesting because the market is very much banking on this idea that a ceasefire will eventually lead to a resolution, which will eventually lead to the Strait reopening. And in terms of how I'm thinking about it from a high level, it's really about timing the pain, right? So in the long term, the medium term, we need to be worried about the stagflationary impacts. I think the commodity curve in particular is still too optimistic about the decline that's expected in commodity prices. We certainly haven't priced this growth downgrade that we'll see, the inflation upgrade that we'll see. But right now, the near-term pain is this idea that if you're short, you're missing out on a very massive rally, or actually you're losing money on a massive rally. And if you're not allocated, there's that as well. And it really comes down to a timing issue where we'll have inflation surge before growth falters. And if you look at measures like CPI, that has risen quite substantially, but the only early indicators that we have are soft data. And what we've seen post-COVID is that soft data is very partisan. It's negatively correlated with inflation. And so it's been really inaccurate as a measure. And we're not going to see that growth falter until later down the line, especially because the starting point for a lot of these economies is very strong. And that's what we've seen in earnings season so far, with banks this week, for example, pointing to a resilient consumer.
So this is just, I mean, a lot of it is animal spirits, but a lot of it has to be expectations for continued strong growth in earnings. I mean, double-digit percentage gains in earnings again, and maybe even more than we saw last year, Skylar. Is that still expected?
Yeah, I mean, we have certain earnings expectations rise quite considerably. And on your point around kind of over-exuberance, I think this is something that maybe tests the market in the next week or two in terms of, we know that liquidity declines after tax day. We know that the pace of aggressive kind of buying that we've seen is very frothy, but there's still money on the sidelines that can be put to work, particularly, as you say, we're getting to earnings season and you've seen upgrades, which looks quite weird given what's happening from an economic perspective with regards to the war, but I don't think you see that impact really until second quarter earnings. And there also needs to be this differentiation within regions. So the U.S. as an energy exporter won't be hit as much as Europe will as an energy importer, as well as this kind of timing around the impact from right now. We'll see an impact on companies that are directly impacted from higher energy prices. So the energy sector will benefit. Travel and airlines will be hit by higher input costs, but we haven't had enough time to see a greater demand destruction that will impact aggregate earnings, which you need to look further out for.
All right, Skylar, thanks so much for joining us. Bloomberg's Skylar Montgomery Koenig there on the MLive team. You can get her work and the work of her colleagues by typing MLIV Go on the Bloomberg terminal. One of the things that you'll see there is an upbeat forecast from TSMC, adding fuel to tech share rallies after expecting revenue growth of, saying it expects revenue growth of more than 30% this year. It had previously expected less than that. Joining us now is Bloomberg's Neil Campling. And Neil, you got to help me out here as you covered this on a daily basis. I feel like TSMC comes out with quarterly earnings every week. What's going on with this company?
Yeah, we had, so being a Taiwanese company, they come out with monthly sales data. So we had the monthly sales data for March just 2 weeks ago, and now we've got the full quarterly results, which show huge gross margins, huge profit growth. They're raising the guidance for the year as well on the sales line to be more than 30%. So it's incremental information with every single upgrade. But you've just been talking about earnings and earnings growth. As the market has reached an all-time high in the S&P, what hasn't reached an all-time high is the actual multiple applied to earnings of the S&P, and even more so in the NASDAQ 100, the tech-heavy NASDAQ. So there's big earnings growth coming through, driven obviously by the AI narrative. So TSMC, alongside NVIDIA and ASML, is one of the key enablers of the entire AI ecosystem. This is yet another great point that we've got super normal growth coming through in this market. There's very few mega cap companies that can deliver 30% plus growth on an ongoing basis. But TSM and NVIDIA are companies that can certainly do that from here.
Yeah, and TSM also saying, I think it's capital expenditures are going to be like $56 billion, which would be a number that's simply unbelievable if we hadn't seen the hyperscalers spending plans, Elon Musk's spending plans. Speaking of, Musk has reached out to Applied Materials, to Tokyo Electron, to Lam Research, to, I guess, tell them to hurry up in terms of his Terafab plan. What do we know about that massive factory?
I think there's two things that stand out for me in this great exclusive overnight. One is the size of the sheer compute power of this potential fab, which is, in terms of a terawatt of compute power, just phenomenal numbers. And the second thing is that Musk is saying he's prepared to pay over market price to kit out the fab quickly. It's telling you that chip equipment is in short supply, and he's going to have to pay over market prices in order to accelerate the expansion of that particular fab. And of course, whatever they're doing, the same thing is happening at TSMC and the other companies are all racing to build out the infrastructure and the chips that are needed to power the incredible compute power of the AI ecosystem.
Neil, great to spend some time with you this morning again. Thanks so much for your coverage. Neil Campling covers the tech stocks for us out of London. Let's get to some of the other top stories trending on your terminal this morning. At least 2 Iran-linked ships that have been sanctioned by the U.S. made it through the Strait of Hormuz and into the Persian Gulf. The path shows a possible new route from the UAE in the face of the U.S. blockade. Ship owners, energy traders, investors all closely monitoring transits through the strait for indications of how U.S. and Iran are exercising control over one of the world's busiest shipping corridors. The CFTC is investigating a series of suspiciously well-timed trades in the oil futures market ahead of Trump policy pivots related to the Iran war. The agency is specifically looking into 2 instances over a period of 2 weeks where trading volumes on platforms belonging to the CME Group and Intercontinental Exchange surged shortly before major announcements. And Novo Nordisk has hired around 2,000 people this year in a move that reshapes its workforce after laying off about 10% of its staff last year. The Wegovy drug maker is looking to make the organization faster and more aggressive after losing its lead in the obesity market to U.S. rival Eli Lilly. Coming up, a federal jury rules that Live Nation illegally monopolized the events industry. More on that next. This is Bloomberg.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller, New York City. A federal judge has ruled that Live Nation has illegally monopolized the events industry, opening up a possible breakup of America's largest and sometimes seemingly only ticket seller. A coalition of 33 states is seeking as much as $700 million in damages, with Live Nation issuing a statement this morning contesting the verdict. For more, Kate Ackley from Bloomberg Government joins us now from Washington. And you know, to say that Live Nation is a monopoly, Kate, isn't something that most people in America would think is at all surprising. How are they contesting this ruling?
Well, they said they're going to appeal. So that means this could drag out for years, you know, in the legal fight already after this, you know, kind of bombshell verdict. There's still, you know, the idea of what would be the penalties. And this is really not over yet.
In terms of the pricing, I thought it was almost laughable that the jury found Live Nation overcharged customers by less than $2. Have you bought a ticket lately?
Right. You know, I don't remember the last time I bought a ticket, but yes, you're right. They said that this had resulted in an overcharge of $1.72 per ticket. Obviously, that adds up when you figure, you know, all the millions and millions of people buying their tickets via Ticketmaster. But, you know, this has really been a fascinating case to watch. There's obviously all the legal drama that has ensued. But in addition, there's been a lot of lobbying and influence going on, you know, over the years. During the Biden administration, when the Biden administration started looking at bringing this lawsuit, we saw a big ramp up in Live Nation's hiring of lobbyists here in Washington, D.C. And, you know, there's been a lot of talk about, you know, political influence, putting pressure on the Trump DOJ, which, as you know, did a settlement and so pulled out of this case. And then the 33 states and Washington, D.C. continued. So there's actually sort of an influence and lobbying campaign going on here as well. In addition to the legal case.
Right. I mean, it's hard to gain such incredible dominance in the market without spending that much money on lobbying. Kate Ackley in Washington, thanks so much for joining us. This is a story we will no doubt continue to talk about. This is Bloomberg Brief.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Time now for your front page news. First up, on the Financial Times, Gulf states raising almost $10 billion in private sales of bonds this month. It's their first international borrowing spree since the Iran war hit their economies. The governments of Abu Dhabi, Qatar, and Kuwait did not respond to requests for comment. And finally, the Wall Street Journal leading with the Pentagon approaching automakers over American manufacturers boosting weapons production. As the wars in Ukraine and Iran deplete U.S. stocks, senior defense officials have held talks with several top executives, including General Motors and Ford, about whether they could shift to defense work. This is Bloomberg.
A cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talya ki kon akhmalep akhmata chuara panga akhmalep manchang lenya ay kon mamanya.
Una batalla a muerte.
Money can do a lot of good,
it can really transform people's lives, but it can also hurt them.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, 5:30 a.m. in New York, 10:30 in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for your trading day. Global stocks extend gains after hitting a record high, the S&P crossing the 7,000 mark and holding for the first time ever at the close. That rally gets a boost by TSMC's quarterly results. The chipmaker raises its outlook for the year, highlighting resilient AI demand, and a federal jury rules that Live Nation illegally monopolized the events industry, something that we've all known, but people don't often, well, I guess everyone says that too. The company is preparing, though, for an appeal. Take a look at what's going on in markets in terms of futures. We still have gains set up, although slight on the S&P. The NASDAQ futures are up 1/3%. Small caps unchanged. Speaking of unchanged, Treasuries not doing much at all this morning. We'll show you the board anyway, but 375 on the 2-year, still 428 on the 10-year, and 490 on the 30-year. Feels like we've just been holding in that range forever. Brent crude rising a little bit, but still sticking at similar prices to what we saw yesterday. So 92 barrels and change for a barrel of West Texas Intermediate. Brent going for 96. Gold rising slightly to $4,811. For some of the individual stock stories that we're following for you this morning, let's get out to Chloe Melee. She's in London. Good morning, Chloe.
Good morning, Matt. Let's start with a positive day for the chip sector after TSMC raised its revenue outlook for 2026. And that really underscored the resilience of this AI demand, those AI investments, despite the macroeconomic fallout of the war in Iran. And so that's helping to ease some of those concerns around, higher energy costs potentially hitting demand for power-hungry data centers. And so we are seeing this TSMC read across into NVIDIA and Intel this morning. Moving on to Hims & Hers, which is moving also higher this morning after the Health Secretary RFK Jr. said the FDA was looking to ease restrictions and limits around peptides, around 12 different peptides. They are increasingly popular to help with things from weight loss to muscle recovery. And this is something that Hims & Hers can really capitalize on because they recently acquired last year a manufacturing facility in California that is dedicated to making those peptides. And so we are up about 6% this morning. And finally, let's end with another positive mover, and that is Voyager Technologies, which has signed a contract with NASA for the 7th private astronaut mission to the International Space Station. That's a mission that will happen at the earliest in 2028, and that's a prospect that is really boosting the shares in Voyager this morning. We are up almost 8%.
What are peptides? I thought peptides was something that you took if your stomach was upset, like Tums.
Yeah, but they are a sort of component, that you can use for different things like that for health, essentially. Some of them, some people are calling it a wellness fad, but
I didn't want to put you on. I don't want to put you on the spot, Chloe. You're not a pharmacist, obviously, and
I'm not a pharmacist.
I think the real answer is no one really knows. Chloe Melee there in London with a look at some of the single stock stories that we're following. Let's turn to the energy sector. Shares of major oil companies have gained more than 20% this year as the Iran war fuels crude prices higher. Joining us now is Bloomberg's Will Kennedy. And Will, we still see 90s prices in the 90s for WTI and Brent crude, but it looks like if you take a gander at CT on the Bloomberg terminal that those prices will come down relatively shortly. How does the futures curve look to you?
Well, the futures curve, I should say, Matt, is not a prediction of futures prices. It's just a measure of the value of oil in 1 month compared to future months. I do think what the current futures prices are telling us is that the market does expect some sort of resolution to the conflict in the Middle East. and some expectation that the Strait of Hormuz will reopen and the energy market globally can begin the long process of getting back to normal. If the strait were to remain closed, I think it's fair to say that most people say that futures prices should be higher than this. And as we've discussed before, Matt, if you look at the prices people are paying day to day for physical cargoes of crude oil, physical cargoes of jet fuel and diesel around the world, that suggests that actually there is quite a lot of pain and distress in physical oil markets right now. So the market is really bought into this idea that there are going to be more talks, that there's going to be some resolution to this conflict.
Has that, the spread come down, Will? I'm looking at dated Brent on my Bloomberg terminal. $116, $117 a barrel. That's only 20 more than Brent futures for June delivery right now, and I feel like it was more like 30 or 40 over the past couple of weeks.
Yeah, that's right. And you're going to see things happen in either direction. Either those physical dated prices are going to come down and converge on the futures prices, which is basically the value a couple of months from now, or it's going to go in the other direction. So you're starting to see that happen on expectations that we're reaching the end game. But it could all change very quickly, and it's worth people bearing in mind that we still have all these ships, many ships stuck inside the Persian Gulf, many ships unable to get in, and there are oil fields, oil refineries in the Middle East that have been shut down by this war and have not restarted yet.
All right, Will, great to get some time with you. Never enough. I could talk about oil all day long, and so could you. Bloomberg's Will Kennedy, you've been covering the oil markets for, I think it's fair to say, a couple of decades at least at Bloomberg. Joining us now is Stephanie Guild, CIO at Robinhood. And, you know, energy providers have been a major driver of rallies that we've seen here and benchmarks in Europe as well. But we see crude coming down to more livable prices. We've seen prices at the pump come down a few cents across the national average. Is that what's behind that drop in oil, this rally up over 7,000 on the S&P 500?
I think it's partially about it. I mean, whenever you have an expectation that costs can come down, maybe not right away, but over time, the market will look through it and then can turn their attention toward earnings, which is what they can now do. And earnings expectations did come up over the month of March, and it probably wasn't paid attention to very much. That being said, those earnings expectations increases were very concentrated. So, and you see it reflected in the market in that, like, some of those more niche tech companies have been the ones that have bounced the most.
Where are the gains? Because it feels like it should be, you know, big tech, AI, with all of the, you know, TSMC raising its forecast, all of the CapEx numbers that we see day in and day out, deals with Broadcom and Meta, like, over and over again. We still see the Mag 7. I don't know if we're still using that. That acronym, it's not an acronym, that term. We still see the Mag 7 unchanged year to date. I mean, it's come back a little bit, but it is still not quite gaining.
I just think there's a lot of CapEx there, and I think the growth is probably, like, if you think about the rotation and everyone talks about, like, the different trades within AI, it's been more in the, like, the optical space. Like, if you look at, like, a Marvell or Coherent, Lumentum, like, those have been flying.
Yeah.
I mean, even before this conflict looked like it could be ending, those have continued to rally. And in the last couple of days, you've seen some of the Mag 7 go up, but not equally so. And that's why I actually don't believe in calling them the Mag 7. I think you just have to look at each individual one. So, like, you know, a couple of them were up yesterday, but Amazon was not.
Mag 7, I guess, is kind of passe at this point. You know what's insane? Allbirds at one point was up 876% yesterday. It closed up 600% to $16.99. This shoemaker, which had lost 95% of its value,
business was done,
decided it's going to make the pivot to a neo cloud provider, essentially. It's going to take $50 million, and that buys you like 5 chips from NVIDIA. Why do investors fall for this hook, line, and sinker?
I mean, I think it ends up just being like a very short-term trade. Like, oh, that looks cool, and we've seen this before. Like, did you? Talking about, there were other ones I remember. I think I remember like a bakery company doing the same thing. But it does make me nervous because it tends to feel like it's the start of like bubble signs.
Yeah.
And then if you have a lot of IPOs, like there's a couple of signs that are starting to flash yellow, not red yet, because I do think there's real growth in some things. But yeah, I mean, that kind of stuff, like, hopefully you get out.
It is maybe a sign of a little bit of froth. I want to take a look at the relative rotation graph I was showing you in the commercial break, and it's a fun function on the Bloomberg. I'm just looking at a 12-week snapshot of the S&P 500 divided by industry groups, broken down into the 11 GICS sectors. Now, if you switch from ticker to name, it's a little bit easier. Guys, Joe in the control room, just up in the upper right-hand corner on the drop-down menu, change it from ticker to name, and then you can see better. Energy, obviously, right up in the top there of the leading corner of the matrix. Consumer staples, utilities, real estate, industrials, all done well. Communication services, healthcare, not as well. But tech and financials especially are in the lagging sector.
Yeah.
What's wrong with financials this year?
Well, I think you've had probably a couple things. One is that one of the bets that we had last year in Robinhood Strategies was that you would have this curve that was helpful to banks, and you would see a lot of like deregulation and maybe M&A activity in the regionals. And there's been other things that have happened, but that hasn't necessarily come true. And I do think, the private credit issues probably are weighing on sentiment in the financials. And the curve hasn't looked as interesting, I think, as it maybe looked like the Fed could be cutting rates and kind of making it more steep. And I just think there's also just been like more interesting things to invest in. Financials had a big rally last year, and I just think it's time for, some other sectors to look to grow faster.
All right, Stephanie, great spending some time with you. And appreciate you coming to the studio so early in the morning. Stephanie Guild, the Chief Investment Officer over at Robinhood. Let's get to some of the other top stories trending on the terminal this morning. A federal jury ruled that Live Nation illegally monopolized the live events industry and overcharged fans for tickets. The landmark antitrust decision was a major win for 33 states and Washington, D.C. The states are seeking as much as $700 million in damages and additional penalties. The ruling sets the stage for a possible breakup of Live Nation and Ticketmaster. But in the meantime, Live Nation is going to appeal and try getting tickets somewhere else. Like, you can't. New Jersey Transit is expected to announce a $100 plus ticket for riders going to MetLife Stadium for the FIFA World Cup this summer. The ticket would take fans from New York's Penn Station to MetLife, and the fare is designed to make sure that everyday commuters don't have to bear the expense of the $48 million it's going to cost to run service to the 8 matches at MetLife Stadium. New York City doormen and other staff voted to authorize a strike, moving closer to a potential April 21st walkout. The move came after New York City Governor Zohran Mamdani held a rally supporting the workers. The walkout would disrupt operations at 3,500 co-ops, condos, and apartments. The doormen are seeking better pay, health care coverage, and pension funds in negotiations with an advisory board to property owners. Coming up, the resilience of the AI chip demand persists. A closer look at TSMC's outlook boost. Next, this is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, I'll still be driving something.
Yeah. Probably very fast.
Yeah. This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. TSMC, it's raising its 2026 sales outlook. The CEO, C.C. Wei, saying, quote, AI-related demand continues to be extremely robust. Bloomberg's Neil Campling is back with us to talk about this. And as I said before, you know, it seems like they're raising their forecast or putting out numbers that no one thought they could last month every week. I guess this business is going gangbusters, but at that point, really, 30% doesn't sound like a terribly high amount to me.
Wow, Matt, I'm not sure what you're expecting, but I thought 30% was a pretty big number. The question is, I suppose, is that from here, there's every likelihood, given they only gave sort of the full-year guidance in January, that we could well actually end up maybe with a 4 handle at 40% by the end of the year. There's no sign of any slowdown in terms of margins, numbers, demand. I mean, all of the metrics that are there. We've seen Taiwanese export growth, which is very tech-heavy, continuing to ratchet higher. So I think that you know, there are high expectations, but they managed to meet those. And clearly, with demand being so strong, the focus will be on you know, likelihood of upside surprise going forward, because there's no sign of the hyperscalers obviously reducing any capex. So all of the sort of the earnings multiples, the growth rates are all very supportive to the AI narrative and to tech to continue the multi-year leadership that's enjoyed in the market, I think.
All right, an upside surprise that we're all expecting. Today's big take focuses on Anthropic's Mythos model. Very cool story, how potentially dangerous this model is. The U.S. government and other organizations are taking it seriously. Bloomberg spoke exclusively with Anthropic's EMEA North head Pip White.
We've opened this out to a number of organizations, including Microsoft, AWS, some financial institutions, a very small cohort. And essentially, Mythos has really showed us that there are a lot of very severe vulnerabilities right now. Mythos found vulnerabilities in every single operating system and in every single web browser.
All right, we won't get into EMEA North versus South, like they could just have a different region name. But in terms of Mythos, and maybe it can help them figure that out, what do we know? This isn't, I guess, just a publicity stunt.
Yeah, I mean, it's interesting you mentioned that, because there's talk of them raising money at $800 billion valuation. The one line that I took as really interesting from some of the interviews and the big take that we have out overnight, fascinating story, is that a code that had been tested 5 million times and never detected any kind of error in that coding was found by the new Anthropic AI to have faults in it. So we have never seen the power of these AI models that we are seeing from Anthropic today. So clearly this is why these tools are not being released yet in the public domain, but to a very select set of users with the high-tech industries. But to find flaws in every single operating system is quite phenomenal when there's been testing on these platforms for decades, and Anthropic's found flaws within days, hours even, of releasing the latest models.
I feel like, you know, they could just be Europe and then Middle East and Africa. Like, that's EMEA North, right, is Europe. And then Middle East and Africa is EMEA South. Like, why not just... All right, Neil, thanks so much for joining us this morning. Neil Camplin covers tech out of London. You can read, by the way, today's big take on the dangers of Anthropic on your terminal. You can subscribe to the big take. Obviously, these are deeply reported, fascinating stories, and I highly recommend them. Let's turn back to earnings because PepsiCo is set to report before the bell, with analysts expecting the firm's international strength to have driven performance in the first quarter. Jennifer Creary, Bloomberg Global Business reporter, joins us now. So what exactly does that mean? I mean, internationally, more people are buying the drinks. Is it about the snacks? What's doing well at Pepsi?
Yeah, well, I think it's interesting that analysts are highlighting that much of that growth will come internationally. I think that speaks to probably weakness in the US consumer at the moment. Now, the headline figure that analysts are pointing to is operating profits. Now, the analyst estimate comes at $2.9 billion. That'd be an improvement from the previous quarter, but still, again, much of that growth coming from overseas. Now, one key element that I think is worth honing in on is price cuts. PepsiCo in February, management said that they would be cutting the price of its products by as much as 15% for some of its key chips like Lay's and Doritos, while keeping the size of those products the same. So investors will be looking at what does that mean for market share, what does that mean for sales, and crucially returns. So those are the things that people will be looking for today.
You know, there is kind of a health shift going on, obviously, with GLP-1 drugs, Jennifer, becoming more and more ubiquitous. How has PepsiCo changed its offering to serve customers that no longer want to eat like a whole bag of chips in one setting or drink these super sugary beverages?
Yeah, exactly. I mean, you know, protein was the previous craze. Now it's fiber. PepsiCo is trying to cater to consumers wanting functional beverages, so essentially beverages that will provide more than just hydration. They want a little bit more from their products. I think what's different from what differs, you know, PepsiCo from, say, its competitor like Coca-Cola is that PepsiCo is a lot more diversified. It's not just drinks in their portfolio. They've also got snacks, and so they're having to cater to a much broader consumer base. So that's one of the difficulties facing PepsiCo.
All right, Jennifer, appreciate you joining us. Look forward to the earnings from PepsiCo later on. Bloomberg's Jennifer Creary covers global business for us. Coming up, we're going to get you set up for the trading day after a new record high on the S&P at the close yesterday. Futures are pointing to more gains. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. Let's take a look at what's ahead today. First up, PepsiCo, as we were just telling you, reporting before the bell, and then the big earnings after the close is Netflix. In terms of economic data, we get U.S. initial jobless claims. It is Thursday at 8:30 a.m. Eastern. There's Fed speak throughout the day. We get Williams and Myron. We'll bring you headlines as they cross. And then in terms of the individual movers, we told you TSMC boosting its outlook. That could help AI or tech stocks across the board. Hims and Hers Health extending gains as Health Secretary RFK Jr. seeks to loosen peptide regulations. Voyager Technologies higher as NASA awards the firm for the 7th private astronaut mission to the International Space Station. So those are some of the movers that we're watching for you. In terms of the broader markets, we closed up over 7,000 for the first time ever on the S&P 500. And part of that, driving that, was lower crude prices. Okay, you see green arrows. They're coming up a bit, but 96 for Brent, 92 for crude. Feels pretty good for a situation where, well, there's still a war going on in the Middle East, although we're in a ceasefire. That's it for Bloomberg Brief. Bloomberg Surveillance is up next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country.
We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
U.S. exceptionalism is not going away.
There is an awful amount of good news already priced in.
Investors have been very cautious about missing this.
The earnings power are there. Estimates for cyclical earnings are most likely too high.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from the nation's capital this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday at fresh records, investors piling into equities, sending the S&P 500 to all-time highs. As TSMC's positive outlook is reinforcing confidence in AI chip demand, and the US and Iran considering a 2-week ceasefire extension. Stocks holding steady, Bramo, so far this morning.
Yeah, and frankly, the rally that we have seen is just tremendous. Bespoke Investment Group came out with a statistic that I thought was absolutely fantastic. Since 1928, this is the first time that the S&P 500 has made a new all-time high in 11 days or fewer after falling 5 to 10%. Just to give you a sense of how big this rally has been and how broad-based, it is not the Magnificent Seven. This is everything. The Russell 2000 is 0.2% away from an all-time high.
It has been absolutely phenomenal. We've talked about it repeatedly over the last week or so. The market reset, a 10% move off the lows for the equity market, a 20% move off the highs for the oil market. There's a feeling this is like April 2020. April 2025, where this market just moves on and looks through the risk and looks through everything on the horizon very quickly.
Well, that's what it's doing right now, because the market is basically pricing in that this war is over, even though yesterday Caroline Leavitt, the press secretary, says they haven't formally requested an extension of the ceasefire. She says this White House remains very much engaged with the mediators. Everyone is expecting that this ceasefire is going to go past the deadline of April 22nd. And at the same time, Reuters is reporting that the Iranians are coming to the table, but potentially saying some vessels can pass through the side of the Strait of Hormuz that goes out to Oman. So maybe on the horizon, we could see more oil flows.
Look at what we've heard from the companies so far. ASML out of Europe, raising its outlook. TSMC, Taiwan Semi, doing something very similar. Bramo, do you see this as confidence in the tech trade or comfort with the risk in the Middle East? Is it one or the other or both?
It seems like it's confidence that economic momentum can continue even though we have the Middle East situation where it is. And it is predicated on the tech trade, on this investment that is existential, that is ongoing regardless of what happens in the Middle East. But it's not just the tech trade. And I think that that's important. And what we heard from the banks is that consumers are resilient in the United States. People want to spend. It feels like as soon as you get the albatross off the neck of the economy that is the uncertainty in the Middle East, even if you just tamp down that uncertainty, you could get a rally. And that is what you're seeing.
Nice to be in Washington to cover the IMF World Bank spring meetings. Hardly talking about it because we're all focused on something else, somewhere else. I just wonder how consumed they are by the physical reality on the ground and how the tension continues to build between the conversations we're having about a better future and the reality in the physical markets in oil. Every time we bring this up, it just feels like doom and gloom. And it feels like we're divorced from what everyone else is talking about. But the reality is we've still got rationing in Asia. There's still the risk that we're going to see the same thing happen in Europe in the next few weeks if we don't reopen the Strait of Hormuz and get that energy flowing once again. And every time we talk about the extension of a 2-week ceasefire and those kind of things, I have one question, and only one question. Does that 2-week extension involve reopening the Strait of Hormuz or not? Because that seems to be the most important thing still this morning.
You have a blockade from the United States, and then you have Iran saying we're not going to let anything through. So it's a double blockade right now, even though you are seeing on the margins some ships start to enter the Persian Gulf, which is a good sign. You're right. And at the IMF meetings, people are coming out and warning about the gloom and doom. You guys are divorced from reality because the reality looks really concerning. And at the same time, people are saying, you're just that nerdy kid in the corner looking at the data. Stop it already. We're looking at how good things are. You guys always worry about stuff. We're moving on. And that dissonance can be felt that much more profoundly this week here.
All-time highs on the S&P 500 and the NASDAQ futures so far this morning, up 0.1%. Coming up this hour, we'll catch up with Max Kettner of HSBC, with stocks rallying to all-time highs. We'll speak to General Karen Gibson of Academy Securities on a fragile ceasefire, and the IMF Director of Capital Markets, Tobias Adrian, on risk to financial stability. We begin this hour with stocks extending gains after posting fresh record highs. Max Kettner of HSBC writing, what matters more than geopolitics is what's driving the global earnings outlook. The big question is whether US exceptionalism will make a proper comeback. Max joins us now for more. Max, you've been max overweight for quite a while. We were talking about it at the top of the program here. Do you see this as comfort with the risk in the Middle East or renewed confidence in the US tech trade?
I think it's probably more the latter. In fact, I think I would argue, does the Iran war really matter that much to the global earnings outlook, particularly to the earnings outlook of the S&P? Bear in mind, when you look at the S&P, you look at US large caps, it's not like consumer cyclicals are 30, 40%. Absolutely not, right? Actually, you look at consumer discretionary, strip out Amazon and Tesla, you're talking about sort of 4.5% of the S&P. And even there, when you link within those, you look at the proper consumer cyclicals, you're talking something like 2 to 3% of the S&P. So even if, let's say, the lower end of the K of the slightly weaker households in terms of household health and financial health, if they are hurt the least, does it really matter for S&P earnings? I would argue no, because you look at tech, you look at the tech sector, you look at the AI sectors. Actually, when you look take an AI together, that nowadays accounts for almost 50% of market cap. So to me, I don't think what we've seen in the last 11 trading sessions is the irrational reaction. I think actually what was irrational was the really sort of the 20% derating and compression that we've seen in S&P multiples at the beginning of the war.
Max, 2 points you made. S&P earnings, S&P multiples. Is the same true of the international backdrop, the global earnings story, the European equity story?
I think on the European earnings story is probably slightly more nuanced. When you look at stuff like chemicals, stuff like autos, they are going to be probably more affected. So I think where we're in right now, we're probably in the sort of global relief rally, not just because of US-Iran, but also because of things like interest rate volatility that have basically more than doubled, right, during March. That's now really, really come down quite a lot, and that helps pretty much everything. Now, when interest rate vol comes down, what helps that the most? That helps really the laggards from March. So what you want to do right now is basically flip the performance picture of March. So my advice to investors is very simple. You just download a performance picture across sectors, across regions, across asset classes in March, and you just flip it, all right? You buy the stuff that didn't work in March, you sell the stuff that did work and protected you. I think in a second stage, the second trade, probably in a couple of weeks or a couple of months, that is probably then more going towards, okay, what's actually changed on the fundamental backdrop? A little bit like with Russia-Ukraine, where on a relative basis, then we're probably talking about, right, the AI outlook, the tech outlook is still strong. So probably then it's worth rotating from Europe to the US, but not right now. Right now, you're still playing that V-shaped recovery trade.
And how much, Max, is this really predicated on the idea that big tech suddenly is once again a haven trade after kind of being kicked around for a couple of months? Are we seeing anything fundamentally different now, given the pressures from higher commodity prices that will pressure certain consumers in some regions more than in others?
Yeah, look, I think I'm not disputing that it will hurt certain consumers, but at the end of the day, our job as analysts, our job as portfolio managers is to look at the aggregate number. We've got to look at the aggregate PCE or retail sales number. What's that driven by? That's not driven by the lowest 20%, right? This is a very cynical thing to say. The lower end of the K that's been struggling already since COVID, that's been struggling even more with, stuff like food prices going up even more than core and headline CPI. They've been really struggling even more. They're now going to struggle even more. Now, from our perspective, does that matter for the PCE or for their headline retail sales numbers? No, they are not the main contributors to that. So therefore, that's why I'm saying, you know what, actually on the headline numbers, there's probably not going to be that awful much of change. And on the tech side of things, I think one thing has fundamentally changed in the last 2 quarters. Pretty much since November, since the Q3 reporting season, we've kind of given up on the AI earnings outlook, right? That was the first time where markets have actually not rewarded, but actually punished higher AI capex. The result of that was flat prices of AI, of hyperscalers, but earnings going through the roof still. And now, relative tech valuations, if you look at S&P Tech versus X-Tech or Max 7 valuations, you're close to 10-year lows. So that tech premium has almost entirely vanished. That really puts tech and US on a bit of a longer-term perspective, on a really, I would argue, even cheap foundation now.
Max, I feel like you should change your name from Max Kettner to Max Bullish, because you've been Max Bullish for quite a while, with one huge caveat, which is what the yield backdrop ends up looking like. That could be the fly in the ointment if you see that danger level, particularly with the 10-year yield. There's a lot of uncertainty around the Fed. The poly market trading betting odds now have the chances of Fed Chair Jay Powell leaving the board by May 30th at only 31%. I mean, how much do you see this as a real risk versus just some sort of theoretical risk out there, given the fact that a lot of inflationary metrics have been relatively under control?
Yeah, just to be clear, so we've not been sort of max bullish on equities for a year, and we don't see any risks at all. It was just more in mid-March that we saw, right, probably there's been enough happening now, and we're probably pretty close to particularly systematic positioning, very clean, which is still the case. And that has driven us to that max bullish stance. Am I still going to be that in 3 to 6 months' time? I think that's very questionable, because what you've been asking, I think that is not a theoretical risk. That is a real risk. Because at the end of the day, look, US earnings outlook is really strong. At the end of the day, actually Q1 reporting season, ahead of that, we've now seen the highest negative to positive pre-announcement ratio from US corporates. US corporates are telling us ahead of the Q1 reporting season, things are not only fine, they're even better than they themselves have expected by the most in 5 years. And that really, I think that is something that brings perhaps the danger back, that things are not going sort of Goldilocks, not too hot, not too cold, but then in a couple of months with sort of sticky inflation and with perhaps the unemployment rate going down even further because of that very low break-even payroll, and a really solid and accelerating earnings backdrop, that suddenly things are just too good. So I wouldn't pin it on Kevin Walsh. I would simply put it on the data, perhaps in a couple of months, just looking too hot. And therefore, the terminal rate may be having to move more towards 4%. And that, of course, would put pressure across all the asset classes, with the dollar the only safe haven again.
Well, Max, in that situation, could U.S. exceptionalism make a proper comeback? You say that's your third stage in your note.
I think that is then the case. Yeah, I absolutely think that's the case, because right now, what is U.S. exceptionalism, right? It is inflation is sort of sticky, and actually growth is kind of fine and is accelerating. As particularly the superior profitability, right, against the rest of the world. Now, when you look at something like price to book ratios of the U.S. against the rest of the world, and you compare that to the return on equity on a relative basis between the US and the rest of the world, what you will see is that the compression, that relative compression, was way more, significantly more than is justified what's been happening on the relative profitability side. So I do think people have really overreacted to some sort of AI funding concern since Q4 last year. And I think that is then when we realize, you know what, maybe the US is, as stupid as that sounds, is even too cheap, given that superior profitability outlook. At some stage, I think given that sticky inflation backdrop, given that the top-down growth side also is more than fine, I think in a couple of months, we're talking probably about a bit more of a challenging rate outlook there.
Hey, Max, it's good to hear from you. It's good to see you. Max Kettner there of HSBC on the latest outlook. That's the bull case. Give him some credit. He's been bullish throughout this whole war. Give some credit as well to Venu Krishna over at Barclays, who raised his outlook, his price target on the S&P 500 in the middle of the war, with crude at triple digits. And it's been so difficult to explain to people, maybe outside of financial markets and not following this every other day, that at the same time this war has been building, and this ceasefire, before it even took place, and the Strait of Hormuz remained closed, we had earnings expectations getting better, not worse. Not the same, but getting better, not worse.
We all were just slightly skeptical when Vinu Krishna came in, I will just say, when he raised his forecast. And at the same time, it seems like the rest of the market is catching up to him because ultimately companies keep coming out and keep beating expectations.
Equity futures this morning positive by about 0.1% on the S&P 500. With an update on stories elsewhere this morning, with your Bloomberg Brief, Isabel Lee has more. Morning, Isabel.
Morning, John. At least 2 U.S.-sanctioned Iran-linked ships traveling through the Strait of Hormuz and into the Persian Gulf. The ships may have taken a new route from the UAE, passing between 2 Iranian islands as the U.S. blockade of the strait enters its 4th day. Talks are scheduled today between Israel and Lebanon. According to an Israeli official, the country's prime minister and the president of Lebanon will speak following ambassador-level talks in the U.S. earlier this week. Those were the first discussions between the two countries in more than 30 years. And the Trump administration looking to have U.S. car manufacturers play a larger role in making weapons. The Wall Street Journal reporting the Pentagon approached top executives at GM and Ford about producing military supplies. The talks come as U.S. officials grow more concerned about domestic manufacturing capacity. That's your Bloomberg Brief. John?
Isabel, thank you. Thank you for the update. Up next on the program, a looming ceasefire deadline.
I saw some reporting, again, bad reporting this morning, that we had formally requested an extension of the ceasefire. That is not true at this moment. We've remained very much engaged in these negotiations. These conversations are productive and ongoing.
Up next, we'll catch up with General Karen Gibson of Academy Securities. Live from Washington, D.C. this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
11-day winning run on the Nasdaq 100. What a rally we've seen for U.S. tech stocks and for the whole global equity market, bouncing back from the lows of the last few weeks or so. On the Nasdaq, an 11-day winning run, the longest since December 2019. Futures this morning up again by 0.1% on the S&P 500. On the Nasdaq, up by 0.3. Lisa, on the Russell, we're up by 0.1.
Yeah, really, to me, the Russell 2000 continuing to keep pace with the S&P 500 indicates that people don't just believe this is a tech story, even though it is going to be fueled by AI investment. It is a broad-based beating expectations across the board with a consumer that's resilient, and that is the story that people are clinging to.
So we turn to crude. We've moved on. I still check it first thing every single morning. I'm not sure if anyone else still does. We're still in the 90s, and there's still this massive disconnect between the physical market, where things are really, really tight right now, Anne-Marie, and the paper market. The front month of the futures curve, 96 on Brent, WTI at 92.
Nothing has actually changed in the physical market. Actually, you can argue things are getting worse in the physical market. I saw that one country in Asia actually only received half of a full tanker because they were so desperate. They said, bring whatever you can. That's the story in Asia, and then potentially it's going to get a little bit worse in Europe. But right now in the United States, we're semi-insulated. It is incredible to see the facts not changing on the ground, but yet the futures facts are changing. And they're just not pricing it in because they're pricing in peace.
Brent crude, 96.26. Under surveillance this morning, a looming ceasefire deadline.
I saw some reporting, again, bad reporting this morning, that we had formally requested an extension of the ceasefire. That is not true at this moment. We've remained very much engaged in these negotiations, in these talks. You heard from the vice president directly and the president this week that these conversations are productive and ongoing, and that's where we are right now.
So here's the latest this morning. The US and Iran reportedly looking to extend their truce for an additional 2 weeks. Bloomberg's Tyler Kendall joins us now from the White House for more. Good morning, Tyler. What's true, what isn't true, and how close are we to extending this ceasefire?
Hey, John, good morning. Well, if we piece through the details, we can say that the White House at least says that these negotiations are ongoing, but at this point, no formal confirmation here that we're going to see an extension or even another round of in-person talks. Though White House Press Secretary Caroline Leavitt did go on to say that the U.S. feels good about the prospects for a deal, and also added that as Pakistan remains the main mediator in this conflict, we could likely expect Islamabad to host the next round of in-person talks if and when they happen. Plus, pair that with comments from Pakistan yesterday that a delegation had arrived in Iran in a bid to try to keep this momentum going, because Bloomberg News is one of those outlets now reporting that we could see this 2-week extension. And we have a little bit more of those finer details, including that this extension would be geared towards letting negotiators at the technical level try to make some progress on the big sticking points before senior officials actually get back to being face-to-face, because at least publicly the sides still feel very far apart on some of those main points. Just yesterday, we heard from Iran's foreign minister saying that Iran's use of nuclear energy cannot be revoked, though he did seem to suggest that the level and type of enrichment may be up for negotiation. But still, that's testing this White House's at least public red line of no nuclear program. Then, of course, the issue of now the double blockade when it comes to reopening the Strait of Hormuz. And John, yesterday, the White House did detail that's not the only tool of economic pressure they would be willing to use. U.S. Treasury Secretary Scott Bessent saying that the U.S. is renewing efforts to work with Gulf partners on freezing additional assets of Iranian leaderships in their banking systems, and threatened those secondary sanctions on any financial institutions that help the country.
Tyler, we'll let you go. That sprinkler behind you is making me nervous. It's just coming around at the wrong time. No? You felt the same thing?
Well, I just love the lawn work that we get
always
every single in the morning. I mean, we should have all these clips
6:15
back to back of all the lawn work.
It's because the press secretary saw some bad reporting, so you turn the sprinklers on very quickly. General Karen Gibson of Academy Securities, you think I'm joking? Maybe I'm not. Writing each day that the Gulf remains closed to business increases risk to the global economy. Iran benefits from a closed Gulf. We do not. General Gibson joins us now for more. General Gibson, good morning.
Good morning.
And welcome to the studio here in Washington. It's good to see you. Let's talk about the risks on the ground right now, the state of the ceasefire and the state of the blockade. What's your assessment of things?
So the ceasefire is holding, which is a good sign. Establishing the ceasefire was a positive step by stepping off that escalatory kinetic ladder that we had been on. And an extension of a ceasefire, I think, is a sign that perhaps there's some productive dialogue going on in back channel. If it were increasingly frustrated, we would probably see an additional bold action by the United States. In terms of the blockade, I think that's a very bold move, an attempt to decline or decrease some of Iran's leverage and to deny them revenue, whether that's from the toll that they exact on passage of vessels or from their own exports. And ideally, that will bring them to the table to make additional concessions. I have no doubt about the U.S. Navy's ability to execute this mission with the same kind of competence, professionalism and precision of all the missions they've performed throughout this campaign, but it does not solve the transit problem of vessels that remain stuck in the Gulf.
Well, in the past, we've seen the Fifth Fleet escort tankers through the Strait of Hormuz. Can we see that?
That is certainly possible. It's another feasible option. It's resource intensive. And so now there is another carrier, as I understand, steaming towards the Gulf. Both the blockade and escorts are resource intensive. It's not just the ships that are escorting them, destroyers, fighter cap, combat air patrol, intelligence, surveillance and reconnaissance, minesweepers. And even if we are escorting vessels, particularly if we're the only nation that's doing it, we can't escort the same number of vessels that previously were flowing through the Gulf prior to this conflict.
So the volume will be low. But if the U.S. Fifth Fleet were to do this, when could they actually start doing it?
I think if they want to impose both the blockade and escorts, we'd probably want to wait for the arrival of the additional carrier strike group that, as I understand it, is on its way there. I think it's important to note, though, that Iran's ability to choke off the Gulf is very broad. It's really based on a perception of risk. It doesn't take a lot of resources on their part. It's not hard to drop a mine or two, or even to say, we've dropped mines over here, and then someone has to verify it, demonstrate the feasibility of sailing through there. And the decision to flow through the Gulf, as you know well, it's not a military or a political decision. It's an economic decision based on commercial risk.
Unless there is a transformation in terms of the way that trips transit through the Strait of Hormuz, will things ever be the same again because of this perceived risk that is now in the forefront of every shipping company's minds?
Yeah, I think perceived risk is exactly what it boils down to. And so there's much that must happen to lower that perception. The ceasefire is an important step because right now we don't see anyone, taking any hits from drones and missiles, et cetera. Also, progress on the diplomatic front would be an important confidence builder. But this period of risk, or this perception of risk, extends beyond shipping. We've seen strikes against airfields, against, Dubai. There's much that will need to be done to lower that temperature across the region. And I know that our Gulf partners are very interested in seeing this resolved so that they can resume a normal commercial environment.
I think we all want to see the same thing, Lisa. Just how close are we to a diplomatic breakthrough? I think that's an important question. And are we just getting a one-sided serving of verbal intervention that implies things are better than they actually are in the negotiations?
One of the reasons why people are getting confidence is because even Iran has said that they're coming to the table, although they're also battling their internal PR battle, given the fact that people don't want to see that in the Islamic Republic. You are correct. How much is this a jawboning game that is one-sided as well and asymmetric in the same kind of way?
It's certainly been effective. Let's put it that way. General, thanks for being here. Thanks for making time for us. Thank you. That was General Karen Gibson of Academy Securities. Up next on the programme, we'll catch up with Bob McNally of Rapidon. With energy shortages looming, we've seen this story building across Asia. Is Europe up next? That conversation just around the corner.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Live from the nation's capital this morning. Good morning to you. Equity futures so far this morning on the S&P 500 shaping up as follows, following a three-day winning streak on the S&P and a 10% plus rally. Off the equity market low from the end of last month, we're up another 1/10% on the S&P. On the NASDAQ, 11-day winning streak. We haven't seen one of those since 2019. Can we make it day 12? Which just sounds absolutely ridiculous. The NASDAQ 100 up by 0.25%. Renewed enthusiasm for the tech trade. But Bramo, as you've pointed out repeatedly over the last 30 minutes or so, it's not just about U.S. tech.
Yeah, we're also getting reports from the likes of Pepsi beating expectations. Even consumer discretionary is coming out and exceeding expectations. I mean, heck, even a sneakers company is becoming an AI company, so all of a sudden everyone can rally. But ultimately, you keep getting these beats and a sense from the big banks the consumer is still strong and that, yes, higher gas prices might hurt, but not enough to really eliminate this resilience.
You want to go there? I mean,
do.
You went there, so let's go
Okay.
there. I mean, Allbirds, I guess is what you're talking about.
Is there another one?
It's the first one. There might be others based on that stock move yesterday. Yeah. This has echoes of what we saw with the crypto craziness. What was that, 2017, 2018? Yeah. That period where people started renaming companies and putting blockchain in the title to get the stocks to rip, and it was effective then, and I imagine we're going to see more of the same this time around.
I feel like Overstock was the perfect poster child of that when they came out, and this furniture company was talking about how they really are a blockchain company. Now, if a sneaker company can be an AI equipment company, are we reaching the same kind of fervor?
Long Island iced tea, wasn't that it?
Oh, that's right. That was so good.
Yeah. Good times.
Actually, blockchain.
Good times. NASDAQ futures up by 0.2% so far this morning. Should we turn to the bond market? Check it out. So we've had a 10% move off the low in the equity market. And in the oil market, we've had a 20% move off the high. In the bond market, things just a touch snoozier. A 15 basis point move off recent highs on a 10-year bond yield this morning, down by about a basis point. Lisa, 427.56.
Yeah, ultimately the bond market has been beset by dueling ideas here. On one hand, you've had inflation that's been coming in hot. On the other hand, it's going to dampen some of the consumer resilience, so that might take some of the heat out of the economy. Are we looking at an inflationary shock or the disinflationary shock that we had before this conflict that could allow the Fed to cut rates? And then, of course, there's the drama on the Fed.
Now, the drama elsewhere as well is also in the oil market. So it's that time of the morning, that time of the program, where we turn to crude. And we sound completely divorced from the enthusiasm taking place elsewhere when we point out that Brent's still trading at 96, WTI's at 92, and the physical market's still a mess.
Yes, it's still a mess. The Strait is still closed. There's a few vessels that are getting through, but nothing like the volume we've seen in normal times. Remember, there's a blockade on a blockade. Yes, we have a ceasefire. They're thinking about extending it. But to do that, we would need to see at least one of the demands from the United States that the Strait of Hormuz be open. What Iran is offering now, according to Reuters, is just that they allow some vessels to go through the Gulf of Oman. That's not a full flowing of oil that we've seen before this crisis started. But when you look at the futures market, they're basically just shrugging off the physical pain we are seeing in Asia. And it is real when you look at people working from home and what they're doing and organizing timed blackouts. It is serious pain for a lot of people in Asia, and that's just going to be moving to Europe. Not yet in the United States.
Brent crude 96.44. On our radar this morning, the US and Iran moving closer to a ceasefire extension. Mediators working through the main sticking points, including the reopening of the Strait of Hormuz and the future of Iran's nuclear program. Elsewhere, the Pentagon approaching US car makers about playing a larger role in weapons manufacturing. The Wall Street Journal reporting US officials are holding talks with top executives at GM and Ford about producing military supplies. And finally, the CFTC investigating a series of well-timed and profitable bets around President Trump's military decisions in Iran and Venezuela. The agency looking at instances of surging trading volume and requesting data from exchanges.
And this comes after widespread speculation and criticism about who is making money and profiting off of information that might be leaking ahead of this. We heard from the CME is any review of market behavior must include all venues, including prediction markets like Polymarket and Kalshi, because there has been a lot of speculation around those as well. There has been this underlying feeling, why would you play ball at a time when somebody else has an inside hand. And ultimately, that has been speculation time and time again. It's important to really unveil that and get a true answer.
And it doesn't help when it comes to speculation when this White House felt the need to send out an internal memo reminding people not to trade off of information you are finding out working at the White House. Interesting today, the CFTC chair will be speaking at Agricultural Committee, giving testimony in Congress. This is, of course, going to come up.
You want maximum transparency, and you don't want to feel like someone else has got an edge that you don't have, not because they worked harder than you, but because they have access to information that other people don't have. This is something we have to address. I would say it goes beyond financial markets as well. I think it goes to betting markets too, and that's something on everyone's horizon based on the last few months.
It reduces liquidity. It reduces market-free trade because ultimately people want to see that fair playing field. Otherwise, why would they get involved? So you're absolutely right. And how many people did we talk to? This isn't a tradable market because ultimately, what edge can you get unless you have an inside line?
And this is becoming a political issue, not just for the midterm elections this year, but for 2028. Rahm Emanuel, who was the chief of staff for former President Barack Obama, he's mulling whether or not he's going to run. He doesn't think anyone that works in government should be able to trade, or their families, on Polymarket or Kalshi or any of these sort of prediction markets.
Liquidity is the issue here, and I'm pleased Lisa brought it up. If you believe something fishy is going on here, are you willing to deploy capital to these markets in the same way? And if you're not, does that disrupt the amount of liquidity in markets on any given day? Now, that's why we like U.S. financial markets: deep, liquid, transparent, information, nothing hiding. Maybe I'm talking a little bit too rosy about financial markets in general, but ultimately, that's the benefit of U.S. capital markets. If you do something to sacrifice that because you want to get a small gain ahead of the president and a declaration he's about to make, that's something they need to take really seriously, and I'm pleased that some people are.
You know, I wonder how much the recent kind of shrug that the market is giving to a lot of the headlines is because of this. Why should anybody be taken for a ride on whipsawing headlines or extreme prognostications, given the fact that in the past, they've been on the losing side every single time? Again, fool me once, shame on you. Fool me twice, shame on me. And I got it right again for a second time.
3 for 3, Bramo.
I mean, that was a repeat, though. I know, I'm really trying.
I was holding my breath. I was holding my breath. Can she do it?
Down. All right, let's go.
You've been practicing.
Every night in the mirror.
So impressed.
Thanks.
Equities right now in the S&P, just about unchanged on the S&P 500. Crude edging higher. And gas prices still elevated with the Strait of Hormuz all but closed. The Treasury Secretary, Scott Bessent, saying lower fuel prices should be on the way.
I'm optimistic that during the summer we will see gas with a 3 in front of it sooner rather than later. I'm optimistic that sometime between June 20th and September 20th that we can have $3 gas again.
Bob McNally of Rapid Energy Group expecting a prolonged Hormuz disruption, writing, if the Strait does not reopen by 3Q, we estimate the oil price rally will likely need to be capped by extensive demand destruction in the form of severe hits to GDP growth. Bob joins us now for more. Bob, welcome to the show. I wonder if you share that enthusiasm and confidence of the Treasury Secretary for lower gas prices in the months ahead.
Well, good to be with you. You know, our base case is that we will avoid that worst case. Recession caps the oil price spike. It's how it's been done in the past. But we're cautiously optimistic we will get to a better outcome. Not right away, but we will have either a ceasefire in the coming weeks that allows a full resumption of Hormuz flows, or the U.S. military will get on with the job of degrading Iran's ability to interrupt shipping in the coming weeks. That may take a little longer. But I'm cautiously optimistic we maybe see the end of the oil price rally, hopefully before it has to come to recession. However, gas prices, that's another story. We have to see how things turn out this summer. I hope maybe by the end of the summer to have a 3 handle, but that would be optimistic.
Bob, Reuters is reporting that Iran could consider allowing ships to safely go through the Gulf of Oman. How would that affect flows? How many more vessels could we see actually then start to move?
Well, in the old days, before this, the way out, we go through Omani waters, and the way in through Iranian waters. They kind of split the highways, if you will, the TSSs. And I think, you know, if it's just Omani waters open, it's not clear we can get back to a full and safe restart of flows, possibly. But I think what Iran is really signaling here, and it's more important, is that it realizes, and this is very important and very hopeful in the long term, it realizes no one's going to let them be the toll keeper of Hormuz in the long term. They did move and play the oil card. I don't think the U.S. expected that. And because they have this leverage, they have stronger ability to extract concessions from the United States on nuclear and other things, and they probably will. However, they realize the Gulf Cooperation Council countries, Israel, the United States, there's no way we're going to allow them to choke this thing forever. So I think it's kind of an admission that, yeah, we know at some point flows are going to resume, whether it's through totally Omani waters, we could do that if we had to, or back to the old ways, partially Iranian, partially Omani. But it's going to come back to freedom of navigation eventually.
The president yesterday was talking a lot about his conversations with China on his upcoming trip to China. Right now, I know China's taking in much less crude from the Middle East, about halving what's going on in terms of what they used to import from Saudi Arabia. How are they dealing with the problem right now? Because I know you have a new note right now actually talking about how China is going to weather this storm.
So China stocked up well. I mean, they're not enjoying it, but they're doing better than many of their Asian neighbors. They had 1.2 billion in crude inventories. They've been hoarding like mad. Other commodities as well. They're going to begin to draw those down. They're dropping runs. Again, they're in a better position than many of their neighbors with regard to this famine of oil that is now certainly in Asia. So with regard to the loss of the 1.6 or so they were getting from Iran, I think we expect more stock draws, more run cuts. No fun, but it's not a disaster. But I just step back and say this. I think this whole Iran and China link is overstated. China has much more going on with the other side of the Gulf and the Gulf Cooperation Council countries in terms of economic and financial linkages, and the relationship with the United States is very important. It's got big agenda items on trade, chips, and other things, Taiwan. And so, you know, I wouldn't overstate how tight that linkage and that relationship with Iran really is with China, and they're dealing with it, you know, pretty well. I don't think they're going to militarily challenge our blockade. I think they understand this is not about China, it's about Iran. And so I'm optimistic that the China aspect of this can be managed pretty well.
Bob, what are you looking for to understand whether the blockade could get removed, and the first blockade could get removed, and then the second one could get removed, and we could actually get free flow in some form or another in the near term?
Well, I don't think the blockade is going to be removed, the U.S. blockade on Iran. Indeed, it looks like it's being expanded this morning to allow checks for ships that may have contraband or weapons, and nuclear weapons and so forth. So if anything, it's expanding. So I think, look, there's going to be a big deal at some point, and there'll be resolution on nuclear, on missiles, on proxies, on giving Iran some of its money back, et cetera. And that'll include the Strait of Hormuz, and we'll be lifting a blockade. We don't think we're there yet. Unfortunately, we think this has to get worse before it gets better. But at the end of the day, I think there's going to be a settlement of all the issues, and we'll see a lifting of blockades being imposed by both sides. And we have to hope that by then we will not have seen extensive destruction to physical infrastructure, which would prolong the recovery in flows beyond the 3 to 4 months we're already looking at.
Robert, always good to catch up with you, sir. Appreciate your time. Bob McNally there of Rapid Energy Group on the reality in the oil market. And it's not a great reality in the physical market right now, but we talked about this countless times. Companies keep delivering results. I remember a line from Savita Subramaniam of Bank of America, which she uses repeatedly: never underestimate corporate America. And we've seen that from the financials all week. BNY reported just moments ago, and they've done exactly the same thing. Record revenue, double-digit growth, net income up by 36% year over year. The stock is up in the pre-market by something like 0.8%. Since Robin Vince took over this bank, back in 2022, the stock is up by more than 200%. Now, I'm not just mentioning that because that's a Brit in charge of a US bank, but he's had a phenomenal run at this institution. And it's another example, Bramo, of another company getting it done in America at a time where there's a lot of stress elsewhere.
Yeah, and if there are any Brits running American companies who want to reach out to John, I recommend that they do so. Look, I do think that this really highlights two things. Number one, execution, and you are seeing a number of large firms actually execute pretty incredibly so far this quarter. I think it also speaks to the liquidity and just how much cash a lot of investors have. And people keep coming back to this as also one of the hallmarks of resilience. There's just so much cash that needs to go to work. I mean, the idea of scarcity of bonds that we hear about from Bob Michael over at JP Morgan Asset Management. You're seeing that in the results from asset managers and big banks.
Stock up in the pre-market by 0.8%. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hey, John. Taiwan Semiconductor is hiking its revenue outlook, now forecasting 30% growth for the year. The chipmaker saw profits surge as AI demand remains resilient despite global instability. Executives did offer a word of caution, though, warning that the conflict in the Middle East could eventually squeeze margins as shipping costs and energy costs continue to rise. China's economic growth rebounded more than expected in its first quarter, suggesting less spillover from the Middle East war so far. The growth was boosted by strong manufacturing and exports, but consumer spending and private investment eased. And PepsiCo shares rising in pre-market after reporting earnings that beat on the top and bottom lines. The company saying it's seeing improvement in salty snacks volume following recent price cuts. PepsiCo also announcing an overhaul of its Gatorade brand. That's your Bloomberg brief. John?
Isabel, thank you. More from Isabel in about 30 minutes' time. Up next on the program, energies, ripple effect.
The biggest risk continues to be that inflation gets imported around the world again through the energy complex. That becomes challenging. That queers the cost of capital, and effectively then you start talking about the R word.
Up next, we'll catch up with the IMF Director of Capital Markets, Tobias Adrian. He joins us in just a moment, live from Washington, D.C. You're watching Bloomberg TV.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Equity futures on the S&P just about unchanged. So the S&P 500 so far this morning holding steady after posting new, fresh, all-time highs on the S&P for the first time since January. On the Nasdaq, an 11-day winning run could become day 12. Equity futures on the Nasdaq this morning up by 0.05%. Under surveillance this morning, energies, ripple effect.
The biggest risk continues to be that inflation gets imported around the world again through the energy complex, and then eventually it works its way through the food and general living ecosystem, and that becomes challenging. That queers the cost of capital, and effectively then you start talking about the R word. The good news is we're not talking about the R word.
Very cool conversation with Ted Pick of Morgan Stanley together with Bramo just yesterday. Catch the full conversation out on Bloomberg.com and on the Bloomberg terminal. Here's the latest this morning at the IMF World Bank spring meetings. The IMF cutting its growth outlook and warning of major risks should the war persist. The IMF Global Financial Stability Report writing the global financial system is confronting several channels through which market turmoil could escalate into financial instability. Tobias Adrian, the IMF Director of Monetary and Capital Markets, joins us now for more. Good morning, sir. It's good to see you.
Good morning. Very good to be here.
I was just recalling a phrase from the Bank of International Settlements from more than a decade ago, and that was uneasy calm. And I think that phrase, uneasy calm, maybe captures this moment quite well. Do you agree?
Well, when we look at markets, there's certainly a lot of risk appetite in markets that has come back. Over the past 7 weeks, we've seen an ebb and flow in terms of this risk appetite. Our own assessment is that risks continue to be tilted to the downside.
Well, this is a strange thing, right? So risks have continue to be tilted to the downside, and markets are hitting new all-time highs. People are moving on as though this doesn't exist. I mean, how do you understand that from a sort of animal spirits point of view, and where there could be potential systemic risks that are developing?
Yeah, that's a very good question. So the way that we look into the future is by considering 3 scenarios. A reference scenario that is relatively benign, where the inflationary shock is somewhat temporary. An adverse scenario where the inflation shock is more persistent and many central banks would have to act. And then a severe scenario where financial stability problems would start to play a role. And looking back again over the past 7 weeks, you can imagine that sort of like the relative likelihood of those 3 scenarios was shifting over time as the news flows was hitting markets.
At the same time, it seems like there are a number of economies, particularly in Asia, Southeast Asia, that don't have enough money to acquire physical crude right now. And so they're having the shutdowns, they're having some of the restrictions on commercial activity. Given how tenuous the financial position was to begin with in some of these nations, how much does it set back by decades some of the countries that had made progress?
Yeah, that's a very good point, right? When we look across countries, there's a huge variance in terms of how hard countries are hit in terms of pricing and in terms of the oil supply shock. So it's the more vulnerable countries, whether that's vulnerable emerging markets or developing economies, those are disproportionately hit, as the share of energy consumption and food consumption is much higher relative to advanced economies. And of course, many countries are importers of oil, importers of gas, and that is particularly challenging for them.
You know what's strange? It seems like, yes, there's an uneasy calm and there's a war going on that's really threatening supply chains. But the atmosphere this year at the IMF meetings is actually significantly better than it was last year. Why is that?
So, as you pointed out at the beginning, there is quite a bit of hope that is around, though when we look back over the weeks, there has been a back and forth, right? Volatility has come up at the moment. The VIX is, below or at about historical averages. But, we have seen spikes as well. So, let's see how we evolve.
To Lisa's point about what's going on in Asia, Bob McNally was just on. He said it's a famine when it comes to energy. Is that going to hurt capital flows into these countries?
So we have seen a withdrawal of portfolio flows out of emerging markets that is significant, right? Compared to 2022, it's about double in terms of outflows. but the price action remains somewhat contained. So spreads have widened, both hard currency and local currency spreads, but relative to the flows, it remains a somewhat benign scenario.
Is there something about this situation that risks amplifying existing vulnerabilities? We talk often about private credit. Do you see a connection between the two things at the moment?
Yeah, so there are a number of vulnerabilities that, taken in isolation, seem manageable. But if all the vulnerabilities come together, it could become uncomfortable in a severely adverse scenario.
Do you think that's likely?
We think there's some likelihood on this severe scenario, but it's certainly not our baseline.
It's certainly not appreciated right now in financial markets in general, with equity markets at all-time highs at the moment on the S&P and the Nasdaq this morning.
And frankly, if you listen to the rhetoric from all the bank CEOs, none of them seem to think that private credit is a real systematic threat. In fact, they're all investing and broadening out. And what Ted Pick said yesterday was, it's a credit issue. It's not just private credit. And if the economy is going gangbusters, guess what? Credit does well. Ultimately, it seems like everyone feels better this time this year than at the same time last year, even with no oil or anything else getting through the Strait of Hormuz.
There was a line of questioning in your Ted Pick interview that I thought was really, really important. The point you made about capital markets activity benefiting from volatility, but deal-making and advisory fees have still held up. That's a strange mix. You think about volatility and you think that would upset the latter. That didn't happen last quarter.
It was headline volatility, but it wasn't directionally negative. So it was good volatility for banks because people were motivated to shift around, particularly on single names, but they still got deals done. So it was kind of a perfect mix that really led to an incredible results from the big banks.
This headline coming from AP just moments ago, speaking to the IEA head, saying Europe, we talk a lot about this cushion, Europe has maybe 6 weeks left of jet fuel. That headline crossing just moments ago.
This is what Asia's been dealing with, and now the next stop is going to be Europe. And also what Fatih Birol, the head of the IEA, speaking to the AP, says, warning of possible flight cancellations soon if these supplies remain blocked, given what is going on with the Strait of Hormuz.
Not good. Tobias, it's good to see you, sir. Thanks for being here.
Yeah,
Thank you very much. Thanks for making time for us. The IMF Director of Monetary and Capital Markets. Up next on this programme, we'll catch up with Gargi Chowdhury of BlackRock, Doug Redeker of International Capital Strategies, the Barclays CEO, CS, Venkatakrishnan, and the former New York Fed President, Bill Dudley. The second hour of Bloomberg Surveillance just around the corner.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The economic data has been a bit mixed.
The top 20% of earners basically determine success or failure for this economy.
People are overplaying the K-shaped economy.
We need to see some continued resilience.
Consumers will remain resilient.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from the nation's capital this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action looks like this. All-time highs coming into Thursday, and we add some weight to that rally, up 0.1% on the S&P 500, up 0.2 on the Nasdaq, following an 11-day winning run, leaving behind the fear of March, embracing some tech enthusiasm and a whole lot more.
Yeah, and what you would have today, if we have these gains continue, it would be the longest streak, 12 days, going back to 2017, given the fact that people are looking to what we heard from Max Kettner looks cheap in terms of the discounts that you've seen on some of the Magnificent Seven, and frankly, the tech spend that just keeps on going.
The outlook for earnings has improved. Yes, I know it's difficult to get your head around, but throughout this war, 6 weeks of it, earnings expectations have been improving, not deteriorating, and that's been a major feature, a major dimension of anchoring the bull case over the last month or so.
I would argue it just sort of underscores how much we were underestimating the strength of the U.S. economy during the first quarter heading into the conflict in Iran. How much would the economy have surprised to the upside had there not been this extra cloud when it came to higher oil prices? And what you're seeing is a number of the pillars of this economy seem somewhat divorced from what's going on with Iran, from commodities, because it is an existential spend to build out AI. And frankly, consumers still have jobs, and so they're still spending.
Regaining confidence in the U.S. tech trade is not exactly the same thing as getting comfortable with the risk in the Middle East. And I'm not sure anyone's really comfortable with what's happening right now. It's an uneasy calm. We talked about that about 10, 15 minutes ago. I would say an uncomfortable calm. Given the deadlock we see between talks between the U.S. and Iran, there's a conversation about extending the ceasefire. There's still a blockade. The Strait of Hormuz is still closed. The physical market is still very tight. And in crude right now, we traded the 90s on WTI and on Brent crude. Sub 100 might bring you some comfort, but I can't take a load of confidence away from what's happening in a very, very tight oil and oil product market on the ground right now.
Absolutely. For the real world, this is dire, as Bob McNally just said, and the IEA is coming out saying that Europe maybe has 6 weeks of jet fuel left. Executive Director Fatih Birol says in the past there was a group called Dire Straits. It's a dire strait now, and it's going to have major implications for the global economy, which is why I feel like a Debbie Downer when you look at what's going on in the equity market and actually how depressed the oil market is right now when it comes to the paper market, because the physical market is so challenged.
Mark Knopfler, lead guitarist. Best guitarist ever, Sultans of Swing. One of my favourite songs.
Well, Bob McNally, plays in a band.
Dire Straits, just that makes sense.
But this is from Fatih Birol. But all those oil people, they all talk. They're all invited to Bob McNally's band.
That makes a lot of sense. I play that song every morning coming into work.
Do you?
Yeah.
That's the pump-up song.
Hey?
That's the pump-up song.
That's not quite a pump-up song, just a chill song. I like to stay
in.
mellow. Anyway, coming up on the programme, Gargi Chowdhury of BlackRock, with equities hitting fresh record highs. Doug Redeker of International Capital Strategies as the US and Iran move closer to extending the ceasefire. And the Barclays CEO, CS Venkatakrishnan, as the war's energy shock ripples across Europe. Looking forward to that conversation with Venkat later on this morning. A question about the Middle East, sure. Trading, capital markets, all that stuff. They're at a quiet period, so they're not going to say too much about earnings. I want to know about Mythos and their access to that tool coming from Anthropic and whether it's the real deal in their mind. Because I've been struggling with this, not just over the last week, but for much of this year. How much of the fear stories coming out of this industry, marketing for the IPO roadshow, and how much of it is the real deal?
And frankly, we've heard some of both. I mean, clearly the Treasury Department is taking it really seriously. So far, all the big banks are saying Mythos is our friend. And actually, this highlights how much we can get ahead of any kind of cyber threats. And we are embracing this AI technology. The degree to which they are shaking in their boots about what kind of threats they could be getting from cyber criminals, we don't see that in those earnings calls.
The Barclays boss coming up a little bit later this hour. Looking forward to it. We begin this hour with stocks pushing higher following a record-setting session. Gargi Chowdhury of BlackRock writing analysts have revised S&P 500 earnings estimates upward by 2% over the past month. However, the outlook is not completely rosy. Gargi joins us now for more. Gargi, welcome to the programme. What a move. Blink and you miss it. It looks like the return of US exceptionalism. Is it that or something else?
Good morning. It's great to be here. Thank you so much for having me. So, I was looking through my notes, and the last time I was here, one of the things that we had discussed was just this idea that historically markets have looked through geopolitical shocks. And I think what we're seeing right now is exactly that, but with one added caveat that as opposed to sort of the Liberation Day movements when earnings expectations went down during that period, what we saw in this last month of March was valuations reset and clients actually racing to take the opportunity to get back into those cheaper parts of the market and really focusing on tech and AI, which is where we saw most of that value be created.
Gargi, let's talk about that value creation. When we sit here and say earnings expectations improved throughout this crisis, where have those earnings expectations actually seen the greatest improvement? Is it just an energy story, or is it in another sector, in more sectors than just one?
Absolutely, and that's actually a very important point. So when you look at how the earnings expectation improved, it certainly obviously did in the energy sector. But it was quite concentrated outside of that in tech, actually. It wasn't broadly across every sector. We saw it in tech, we saw it in communication services, obviously in energy. And then outside of that, things remained, quite muted. So I would say as we go into this earnings season, as opposed to every other time when there is a revision lower and then you beat earnings expectation this time around, I think the bar is a little bit higher. Obviously, we've seen this move. We've seen this value creation. We're seeing tremendous amount of inflows. These are all good things. But I wouldn't be too complacent. And I do think all of the earnings expectations that have been revised higher, we have to see that realize. And obviously, we're watching tech very closely. And we're telling investors, go back to focusing on that AI theme, on that tech, on that growth part of the economy.
If you have all of these companies that are beating expectations, raising forecasts, a consumer that's strong, and you have a lessening of some of the tensions in the Middle East, then how much do inflationary pressures really start to kick in, especially if commodity prices are just persistently higher for the foreseeable future?
Absolutely. So this is something that, I've been pointing out. We've been telling clients that this is a good time to add some inflation protection to your portfolio. We've been recommending STIP, which is sort of the 0 to 5 year part of the curve. One of the benefits in having that is you're tied to headline inflation, which obviously, as you said, Lisa, is going to continue to move higher, at least in the short term. While at the same time, we saw some encouraging signs in the CPI data last week, where at least some parts of shelter inflation are moving lower. If you look at the 3-month, the 6-month annualized data for shelter inflation, that is below that 3% level, which allows the Fed maybe to at least stay on hold. So certainly think about ways in which in the near term, maybe the 3 to 6 month period, that you can add some inflation protection, whether that's through tips or whether that's through a broad basket of commodities.
Gargi, I'd love to get into investor sentiment with you and just get a sense of the psychology over the past couple of weeks. We were talking earlier about this perception that it was an uneven playing field during headline roulette and that some people had an edge. And how do you get an edge when you get in? And there was this paralysis among investors. Why should you trade if you're likely to get your face ripped off, given the fact that somebody else has a disproportionate amount of information? Do you feel like there was a freeze over a lot of the activity that seems to be softening, thawing out, as we can move on to fundamentals and things like earnings?
It's a great point. So the two things that we watch when we're looking at what investor sentiment is doing, the first is we actually poll our clients. We have weekly calls with 1,000 to 2,000 clients joining. We ask them how their investor sentiment, how their risk sentiment is. And we saw that take a dip. And what that meant was they were staying invested. To be clear, no one was selling at the lows. They were staying invested but not adding. Over the last week, that has picked back up to the highs. So it is turning as some of the headlines around, hopefully, a more durable ceasefire come into play. The second thing we look at is absolutely around flows. Where are the flows going? And again, over the first couple of weeks of April, what we're seeing is in fixed income, the flows are moving away from cash-like products to some more risk on products. And then within equities, we had the best 8 days in equity flows into especially US equities. And then lastly, I'd say people are coming back to EM again, which is now being viewed more as an AI story, with 46% of IEMG focused on tech and comm services.
But so much of part of EM is in this world where they are in dire need of energy. How does that make any sense?
You bring up a good point. Absolutely. I mean, EM, we can't paint that with one brush. There are commodity importers, commodity exporters. But if you happen to look at a broad index, such as the one that I just mentioned, IEMG, what you do find is how much that has changed in composition over just the last decade. On top of that, if you look at where earnings growth expectations came over just the last month, EM earnings got revised actually even more upwardly higher than US. So investors are paying attention to that earnings revision and expected earnings growth in EM. This is related to Korea. This is related to Taiwan, which obviously is in the heart of the memory and compute demand. And we're beginning to see that in broad EM. Now, obviously, there are parts of EM which don't have the memory and the chip associated with it and are also energy importers. And I think that's certainly going to continue to struggle.
Is there like a statute of limitations on this? Neil Dutta writes about this. He goes, either markets are dumb or the oil analysts are. You mentioned things like the hyperscalers, TSMC. They were great today, but they are still monitoring how much helium they're going to be able to use because of what is going on in Qatar and given the Strait of Hormuz. Is there a statute of limitation to basically how high and the earnings expectations for the equity market?
You know, I think what's happened over the last sort of 7 or 8 days is that equity markets have started living in the future. They're looking at growth expectations. They're looking at earning expectations. Equities always live in the future. They're the longest duration asset. Oil markets and oil analysts are obviously showing us that the risk isn't quite over yet. And there is likely to be continued security concerns, energy security concerns, which should be certainly one thing that we leave this with after the end of the war. Hopefully that's coming soon. One of the things that investors should all be thinking about is how do I get energy security in my portfolio, because that's something that's going to stick with me. So I think equities focusing on the earnings revisions that we talked about, and obviously with the expectations moving to 12, 13%, that's what's driving some of the price action. I think investors should A, think about energy security, and B, focus still on that need for inflation protection in their portfolios.
Gargi, always good to catch up and see you. Gargi Chowdhury there of BlackRock. That disconnect, we've talked about this countless times on this programme. In fact, I've talked to Jeff Curry of Carlyle in the past about the disconnect. It's a difference in the seat that you're sitting in. If you're in the equity seat at the moment, you are looking over an anticipatory asset class, seeking comfort from a backwardated futures curve, looking at the December price and saying, I can live with $70, $80 crude. If you're in the commodity market, you're looking at a physical market that has to clear demand and supply at spot. And that is very, very tight, to the point that we're seeing shortages in places like Asia. And that explains the difference with this sort of rosy outlook that come from the equity guys on this program and the doom and gloom that you see from the commodity analysts who are focused on the physical market at the moment. It's not to say that one is right and one is wrong. It's just a very big difference in perspective.
And your worldview. But for the commodity guys, it's not just what is happening right now. It's the future. What happens if it goes on a little bit longer? There's shut-ins. How long does it take to get production back? It's not just reopening the Strait of Hormuz. There are actually long-term potential implications because of what is going on right now.
And that is where the great attention lies at the moment, and the prospect for maybe higher than expected inflation. The risk-reward around the inflation story, Bramo, I think is the point you're trying to make this morning.
Well, to me, you can't have your cake and eat it too, although evidently you can, because that seems to be what's going on in markets today. But it seems like companies are saying the economy is better than you expected, and yet people are still saying, well, inflation expectations are going to remain controlled even as the Fed potentially cuts rates once this year and once again next year. So where is the disconnect there in terms of the inflationary pressure that can take hold should the economy continue to outperform to the upside?
Futures on the S&P up by close to 0.1%. For an update on stories worldwide this morning, with your Bloomberg brief, Isabel Lee has more. Hey, Isabel.
Hi, John. At least 2 U.S.-sanctioned Iran-linked ships traveling through the Strait of Hormuz and into the Persian Gulf. The ships may have taken a new route from the UAE, passing between 2 Iranian islands as a U.S. blockade of the strait enters its 4th day. Treasury Secretary Scott Bessent says the U.S. will not renew the waivers on Russian and Iranian oil sanctions. The waivers were initially authorized to ease surging oil prices, pushed higher by the closure of the Strait of Hormuz. Global crude up more than 30% since the start of the war. And shares of BNY rising after beating on earnings. The bank posting profit for the first quarter, the top estimates, as client activity fueled revenue gains. The company's board authorizing a new share common repurchase program of $10 billion. That's your Bloomberg brief. John?
Isabel, thank you. Thank you for the update. Up next on the program, a diplomatic deadlock.
I saw some reporting, again, bad reporting this morning, that we had formally requested an extension of the ceasefire. That is not true at this moment. We feel good about the prospects of a deal, that we are continuing to see how these conversations go.
Turn on the sprinklers. Send down the lawnmowers. Bad reporting.
I mean, I felt bad for Tyler this morning. They had to share the lawnmower and the sprinklers all at once. Not even 7 a.m.
We'll catch up with Tyler Kendall in just a little bit. Up next, Doug Redeker of International Capital Strategies, live from Washington this morning. Good morning.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Equity futures right now, just about positive by 0.1%, all-time highs at a close in yesterday's session, and looking to add some weight to the rally on the Nasdaq. 11 days of gains, the longest winning run since December 2019. Bramo, what have you got? Day 12? How long?
So day 12 would be since 2017.
Wow.
Past that, 14 days. That would take us back to 2014.
It's crazy. Some of the numbers out there. I was looking at semis. I was looking at the semi index, Philadelphia semi index, up by more than 20% this month. The biggest monthly gain since 2002. I checked it once. I had to check it twice. It's been explosive over the last 2 weeks.
And it explains the Kospi, it explains the Taiwan semiconductor. And the reason why the Taiwan stock index now is a greater market valuation than the UK one. So you can get a sense of how the tides have kind of shifted under the hood as a result of a very bespoke tech rally that has really changed the dynamic.
Does that tell you something about tech or about the UK
I knew
stock
you were going to
market?
say that,
Sort of
and I
one
think
of
that
the other.
it's a pull-push. You know, it's pushing on an open door.
OK, let's not beat up Europe too much this morning, OK?
You talking to me?
I get all these messages about being anti-European. I love Europe. I just haven't been big fans of European policy. There's a major difference between the two things. I'm a massive fan of Europe. Anyway, OK. Under surveillance this morning, a diplomatic deadlock.
I saw some reporting, again, bad reporting this morning, that we had formally requested an extension of the ceasefire. That is not true at this moment. We feel good about the prospects of a deal, and it's obviously in the best interest of Iran to meet the president's demands. I think he's made his red lines in these negotiations very clear to the other side, and so we are continuing to see how these conversations go.
So here's the latest this morning. The US and Iran considering a ceasefire extension with key sticking points standing in the way of a longer-term peace deal. With the latest, Bloomberg's Tyler Kendall joins us for more. Hey, Tyler.
Hey, John. Good morning. Well, this White House maintains that they feel positive about the prospects of a potential deal, but still no confirmation on an extension or another round of in-person negotiations ahead of Tuesday's deadline. Though the White House press secretary Caroline Leavitt went on to allude to the fact that Pakistan would, in fact, hold the next round of in-person talks if and when they happen. Now, Bloomberg News is reporting that a 2-week pushback of that deadline could be on the table in a bid to give negotiators at the technical level more time to make progress on those big sticking points before senior officials meet face-to-face again, because at least publicly, the two sides still feel very far apart, including Iran's foreign minister saying yesterday that Iran's use of nuclear energy can never be revoked, testing the at least public red line from this White House about no nuclear enrichment. Then, of course, the issue of reopening the Strait of Hormuz, as data analyzed by Bloomberg News indicates that at least 2 Iranian tankers have appeared to make their way through the strait and into the Persian Gulf. CENTCOM gave an update last night saying that no ships have made it through the blockade and that at least 9 vessels obeyed U.S. instructions to turn around. We'll likely get an update on this part of the operation later this morning within the hour, 8 a.m. Eastern. We're expecting Pentagon officials to brief. But, John, as you well know, it's not just the strait, it's not just the nuclear program. This White House was hoping that other issues would be put on the table, including Iran's support of proxy militia groups. The White House maintains that Israel's front against the Iranian-backed militant group Hezbollah is an entirely separate operation. But President Trump did announce last night that Israeli and Lebanese leaders would be meeting today in a bid to disarm that organization.
Tyler Kendall at the White House this morning. Tyler, thank you. Douglas Redeker of International Capital Strategies says the following: it's hard to see how the U.S. does not emerge as a less powerful country as a result of this war and from other recent Trump policies. Doug joins us now for more. Doug, good morning. Good to see you.
Morning. Great to see you.
We've talked about all these different disconnects. The global audience for the IMF World Bank spring meetings, is there a divide, in your opinion, between what you hear from the U.S. delegates and what we're hearing maybe internationally?
Yeah, I think that, first of all, there's a divide between policymakers and the markets. And then within the markets, there's a divide between the U.S. investor group, which generally sees things through a positive prism. To some degree, they're believing what they're hearing out of the White House. They're believing the rhetoric, the listen to what I say, don't watch what I do kind of mantra. And the rest of the world, and certainly the policymakers, are a little more skeptical, a little more, what I would say, realistic about what's going on, and a lot more wary.
So what do you make of financial markets buying the dip?
Well, look, I've long said buying the dip has been a great strategy as long as you've had two things. One, what is effectively a Fed or a central bank put, and another is the expectation that you're going to return to normal. And certainly the Fed put, central banks still remain a ballast as best as they can, though I would argue that President Trump's shots at Jay Powell and the independence of the Fed take sort of a a bit of an edge off of that. But the idea that we're going to always return to normal is one that I would say right now is being called into some question. Is the current situation globally, Iran and more, Trump writ large, going to allow the system to return to normal, or is it going to be a new normal?
Isn't there a Trump put, though, given the fact that we have seen him on a jawbone, the financial markets and the oil markets? Doesn't that just prove that there is a threshold he's unwilling to take?
So there's always this narrative, I'd call it overly simplistic, to say, well, Trump looks at the stock market, and therefore when the market corrects too much, he changes policy. That assumes that the policy damage that's done along the way is just a temporary thing and it goes away and we'll just ignore that and go back to normal. And so my premise is even a Trump correction that allows the markets to say, whew, I can exhale, I'm going to go back to normal, is that always going to be the case? I mean, my big concern, I've got a lot of big concerns, but my big concern is if there were to be a global financial crisis, right? I'm not saying there's going to be, but, you can't rule it out. Is the world ready for a response function where the U.S. has affirmatively said, we're not taking the leadership role anymore? Is everybody ready for that? The U.S. is in charge, is the head of the G20 this year. Does anybody even remember the G20 exists? Right?
Can I ask you, though, do people seem more pessimistic right now than they did a year ago, or do they seem just the same or more optimistic?
A year ago was right around the time of Liberation Day.
Correct.
So that was mass panic about, oh, my God, he's serious. What does this mean? I think that the volatility born of the Trump administration is now something everybody expects. So more or less pessimistic. I think they were more shocked then and more pessimistic now. But I'm not sure pessimism or shock is a better or a worse characteristic to describe the mood of the meeting.
We had a test run. We had a global crisis in 2020. And President Trump was the president then. What's your assessment of how things worked out back then?
Well, I mean, the 2020 shock was certainly at a time when Trump was causing uncertainty in American leadership, but it was nowhere near where it is right now. I think Trump 1.0 people look back on, I mean, it's funny, there are a lot of Democrats who look back on the George W. Bush administration as the good old days now, right? Everybody goes to Dick Cheney's funeral and salutes him. That was not the case at the time. I think now there's a lot of revisionist history going on, and they look back at Trump 1.0 and go, well, it wasn't so bad.
Are you suggesting Democrats have figured out they need to stop pushing Republicans further to the right?
No, I don't think Democrats have figured out.
Okay, just throwing that out there. Right.
I think in general, though, I think that the damage to U.S. leadership done under the Trump administration 1.0 is qualitatively different than what's happened now. Both because Trump has affirmatively said, I'm walking away from NATO, I'm walking away from alliances, I'm walking away from everything. And at the time, his aversion to the WTO was big news.
Yeah, this is different.
This is different.
This is different. Doug, it's good to see you. Thanks for being here.
Thanks for having me.
Thank you, sir. Doug Rediker there of International Capital Strategies. Up next on the programme, a must-watch conversation with the Barclays CEO, CS Venkatakrishnan.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Three-day winning run on the S&P 500, a record winning run. A record on the S&P 500 for the first time since late January, and a 10% move plus off the lows of the last few weeks. On the S&P, we advance again by close to 0.1% on the Nasdaq, an 11-day winning run, the longest daily winning stretch going back to December 2019. On the Russell this morning, up by 1/10. In the bond market at the moment, later on, 60 minutes from now, jobless claims, another read on the labour market in America, yields on 10s at 4.2657. Pre-war, that was the upper end of the trading range for a 10-year to date. So we're back to those kind of levels. At the front end of the curve, still anchored by a Federal Reserve that, Lisa, is not set to go anywhere anytime soon.
Yeah, even if Kevin Warsh gets his position as Fed chair, I want to just note that Treasury Secretary Scott Bessent yesterday said that ultimately he would understand if the Fed needs to wait on rate cuts, given the fact that there could be potentially inflationary pressures. It's almost, an allowance, a free pass. You can go a little bit longer without trying to push on rate cuts, given the fact that inflation keeps running above
Such an odd situation with the Federal Reserve. We've been in Washington for the best part of 24 hours, and everyone I meet with have asked the same question. Why isn't the president taking the off-ramp here? He was offered an off-ramp to allow Chairman Powell to head to the exit, get his man at the top of the Federal Reserve Board. Overwhelming support in the Senate to get him confirmed. Senator Tom Tillis of North Carolina has already made that point. If the DOJ investigation goes away, he wants to confirm Kevin Warsh, and yet they're not taking the off-ramp on this situation at all.
The president's doubling down on what he thinks is gross misconduct because of the renovations. I haven't been able to get anyone to give me an exact definition or explanation of why he really does not want to take that off ramp, but he'd rather double down and have that fight. But it might mean that it's going to be a lot longer to get his pick at the top of the Fed.
And Chairman Powell might be sticking around beyond May. 2 hours away from the opening bell, let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John. Looking at the ADRs of TSMC this morning, now flipping into negative territory, down 1.8%. Despite the fact they had solid earnings that beat, they raised revenue guidance for 30%, said that they still have supply constraints going into 2027, but the stock is one that we know had been doing well, so some of that already priced in. Meanwhile, PepsiCo also reporting earnings, and they also beat on both revenue and earnings. They cut prices by about 15%. They were pushed also by activist investor Elliott to do so. So that's seemingly helping them with getting sales done. They also talked about overhauling their Gatorade brand for more health-conscious consumers, lower sugar, more hydration. That's what the market wants to hear. Apparently, shares up 1.2%. I'd also be remiss if I didn't bring up Allbirds, now Newbird, or whatever the AI company is called now. I mean, this thing was crazy yesterday, surging more than 580%. Saying that they're raising $50 million in a convertible bond sale in order to become an AI company. William Blair points out the wildness of this, that usually these kinds of companies need billions of dollars to undertake this mission. It's given kind of 2017 T Company says that they're a blockchain company to get a bunch of retail dollars flowing in. Either way, we're undoing some of it today, down 22%. But again, John, it was up nearly 600% yesterday.
That's exactly what I thought. Danny, thank you. I was thinking of the same thing from back in 2017, 2018 and all that craziness. My mother-in-law was the one person that messaged me yesterday asking if they still make shoes. So
ugly shoes.
That's like their target audience
I don't like
right now,
shoes.
right? Yeah, I don't think you're alone. That was the one person that raised that question. I didn't see anyone else ask it. And maybe that was the problem all along for the company. On our radar this morning, Alphabet eyeing a massive payday as SpaceX prepares to go public, an early investment in Elon Musk's company, positioning the tech giant for a potential $100 billion windfall at a $2 trillion IPO valuation. Just phenomenal. Elsewhere, US and Iran are weighing a ceasefire extension ahead of next week's deadline. Mediators working through the main sticking points, including the reopening of the Strait of Hormuz and the future of Iran's nuclear program. And finally, the Treasury Secretary, Scott Bessent, saying the US will not extend the general licenses on Russian and Iranian crude.
We will not be renewing the general license on Russian oil, and we will not be renewing the general license on Iranian oil. Because again, that was oil that was on the water prior to March 11th. Right. So all that has been used.
The waivers were initially authorized to ease crude prices. AMH pushed higher, of course, by the closure in Hormuz.
So within these 3-4 weeks, we've seen the administration take a very different approach. First, it was a lot of panic, it felt like, from the White House about making sure that every single country that needed access to products and oil was getting it. So they had these general licenses for Russia and Iranian oil at sea. What is interesting, though, and the Treasury Secretary and OFAC will never actually come out and say it. You have to get other countries to leak to you. They could do individual waivers for individual countries. And what I've been hearing is several Asian countries, especially India, has been lobbying this administration. So we need to be asking, will you do direct country waivers for certain products? AKA, can India continue to buy, say, Russian crude? It wouldn't be in a general license, but it would be an individual country waiver. I imagine that is happening, but they would never confirm it.
The fiscal markets are still super tight and the warnings are still coming from the IMF. We caught up with the IMF Managing Director, Kristalina Georgieva, just yesterday. She was warning that the war's energy shock will take time to unwind.
If the conflict persists and oil prices stay high for an extended period, we must brace for tough times ahead. March was a tough month, but April is likely to be even tougher.
March was a tough month for markets. April has been absolutely fantastic. Let's talk about that disconnect now with the Barclays CEO, CS Venkatakrishnan. Venkat, it's good to see you, sir. Thanks for being here.
Always happy to be here. Thanks for having me in Washington.
It's an uneasy calm, an uncomfortable calm. These warnings from the IMF, and then I look at the screens. I look at the Bloomberg terminal, all-time highs on the S&P, on the NASDAQ. How do you feel personally about that disconnect at the moment?
Well, I think that there is a short-term look-through in the markets, especially the equity markets, as to the prospects of both the war ending quickly and exuberant spirits and investments and IPO calendar and deals. That's what keeps the stock market going. But in the background, humming slowly, are the long-term consequences potentially of what's going on in the Middle East. And, you know, both the inflationary risks it can create as well as the growth risks on the downside, which is what will give central banks, pause as to how they deal with this situation. I think some of the liquidity concerns we're seeing in credit, and not everybody in AI is going to be a winner. These are the things that are humming in the background.
Well, let's pick out a few of these themes. The deal flow, the IPOs we could see this year. We are potentially going to see not one, not two, but maybe three of the biggest IPOs we've ever seen in the history of financial markets in the US. Do you see the situation in the Middle East in any way, shape or form potentially upending the deal flow that we could see, the IPOs, through the year ahead?
Not in a structural sense, because it could affect timing. Do you go this week or do you go a month later? But the companies you're talking about, let's just take one of them, SpaceX. These are remarkable companies that have been built offering important real products to the global economy. And the capital that they will get from an IPO is meaningful.
How real is this progress? This is something I've really had to wrestle with over the last 6 months or so. When the Anthropic CEO comes out every other week and makes some dire warning about the future for white-collar work, and now we are all hearing about Mythos and banks needing to work with it because it could potentially be incredibly dangerous for the financial system. What's your understanding of what's on offer right now? Is it part of the IPO roadshow, just a marketing effort to boost valuations, or is it the real deal?
Yeah. So first of all, on the first part of your question about the impact on workforce, I think it's really important for the large corporate employers like us to be very responsible in the way in which we use AI, both in terms of it's going to offer deeply personalized services, but they need to be using proper data and offering proper products to customers. And then the second thing is it's not just about efficiency, it's also about innovation, and we need to reskill our workers to make sure that they offer better products and better service going forward. That's one side. The second thing is the pace of change with AI and the capabilities that it's showing are really quite remarkable. So we've got to take every conversation seriously, including the Mythos one. And we have to assess what the impact of it is, and we have to assess how we can protect ourselves. So we have to take it seriously.
At this point, can you give a return on investment tied to the deployment of artificial intelligence throughout your ranks? Or is that going to be a sticking point with ongoing investment at the pace that we have seen in some of the big tech companies?
You know, it's a very important question, Lisa. And I think from the corporate side, I think, A, we have to adopt it. B, we have to invest in the infrastructure that allows us to adopt it at scale. And C, and this is the hardest part, we have to generate true end-to-end use cases that are high value, that take an old workflow and make it into a new workflow. That's going to be the hardest part. I believe value will come. I believe this is a great and deep technology, and we're going to do it from the point of what is needed and effective. But I think trying to put an ROI on any individual project is a bit of a fool's errand.
Which is part of the reason why people are derating some of the big tech names that are investing so heavily, because they can't prove that. A lot of people say the reason why markets are doing so well is because of how much liquidity there is in the market. And one big source of that liquidity has been money from the Middle East. Yeah. How much is that going to pose a problem going forward, given the fact that this area needs to rebuild and invest in itself in a different kind of way going forward?
Yeah, and I think the Middle East and Middle Eastern countries are obviously going to have a reconstruction bill at the end of this. But they're also going to have to rethink their defense systems, right, for decades in the future. And so you would imagine that some of the investment would be inward. But by the way, that's been happening for many years in the Middle East as they've been looking to de-risk themselves from oil dependence. Now, oil prices have gone up recently, but they're looking to broaden and diversify their economies. The UAE has done it. Saudi Arabia is looking to do it. So there has been more inward investment in the past few years than there used to be.
But now, do they offer a safe place for businesses to actually go there and offer this diversification thereafter?
Well, I think the attractiveness of the UAE, the strength of the Saudi economy will continue to be strong. And I think investors will appraise those risks that are happening now, but I think the sooner this war comes to an end, the easier that statement is to make.
Are all your plans that you had before the war for the kingdom and the Gulf writ large still in place? Like, are you still looking for that private banking license in the kingdom?
Yes, we absolutely are looking for a general banking license in the kingdom, and we're opening our regional headquarters there later this year. Those plans are in place, and we remain as committed as ever to the Middle East.
Can we finish on Europe and how things have changed? I've often been accused of being anti-European. I certainly don't feel that way. I feel very pro-European. I have not been very pro-European policy over the last decade. There's clear and evident mistakes that have been made by leaders across the continent. Do you see a change taking place on the continent and in the UK, a change in policy that would benefit the economy?
Yeah. Well, I certainly see it in the UK, about which I can speak a little more knowingly. I think the UK economy, this morning they had a very strong GDP print, and if March is flat, it's going to be a 0.7% quarter, the first quarter, which is quite strong, right, and on the better side of things. Gilts are now in the middle of a range of trading, but the UK continues to be business-friendly, invest in its economy in both the financial sector, technology, and biotech, is looking to diversify its energy dependence. I mean, it's going back to some more usage of oil and natural gas from the North Sea. And I think the UK continues to be an open economy trading with the rest of the world. Europe, on the other hand, has more to do in creating a more perfect union, if we can use the Washington term, in terms of certainly its capital markets, its banking system, and trade. So I think more to do in Europe. I'm pretty optimistic on the UK.
Venkat, appreciate your time, sir. Thanks for making time for us. Thank you. Thank you for being here. I know you're in a quiet period, so we can't talk about the financial results, but best of luck, of course, for the quarter. Thank you, sir. The Barclays CEO, CS Venkatakrishnan. On the Middle East, as a source of capital, important question, Bramo, that you brought up. Will Live Gulf be the first victim of that source of capital and the financial support that has come from the kingdom over the last several years?
Well, that's what the reporting is, that this is literally on a lifeline. So basically, without the Saudis, Live Gulf basically doesn't exist anymore. The timing is going to be interesting. I looked at the Live Golf schedule. I would never normally do this, but I checked it out. And in a few weeks' time, there is a tournament right here at Trump National in Washington, D.C. Would you pull the funding before you're about to host a tournament at the president's golf course?
It's a good point. I've not heard that point being made in the last 24 hours. Yeah. Plenty of speculation about the collapse of this golf league. I, for one, don't have skin in the game, of course, but I will say this. I want the best players all playing on the same tour. And the fact that the likes of Bryson DeChambeau has been playing somewhere else and hasn't been playing on the tour, I think has been a loss for the golf world over the last several years.
So I didn't understand anything you just said, but it's clear to see you want the Saudi
Arabia.
You got to check.
We were smiling, so I thought that, you know, you were coming along for the ride.
I know exactly what you're talking about. I think that you're right. I think a lot of people
because of the memes. I understand exactly what's been going on now between PGA and Live, because the memes on FinTwit are fantastic.
OK, let's move on. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hey, John. Europe has 6 or so weeks left of jet fuel. That's according to the head of International Energy Agency, Fatih Birol, telling the AP that flight cancellations could escalate soon if oil supplies remain blocked. He went on to say that the front line is Asian countries, with Europe and the Americas to follow. Blue Owl posting its biggest 2-day gain since November 2022. This comes after PIMCO reportedly purchased all $400 million of bonds issued by a Blue Owl private credit fund on Monday. Sources telling us here at Bloomberg that the bonds were relatively sold at a cheap valuation, and the move represents a vote of confidence for the private credit industry. And the Saudi-backed Live Golf League could be on the verge of a major crisis. The Wall Street Journal reporting that Saudi Arabia's sovereign wealth fund may pull almost all the funding from the league that drew star golfers away from the PGA Tour when it launched in 2022. For now, Liv's operations are set to continue as scheduled. And that's your Bloomberg brief. John?
Isabel, thank you. Thank you for the update. Up next on the program, confirming Fed Chair Kevin Warsh.
I am very optimistic that Kevin Warsh will be the chair of the Fed on time. Let's get to the hearings and see where we are then.
Up next, we'll catch up with the former New York Fed President Bill Dudley, live from Washington, D.C. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Stocks doing okay, better than okay over the last few weeks, that's for sure. 11-day winning run on the Nasdaq, on the S&P 500, a record-breaking run, a move of more than 10% off the recent, and I stress recent, equity market low. Equity futures on the S&P up 0.1% on the Nasdaq, up by 0.2. Under surveillance this morning, confirming Fed Chair Kevin Warsh.
I am confident that the process that we've laid out in terms of Kevin Warsh becoming the next Fed chair. He's going to have the hearing on the 21st of this month. He's a great candidate. We know that the Republicans on the Senate Banking Committee are aligned in that, and I am very optimistic that Kevin Warsh will be the chair of the Fed on time. Let's get to the hearings and see where we are then.
So here's the latest this morning. The Republican Senator Tom Tillis telling CNN he's still planning to block Kevin Warsh's nomination. The ongoing DOJ probe into Fed Chair Jay Powell clouding the confirmation process. The former New York Fed President, Bill Dudley, joins us now for more. Bill, welcome. And this is a difficult question to answer, so forgive me. We go straight to the realm of speculation. But if you had to guess what the FOMC looks like in the month of June, what would you guess it's going to look like?
I assume that somebody's going to blink. Either the Trump administration is going to withdraw their investigation of the renovation of the headquarters building, or Tom Tillis is going to decide that he will align himself with the Republican majority in the Senate Banking Committee and vote to affirm Powell. But we're not sure. And if they don't, if Tillis doesn't withdraw his objection, if the Trump administration doesn't stop the probe, then it's very likely that Powell will stay on as the acting chair. At that point, Trump has threatened to fire Powell as the acting chair, and it's not clear legally whether he has the authority to do so. So it's a bit of a mess. It obviously makes the job for Kevin Warsh also more difficult, not just because of delaying, potentially his taking over from Powell, but also he's going to be viewed with quite a bit of skepticism, I think, by the rest of the committee. Is he there to do what's appropriate for the Fed in terms of the conduct of monetary policy, or is he there to do the president's bidding?
So, Bill, these are important questions, and we all take seriously the threat to central bank independence. But I think we also take comfort from how well anchored inflation expectations have been throughout all of this. Do you see anything on the horizon that might upset some of that?
Well, inflation's expectations are anchored in part because people think the Fed will do the right thing. So it's not independent of the Fed's behavior. So I think that people would be very upset, I think, if Powell is somehow fired and it goes into the courts and it has to be adjudicated. Kevin Warsh, I think, is going to have to win the hearts and minds of the rest of the Federal Open Market Committee. I think it's very unlikely that the Fed's going to cut rates in June. I think with headline inflation going to be close to 4% on a year-over-year basis, then I think the sentiment is going to be to watch and wait, and in part to ensure that inflation expectations do stay well anchored.
We saw yesterday Treasury Secretary Scott Bessent came out and took the heat off of Kevin Warsh should he become Fed chair by May 15th, as is expected, or at least scheduled, saying that he would understand if the Fed needs to wait on rate cuts, even if he ultimately saw large cuts beyond that. How do you see a Treasury-Fed accord working together to shrink the balance sheet and reshape the way that the Fed controls rates at the front end and the shape of the curve?
I don't think they're going to change how they execute monetary policy. I think they're going to remain in a regime where reserves are above the supply of reserves is above the demand for reserves. What I think they're going to do is make some changes structurally that reduce the demand for reserves. And if the demand for reserves can come down, then the supply of reserves can come down and the balance sheet can shrink. But I think what's probably being exaggerated a little bit is how much restraint that will cause. If you shrink the balance sheet by, say, $1 trillion, which is probably the order of magnitude that we're talking about, it's going to exert very little real restraint on the economy. So the idea that balance sheet reduction can lead to dramatic declines in short-term rates, I just don't think that's credible.
I remember back in 2021, you came on the show and you said that 10-year yields could be at 5%. You could see Fed funds rates at 5%, given the inflation building in the system. Right now, do you think that people are overly sanguine with just how much inflation is building in the system as a result of the commodity shock stemming from the Middle East?
Well, I think that it's correct for the Fed to think of this as a temporary shock, that energy prices are probably going to go back down in the fullness of time. But I think they're constrained for two reasons. Number one, we've been missing the inflation target to the upside for 5 years in a row. So every month and year you stretch that out, there's more risk to inflation expectations. And number two, the Fed's independence is under attack. If the Fed's independence was not under attack, the risk to inflation expectations would be significantly lower.
Bill, it's good to see you. Thanks for your stern conversation there. Bill Dudley there, the former New York Fed president, some pretty pointed opinions on the future of this central bank and the threats to independence that we've seen building from the administration this year.
Right, but as you've pointed out, it's not actually showing up in financial markets. Financial markets don't really feel like there is a threat to independence. On the other side of that, is Jay Powell also himself threatening the independence if he stays on as a governor until 2028?
Dependency issue. Someone messaged me that yesterday, I forget who, but a dependency issue. Is the chairman creating a dependency issue where we associate central bank independence with one man on one committee, and how problematic might that be once the chairman does step away?
Well, it would be problematic because it's a deliberative body. It's a deliberative body, which is why people don't think even if Kevin Warsh was tapped to lower interest rates, he's going to be able to come in and do it right away, immediately.
Right now, I'm just watching this, and I'm watching this play out in Polymarket. And right now, you have the lowest chance ever of Kevin Warsh getting confirmed by May 15th, which is the time when he should step in. And right now, you have about, I believe, a 31% chance that Fed Chair Jay Powell will not be on the Board of Governors by May 30th. So it's definitely setting up for, the rich housewives of, Washington, D.C.
Is that what we're calling it?
Or bachelor, or whatever you want to call it. But it definitely feels like, it's sort of one drum over here and markets are over here saying, tell me when it's over. At what point do you get sort of a confluence of those types of
ABC should buy that, no bachelorette this year.
I think that
they should buy that.
Washington, D.C. drama.
Yeah.
That is actually a very good idea.
We haven't talked about that, have we? Huge news for networks in this country.
So there's no roses. We're not going to.
There you go.
No roses.
We should do it at the Federal Reserve.
That would be fun.
That would be a great way to correct that. Coming up on the program, Franklin Templeton CEO, Jenny Johnson, Michael Morris of Guggenheim, Jonathan Pingle of UBS, Mona Mahajan of Edward Jones. From Washington, D.C., the third hour of Bloomberg Surveillance, up next.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
U.S. exceptionalism is not going away.
There is an awful amount of good news already priced in.
Investors have been very cautious about missing this.
The earnings power are there. Estimates for cyclical earnings are most likely too high.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from the nation's capital this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P, positive by 0.1%, adding to a three-day winning streak on the S&P, adding to a record-breaking run, a move of more than 10% off the equity market lows of only the end of March. On the Nasdaq 100, higher over the past 11 sessions. The previous 11 sessions driving the Nasdaq 100 to a new record high. Make it day 12, Bramo, and you've got a winning run we haven't seen for quite a while.
Yeah, if you make it 12, it's, we're going back to 2017. 14, we're going back to 2014. And people talk about how it's unprecedented, the violence of this move up in terms of how big this rally has been to new record highs since a 5 to 10% drawdown. I mean, that is the fastest kind of recovery that we've ever seen. So is it real? Is it a disconnect from reality? We've been talking about that all this morning. Or does this highlight just how much energy there was under the surface that perhaps wasn't being appreciated earlier?
Renewed enthusiasm for the tech trade, particularly here in the United States, also in South Korea. The Kospi has had a massive run again for this month, encouraged by the outlooks from ASML, but more so from Taiwan Semi overnight, lifting their outlook, supporting the tech trade. Is it renewed confidence in that, or just comfort with the situation in the Middle East? I would have to say it's difficult to be comfortable with the situation in the Middle East. The fragile ceasefire that might be extended another 2 weeks, that would take you into May. That would mean this has gone on for more than 2 months. And a key question would be, if we extend the ceasefire, are we reopening the Strait of Hormuz or not? Because at the moment, we've got a ceasefire, but we also have a blockade.
Yes, we have a blockade, and at the moment, you are not seeing the normal flows of energy. And I would even say might have this extension of a ceasefire. There has been reporting that they are engaging potentially to have this extension, but Caroline Leavitt was pretty direct yesterday. She said all the reporting was false, and there hasn't been a formal request from the United States to extend the ceasefire. So we still have to wait whether or not this is going to be extended after April 22nd. And the real question is, if there's an extension of the ceasefire, does this just mean what we're seing right now, which is we're not seeing a lot of facilities hit and a lot of drone strikes, et cetera, or we actually see the Strait of Hormuz opened. Even if it becomes open, it's not going to be the level of volume you were used to.
What I'm struck by is the number of people who are saying even if the Strait of Hormuz is not reopened in full, they still will see this rally continuing because just less bad news is enough. And I think that that's telling. You could say, okay, that's complacent and that's just simply the ignorance of markets. I'm going to just stick up for markets here for a hot second because ultimately the world has changed and certain pockets are not as dependent on some of the policies and some of the products coming out of the Middle East, including the U.S. So people are saying if I can game out what the risks are, I can invest once again because there's a lot of potential upside.
The scariest thing that's happened in the last month, do you want to know what it is? You know exactly what I'm going to say.
Yeah, but I was talking as a representative of the markets, defending markets and being positive.
I know. I'm doom and gloom. The world order has changed.
That's happened in the last month.
Well, starting may never go back.
I'm
when
contrarian.
Did you become bullish?
I'm not.
When did this happen?
You know,
this is going to freak a lot of people out.
I'm just not seeing the same kind of pessimism coming through in the earnings picture and the adapting and the adjusting. I feel like Tom Keene has just been incredible. I don't know what happened.
Now
I think I'm going to leave. I think I'm going to leave right now. I think I'm done.
I was constructive on the outlook, and now I'm questioning everything that I believe.
All right, that means your sell everything moment just happened.
Coming up, Franklin Templeton CEO Jenny Johnson on a record-breaking rally. We'll speak to Michael Morris of Guggenheim, looking ahead to Netflix earnings, and Jonathan Pinkel of UBS breaking down the latest jobs data. We begin this out with stocks rising following a milestone session that saw the S&P 500 close above 7K and driving another record high. Franklin Templeton, the CEO. Jenny Johnson joins us now for more. Jenny, good morning and good to see you here in Washington.
Good morning. Great to be here.
That disconnect, I'm sure you've pondered the same disconnect a million times over the last month or so. Does it feel uncomfortable to you? Do you take Lisa's view of the world?
Well, first of all, I mean, sadly on this, there are winners and losers, right? You know, if you're an oil exporter, this is actually pretty good for you, right? And we're talking about the S&P 500, so you're talking about U.S., right? We are now energy independent, so that's helpful. We've got a really strong consumer, and I can share some data that I think is important. And I think that the AI, again, it hasn't yet, in the productivity gains that we've seen, none of that is from AI. That is from tech that was introduced 20 years ago that takes time to get in the system. And so you're going to continue to see, I think, companies be able to increase their margins because of and if they have to increase their price because of the inputs, and we know that with the supply chain adjustments, they might be able to actually absorb it because of the productivity gains they get with AI.
So 2 points there, one on the consumer and one on tech. So let's split them up. Let's start with the consumer. What are you seeing in the data?
So it's interesting. So we have about 280 billion private markets. So we actually get, our secondaries gets information on 55,000 private companies. And so they're getting updates. Now, there's a little bit of a lag on that. But our real estate and our private credit, like our private credit, they would tell you they're middle markets. That kind of tells you I think the real core of the economy. They see companies, they don't see any real increases in delinquency, so they're not seeing stress there. And they're actually seeing them outperform their projections, right? So that tells you that it's pretty strong. Our real estate, the only place I'd see a little bit of weakness is that in some markets, you're seeing new leases drop down a little bit, but others you're seeing it strong. So the data still feels like the economy is very strong. The consumer, I was at a session with a bunch of CEOs yesterday, and one of the retail firms said, gosh, I have a disconnect between what the Michigan consumer sentiment is and what we're seeing.
Part of the reason why might be something that DataTrek pointed out this morning in a note, which is this data compiler and data firm saying that U.S. corporate profits have been growing faster than the domestic economy since the year 2000, and they've been outpacing American workers' benefits from this economy for that same period of time, and that gap has never been wider. I mean, at what point are we seeing a dispersion between corporate America and the S&P 500 doing fantastically, even though the economy might not be keeping pace, at least not in the eyes of a lot of different individuals?
Well, I think this is the challenge. Anytime you get new technologies that get introduced, and I always describe, there's a great picture of Wall Street around the 1900s, and there is one car and all horse and carriages. 10 years later, it's all horse and carriage. I mean, it's all cars and one horse and carriage. And I'm pretty sure the guys that were maintaining the horses didn't suddenly become mechanics, right? So there's a period of time that you have to adjust, and we're going to have to go through that. But I'm an optimist, and I look at in history, every time there's a big technological advance, there is this prediction about the American or the worker is not going to be able to adjust, and they do adjust. And you have to remember with AI, suddenly the skill sets that you had to learn, if you couldn't afford a really expensive education, you were left out. You couldn't be a programmer. Now, honestly, the benefit goes to those who are creative. I think it's really important that companies, not only for their own benefit, but also for America, that we teach people how to leverage these tools.
So just to go back to that analogy, it's fine if there's one car and lots of horses and buggies, if one guy driving the car feels pretty happy and just wants to stay in his lane. It's another thing if that car just wants to go run over everything else, which is sort of the fear of some of the technology, right? And this is sort of the fear.
This is what we like to hear.
Feeling normal again.
Well, no, I'll explain my bullishness about other stuff in a second. But I'm just curious, going forward, what is the fear that the disruptors and the sort of nefarious element tied to AI and mythos and some of these cybersecurity issues could outpace and disrupt some of the progress?
It is for sure a risk. Let's talk about mythos, because I know everybody's kind of worried about it.
Nobody wants to talk about it, so please talk about
it. So, here's why I ran the technology department. Before you ever introduced new software into your environment, you do what's called an ethical hack. You hire people to say, go in and try to break into my system. The challenge with that is that's a one-time event. So once it's in, you sort of assume that it's okay. And believe me, I think you get an update every week from Microsoft saying, oh, we found a vulnerability. Please, load in the latest fix. Imagine in an environment being able to run an agent full time that is constantly trying to find your vulnerabilities. That is actually going to be a benefit. Now, you could say, well, you got to race faster than the bad guys doing it. But if it's always in your environment, and by the way, it's in your environment. So the first thing they have to do is get through all of the layers. And the way you run technology security is in layers. Somebody might get through the first fence. You're hoping they don't get through the second fence before they get to something that's important. And so if you can run this all the time, I actually think that's going to be an advantage to businesses. It's just scary when you're first, sort of thinking about it. And the other thing is, once these things get out there, they do get out there. It's hard to contain the technology programming that's, so the bad guys will get it eventually. You hope that we can get this rolled out to some of the businesses. They start to build these agents. They work with, Anthropic to build them. And then I think that they'll be less vulnerable.
Isn't the concern is right now that some of the adversaries are embedded in it or could be embedded in it right now at the starting steps?
But that's always the risk, right? I mean, I think companies have seen where, you have an employee that's hired. If you don't do enough check around it, we had a situation where an employee was hired as a contractor, and our security group found that they were trying to send data out, right? I mean, that happens all the time. You always say you're most vulnerable is potentially your internal employees. You got to make sure they're trained, and you have to build a system of layered security where you're analyzing patterns, and AI gets better at that. You're analyzing patterns all the time to say, is something changed? And that will tell you, hey, there's an alert, you need to look at something. And so the key is you've got your core data here. You may not catch them on the outside. You may not catch them here, but you're going to catch them before they get to it. And that's the key to any kind of a security environment. That's also why we don't like to share our architecture, because it kind of tells people how to get along. So anytime the government's like, oh, you need to show all your security, that's a disaster. You don't want to do that. You need to keep that very private.
Jenny, there is an industry dedicated to criticizing U.S. policy, but much of the innovation that we're talking about right now is coming out of the United States. Dare I say, is this the return of U.S. exceptionalism with these all-time highs in this equity market, or is that too premature?
Look, I think we haven't lost U.S. exceptionalism. We are incredible innovation. And I don't know that any of us can fully understand why the ecosystem of Silicon Valley hasn't been replicated throughout the United States. Like, there's something special about that. Austin's got a bit, Boston's got a bit, but still Silicon Valley continues to have it. And honestly, in China, Shenzhen and Hangzhou, both of those are pretty exceptional. But for some reason, it's about universities, it's about capital, it's about creativity. It creates this ecosystem. So I think that, the U.S. has never lost their exceptionalism.
At times, despite policymakers' best efforts as well, particularly in California, right?
Well, that's true. And actually, in fairness, Silicon Valley has gone through its ups and downs. Although I recently saw that office space was going at a new record high. And when you take a look at some of the housing, talk about coming back. So, I mean, talk about the innovation engine there.
Real turnaround. Jenny, this was fun. It's good to see you. It always is. Thank you. Jenny Johnson there, the Franklin Templeton CEO. There has been a briefing taking place at the Pentagon. We've heard from the Defense Secretary, Pete Hegseth. Let's cross over to Tyler Kendall, who's been tracking that from outside of the White House. Hey, Tyler.
Hey, John. Well, the briefing is ongoing, but Secretary Pete Hegseth started his remarks by renewing a threat that the U.S. is, quote, locked and loaded on dual-use infrastructure, referring to the prior option that the U.S. could go after power plants and bridges that they argue serve military purposes. However, Hegseth says that at the moment, the U.S. military doesn't want to pull that option and instead pursuing this blockade in the Strait of Hormuz, which he called the, quote, polite option, also adding that the U.S. is prepared to maintain it for as long as it takes. He also noted those renewed economic pressure points that the U.S. Treasury Department has been rolling out, including the Treasury Secretary yesterday, saying that the U.S. is now working again with Gulf countries to freeze additional assets of Iranian leadership in their banking systems. John, at this point, the headlines are still coming in, but Hegseth also did maintain that the U.S.'s public red line is that Iran cannot have a nuclear weapon amid questions on how these negotiations are going to go, with the sides publicly still very far apart.
We'll keep tracking that briefing. Tyler, thank you. Appreciate the update. Tyler Kendall there from outside of the White House. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. Alphabet's early investment in Elon Musk's SpaceX is positioning the company for a massive windfall. New filings show Google owned just over 6% of the rocket company at the end of last year. At a targeted $2 trillion IPO valuation, that stake would top $100 billion. Charles Schwab shares are falling after reporting first quarter earnings. Total new assets jumped nearly 6% from a year ago and topped estimates. The brokerage had faced headwinds in the quarter on fears over AI disruption. And talks are scheduled today between Israel and Lebanon. According to an Israeli official, the country's prime minister and the president of Lebanon will speak following ambassador-level talks in the U.S. earlier this week. Those were the first direct discussions between the two countries in more than 30 years. That's your Bloomberg brief. John?
Isabel, thank you. More from Isabel in about 30 minutes' time. Up next on the programme, the Morning Calls, plus Michael Morris of Guggenheim looking ahead to Netflix results from Washington, D.C. this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
Does the Iran war really matter that much to the global earnings outlook, particularly to the earnings outlook of the S&P? I don't think what we've seen in the last 11 trading sessions is the irrational reaction. I think actually what was irrational was the really sort of the 20% derating and compression that we've seen in S&P multiples at the beginning of the war.
I think it's still early, but I give so much credit to the equity market bulls that just stuck with it, stayed overweight. Max Kettler of HSBC being one of them. I think of Barclays and Venu over there, who lifted his outlook, his price target on the S&P 500 in the middle of a war, when crude was north of $100 a barrel and people were genuinely freaking out. He was just looking at earnings expectations getting better and not worse. And as far as he was concerned, breaking down the numbers and saying that's a reason to be bullish here, not bearish. That's what's kept this market pretty anchored. It's what's driven gains off the low of more than 10% on the S&P 500. It's why we sit here this morning at all-time highs. And up at least for another 10th of 1% on the S&P.
Yeah, so here, just to clarify, I'm not wholesale bullish, and I'm not being completely ignorant of everything that's going on. It's just that with supply shock after supply shock, the companies that have been successful and gotten bigger have management teams that are really smart. And you see this in a consistent way. It doesn't necessarily reflect underlying strength necessarily, even of the U.S. economy, because you're seeing that divide get wider. But what it is highlighting is the ability and the resilience to innovate among some companies. So it doesn't necessarily represent the underlying economy. In fact, that gap, again, seems to be growing.
It's that line from Savita, once again, never underestimate the resilience of corporate America. That's the price action. Let's get you some morning calls. First up, Bank of America raising its price target on Morgan Stanley, saying management's messaging on resilience should boost investor confidence. Your second call from Raymond James upgrading Okta to outperform, saying, quote, a forward waterfall should lead to growth upside. And finally, JP Morgan lowering its price target on Keurig Dr. Pepper, saying the stock remains in purgatory. Let's turn to earnings. Netflix reporting first quarter results after the closing bell. Investors looking for insight into the future of streaming. Geetha Raghunathan of Bloomberg Intelligence joins us now for more. Geetha, welcome back. What are you expecting a little bit later?
Yeah, thank you, John. So the big story, obviously, is that they've dropped the Warner Brothers Discovery bid, and it's really, business as usual for Netflix. So they're no longer reporting subscriber numbers. So the key metrics that we watch for and the street is looking for is really revenue growth. They're guiding to about 15% revenue growth for the first quarter, which we think they'll easily achieve. Remember, they just raised prices in the U.S., so that should set them up for a good path to revenue growth for the rest of the year as well. They've guided to about 12 to 14%, but we think that they can up guidance for the full year. Again, that really just goes back to prove the underlying, fundamentals and the strength in those fundamentals. And then, of course, John, the other big number that we look for is operating margin. And we think there is a chance that they raise guidance for operating margin as well as free cash flow for this year as well.
Geetha, always appreciate your input and looking forward to breaking down the results over the next 24 hours. Geetha Raghunathan there of Bloomberg Intelligence. Michael Morris of Guggenheim remaining bullish on the stock, writing, we maintain our buy rating and view the first quarter call as critical for understanding management's strategic priorities. Michael joins us now for more. Michael, welcome back. Let's get your input on things. How distracted has this management team been by the pursuit of another company?
Oh, thanks for having me this morning. I think the answer to that question is that they have not been terribly distracted, okay? Clearly, the initiative to pursue Warner Brothers Discovery was a big deal, and senior management was very focused on that. But the company was consistent throughout the process, and on the conclusion of the process that this was one of their initiatives. It was an opportunity. It was a nice to have, not a need to have. And that the balance of the business was really running, as I think you said, it business as usual and focused on the areas that they wanted to grow. And you saw some of that come through in the first quarter with some new content initiatives and other items, the pricing action that were really independent of the bid for Warner Brothers.
I think for some investors, Michael, they were happy with the outcome of that pursuit. Happy because this stock is up by, I think, 9% in just the last 6 days and had a rally as soon as that news broke as well. Michael, I'm always interested in pricing power in general for the broader consumer and price tolerance. But for this company specifically, how much pricing power, Michael, does it actually have?
I think that there's still runway for pricing, but the story does get a bit more complex, right? They are clearly the bellwether in the industry. They're at the higher end of the pricing curve for their premium product in their mature markets. They did just take a pretty meaningful price increase, $2 on their highest end product in the U.S., which signals management's confidence in their ability to achieve those pricing-driven goals. But when I say it's complex, it is because they are growing that advertising-supported tier, which really gives consumers options with respect to how they compensate the company for the great and growing amount of content that they're putting on the service. And really, as the company grows the number of users on that advertising-supported tier, the curve sort of steepens with respect to their ability to monetize it. So it's not a one-to-one relationship, but as they grow their scale and reach within their advertising base, they can actually grow their revenue per user on that platform. So launching that service or that element of the service a couple years ago was really important for their overall ability to impact that pricing dynamic, in addition to continuing to try to grow the subscriber base.
Do you think that they're going to try to grow their subscriber base inorganically, given the fact that they were interested in Warner Brothers? Will there be another suitor potentially in the near future?
I'm skeptical that there will be. It's not something that we've written about specifically, and there's nothing really in the press to indicate that they are doing something outside of what they said was that this was a unique situation, a nice to have, not a need to have. So when we look at the key initiatives for the business right now, it is increasing their content spend. They talked about a 10% increase. That puts them close to $20 billion of content spend this year. We're looking at diversification of how they spend. They've done more live events. They've added sports, particularly outside the U.S. We do think they're looking at potentially expanding their NFL relationship inside the U.S. and different types of content, right? They have some of this podcast content. They've expanded the games, and they are expanding a live partnership in Europe in the French market this year. That should be rolling out later this year with TF1. There really could be a template for more partnerships that they could do broadly in the future. So the core business is strong. We think it's healthy, but we also like the potential for another gear that's really not yet in the numbers or expectations for the business. And I think they can achieve that without needing to make an acquisition. But Netflix is sort of famous for the never say never approach when they give us some guidelines for how they're looking to the future.
Just quickly, how long, Michael, before we get commentary from the likes of Netflix saying they're lowering their production costs by using AI?
Well, I think it's as early as today, right? So I think that Netflix has been very clear that the use of AI is going to be part of their process, but their view is not disruptive to the creative process. So they're still very focused on being creator friendly. I think not just to be sort of good corporate citizens, but they do believe that human created content and artistic content is core to what they put on the platform. That said, there are opportunities throughout the process to enhance the product using AI features for things that perhaps were more costly and more time consuming in the past. So they made an acquisition during the quarter of a business that allows them to do much more production and post-production related projects or processes in a more efficient way. And it's early days, so we look forward to hearing how the company expects that to benefit them. But it is absolutely part of their process, and we will be hearing more about that.
Michael, good to see you. Looking forward to the results a little bit later. Michael Morris there of Guggenheim Securities. I've seen some good content over the past few weeks. Haven't you?
Netflix?
No, from AI.
Oh, from AI. Oh, yeah, AI is all over.
Some pretty good stuff.
All over Twitter. It's amazing.
We'll get you some data up next. Jobless claims. Plus, we'll catch up with Jonathan Pingle of UBS.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Live from Washington, D.C., from the nation's capital this morning for the IMF World Bank spring meetings, at least for the next 24 hours or so. Temporarily had some people reaching out about the studio.
Well,
so
yes.
They preferred the New York studio.
Well, you mean so that we don't have to go, hello,
yes,
how are
yes.
you? Well, it's okay. It's just a couple more days.
Different flavour. We'll be back in New York in a couple of days. All right? Let's get you some jobless claims. Some data just crossing in just a moment. Equity futures positive going into that. We're up by 1/10% with that economic data. Enda Curran has the numbers for us. Good morning, Enda.
Yeah, good morning. Jobless claims of 207,000, Jonathan. That's below, actually, the market estimate of 219,000. So it speaks to the idea that the employment market continues to be one of low hiring, low firing. These numbers lean into the stabilisation theme. There can be volatility, of course, at this time of year with the Easter break and with spring break, etc. But just having a quick glance at the headlines that I saw coming out there, it does speak to the idea that the jobs market is finding its feet. And remember, the backdrop was the official data for the month of March, that we had very strong job gains, broad-based, unemployment rate falling. So I don't think these numbers this morning would necessarily lean into a near-term dovish case for the Fed.
207 is just absolutely phenomenal. Enda, I just want to sit on the 207. I know this is a low hire, low fire jobs market, but 207K, can you frame that for us, Enda, for people that maybe don't follow the labour market as closely here in the US, just how low that number is?
Well, it's historical lows, Jonathan. I don't have the exact size and scope for you now, but I know it is historical, and it speaks to the idea that despite, all of the concerns around the economy with price pressures, with the oil shock story, etc., the jobs market continues to hold up, and as long as that's holding up, it's good for the consumer. The big question, though, is going forward, will we start to see the impact from the diesel costs, from the fertiliser costs, from the gasoline costs, and will that start impacting business budgets and the households, and will they rein in their spending? And by extension, will we see a hit to the labour market in the months ahead? We don't know yet, because we don't know how the war will end up. But right here, right now, by all accounts, the jobs market, which the Fed said in January, by the way, is clearly showing signs of stabilisation.
Enda, it's good to see you. Thanks for breaking it down. We'll catch you a little bit later. Enda Curran there, breaking down the latest jobs number. Jobless claims at 207. The estimate was 213. This is down on the previous week as well. And every time we talk about jobless claims and continuing claims, what do they speak to? Low hire, you see that in continuing claims. If you're out of a job right now, it is hard to get a new one. Low fire, you see that in initial jobless claims. Every single week, Lisa, we've been talking about the same thing for a number of weeks now. Going back, I would say more than a year.
Yeah, and on one hand, some people could say this is a sign of strength. A lot of people would say this is a sign of strength. Just to give you a reference point of how low it is. From 2010 to 2019, the average was 306,000 per week, just to give you a sense of the initial jobless claim. So this is substantially below that. On the flip side, you could say this is a supply-side issue, and this really is a demographics issue, given the fact that we've actually seen a contraction in the population for the first time since the 1950s in the United States. So how much is this a supply-side issue that, ultimately you need need your workers, even though you might not want to expand, even though there aren't that many jobs that are prevalent for people who are out of work.
On that point, Jonathan Pingle of UBS Investment Bank joins us now for more. Jonathan, good morning. Good to see you.
Good to be here. Thanks very much.
I think the point that Lisa's making is a really important one. We've been talking about a series of negative supply shocks. The more recent one is the energy shock in the Middle East. The one that's pertinent to this conversation is the labour market shock. A massive negative supply shock. What is the break-even rate for this jobs market right now?
Well, I mean, so we've got a bunch of estimates, the break-even rate, because you can do it a lot of different ways. But I mean, we would expect the break-even rate is probably about 25 to 50,000 jobs a month. I mean, we have had a big slowdown in the immigration flows across the southern border. We've seen an increase in exit migration. Now, there are a bunch of open questions for the coming year. This might be a little in the weeds. The Trump administration through September actually was approving legal immigrant visas at a 600,000 annualized pace. And that had not really fallen off since the Biden administration. This year they've tried to put in place sort of other restrictions on family reunifications, et cetera, that could make that worse. But I think if you look at the overall array of economic data on the labor market, where we have seen work weeks pull back, if there really was like people not showing up for work, you'd expect existing workers to work longer hours. So I do think there has been a pullback in labor demand. There's probably been more than the drop in labor supply here. But, we're certainly living in an environment where we've had really low job growth, and yet the unemployment rate's basically been stable for the last year.
So this is the important question. We've asked it a number of times over the last 12 months or so. We've seen a real deceleration in payrolls, but have we seen a corresponding increase in labour market slack?
Over the course of the last year, yes, we have. I mean, if I look at things like whether it's what we've seen in people out of the labor force, if I look at work weeks, and even the unemployment rate itself has edged up over the last year, but not in any kind of alarming way for the FOMC. But I mean, we do have to think about some of these other margins of slack. I mean, if the participation rate last month had not fallen back, the unemployment rate would be 4.51%. We'd be having a somewhat different conversation. Now, I think the other caveat to that is the extraordinary volatility we've seen in the labor market surveys year to date. I mean, non-farm payroll employment swinging up 160,000, down 133, some of that due to the methodological changes. And if you look at the household survey, March had the lowest all-time survey response rate. So you've basically got, 40,000 households being interviewed, trying to be representative of a nation of 334 million, right? But smoothing through all of that, it does look like there's been on-net slackening since, sort of January, February last year.
And one of the key data points that people point to represent that is the wage increases, and they've actually slowed. And you've seen the slowest pace of wage increases, I believe, going back to 2021. And I just wonder how much power the labor market has, how much power employees have to ask for raises in response to the increase in commodity prices, the increase in inflation, et cetera.
Well, Lisa, you were talking about this earlier, right? I mean, you were talking about corporate profits and the share. So, essentially, if you flip that around, that calculation you were talking about around, right, you're talking about sort of labor share of national income, and it's sitting near all-time lows, because of sort of the lack of bargaining power. And I think this goes to the fact that, even with the reductions in labor supply, it does not look like an overly tight labor market. Most FOMC participants are not, even the hawks are not saying the labor market's a source of inflationary pressure here. But yeah, I mean, you've got average hourly earnings in real terms, below sort of the expansionary levels post-GFC. So, it does not look like we've had some sort of fundamental shift in bargaining power here. And in a service sector economy with a lot of bilateral contracts, low levels of unionization, I mean, we can sort of see that nominal wage growth has slowed and workers don't have a lot of power here.
At what point does this break down? The idea that you have corporations that are building their market capitalization and their profits at a disproportionate pace, at a record pace relative to the employees' share of it. At what point does that create a fundamental problem for the economy?
Well, welcome to Washington. I mean, this is the truth, right? We're living in this world of gridlock, populism. I mean, you've hit the nail on the head here, Lisa.
Okay, but when does it have an economic read-through? I mean, when does it have something that comes out in Wall Street earnings, in Wall Street parlance, where people start to care on the economic side?
Well, this does come through in economic parlance. If I walked around our floor of equity analysts at UBS, not all of them are telling super strong economy stories. If you look at certain segments of the consumer, remodeling, I mean, we can talk about what's happening in the AI-related tech stocks, which are driving a lot of the investment and growth in the economy. But it's not all puppy dogs and rainbows out there.
When it comes to gridlock, how are you thinking about the Fed in May 16th?
Oh, that's a good question. I mean, it is going to be unprecedented territory. There is a gap in the law that it's somewhat debatable on what you think the Vacancy Act says. But, Chair Powell certainly has staked out, both his intention and what he thinks is the legal basis to stay on until Kevin Warsh is confirmed. I think he will have a fair amount of support on the committee and amongst the Republicans in Congress for that stance. But I think the real open question also is whether the Department of Justice probe gets resolved. But it does look like we're going to have this gap where Chair Powell's term ends May 15th, and there's not going to be the nominee just entering the building.
The other question is, do you think he stays on as a governor?
I think he stays on as a governor until everything's really fully resolved. I think that he does have a fair amount of support on Capitol Hill. And to his credit, as his time as chair, I mean, one of the reasons he's got a lot of deference from his committee is because he has spent a lot of hours pounding the pavement on Capitol Hill for the sake of the institution. And I think that's brought a certain amount of goodwill from both parties. So I think as long as there's this, sort of lingering political risk, I think he's going to want to stay on as governor just in order to, maintain that kind of political economy.
Is this making Kevin Warsh's job harder?
I don't know if it's making Kevin Warsh's job harder. I think Kevin Warsh was going to inherit an already difficult position with an institution under pressure. And we had the conversation last time about what happens when, President Trump's nominee sort of inherits the economy, and there's an ownership to that. But I mean, they haven't hit the inflation target in 5 years.
True.
The labor market doesn't look all that great. So I think it's a tough job for the FOMC participants generally, and I think it'll be tricky for Kevin Warsh, but I think that would have been the case for any new Fed nominee.
Final question: which Pingle is winning this year when it comes to job guesses?
Oh, me, of course.
Yeah, you've been in the young one. There we go. All right, Jonathan, good to see you. Thank you, sir. Jonathan Pingle there of UBS Investment Bank. Can you imagine that every Christmas, getting around the table at the Pingle household?
You think it's just Christmas?
I thought it was every weekend.
It's quarterly.
Oh, 100%. I think
Junior won.
I think that would be great before every payroll.
Didn't Junior win last year?
He actually bailed and went to a hedge fund mid-year. So he's exited the competition.
Winning.
He was winning for a while. I regained first.
So you've won because he's bailed and he now works at a hedge fund. Okay. That's an important detail.
Yeah, that is a very important detail.
Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, standing by with more is Isabel Lee. Hey, Isabel.
Hey, John. So taking another look at the data we just got, jobless claims coming in just slightly below estimates at 207,000 for last week. The 4-week moving average holding at 209,000. Continuing claims ticking up slightly, coming in at 1.81 million. And recapping the Pentagon briefing, Defense Secretary Pete Hegseth maintaining the U.S. will continue to blockade on Iran for, quote, as long as it takes. The secretary urging Tehran to, quote, choose wisely as both nations weigh extending their temporary ceasefire and holding additional peace talks. The Trump administration is looking to have U.S. car manufacturers play a larger role in making weapons. The Wall Street Journal reporting that the Pentagon approached top executives at GM and Ford about producing military supplies. The talks come as U.S. officials grow more concerned about domestic manufacturing capacity. That's your Bloomberg brief. John?
Isabel, thank you, and thank you for this morning. Up next on the programme, Mona Mahajan of Edward Jones with stocks heading for another record-setting day. Plus, we'll touch base with Danny. She's got some morning movers for you. Flutter shares dropping in the pre-market on a double downgrade. That stock is down by 2.4%.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
There is a short-term look-through in the markets, especially the equity markets, as to the prospects of both the war ending quickly and exuberant spirits and investments and IPO calendar and deals. That's what keeps the stock market going. But in the background, humming slowly, are the long-term consequences, which is what will give central banks, pause as to how they deal with this situation.
Always great to touch base and catch up with the Barclays CEO, CS Venkatakrishnan there. In a quiet period, so no conversation about the earnings, but just a feel for some of the challenges right now and the opportunities. The challenges clearly present in the Middle East. The opportunities clearly present in the United States. The pipeline, the IPO calendar. Things are really stacking up, Lisa, for the 12 months ahead of us.
Talking about some of the biggest IPOs ever in the history of the United States, we could end up seeing something from Anthropic and then OpenAI. Who's going to get it first? We can talk about that. SpaceX. And frankly, nothing has derailed that. Right now, all people are looking for is a sense of things not getting worse and some cone of stability, as Ted Pick was talking about, in order to get these deals across the line.
I still laugh. Remember when people used to talk about unicorns?
Yeah.
And they were billion-dollar companies in private market startups. Cute, right? $2 trillion for SpaceX, potentially, which is crazy. These companies have stayed private for so long because they can, because the capital is available for them, the opportunity's there. And now they're coming public. These valuations, these market caps, just ginormous, unthinkable more than a decade ago.
Yeah, and it transforms the dynamics in markets. If you think about it, the overall stock portfolio has actually been shrinking as as a share of the economy going forward. Suddenly it's going to expand. So we'll see some interesting dynamics under the hood, too, as these companies need to cap that much more capital going forward.
The opening bout just around the corner, about 43 minutes away. Equity futures doing OK, up by 0.1%. Let's get you some single names, some morning movers. Danny Berger's back with us with more. Hey, Danny.
Hey, John, looking at a market that's up today, and so is Hims and Hers. RFK Jr. announcing that the government was looking at removing some restrictions around peptides, specifically Category 2 restrictions. Basically, what all of that means is if they were removed, it would be easier to both prescribe and sell peptides. Great news for Hims and Hers, because literally just in February, they acquired a California plant that produces them. So shares are up a nice almost 7.5%. Elsewhere, some sell-side action. Bad news for Flutter, a double downgrade from Citi. In fact, they lowered their price target by 57%. This is a stock that's already lost half of its value. They warn about greater competition, and especially from prediction markets, and that they might lower their outlook when they have their 2026 earnings. So shares are off 2.6%. Finally, PepsiCo, they were out with earnings this morning, beat basically everywhere thanks to lower prices. They've lowered prices by about 15%. Most of their sales, though, the real growth came from international markets. They've been facing pressure from Elliott Management. Some of the majority of gains coming off a little bit. They're now just up 0.4%, and also announcing a new and healthier Gatorade for health-conscious consumers. Apparently lower sugar and more hydration. So there you go. PepsiCo slightly higher this morning, John.
We'll take that. Danny, thank you. Thanks for the update. Looking forward to the programming with Danny and Matt Miller in about 10, 11 minutes' time. A new, healthier, upgraded Gatorade.
Less sugar, but more electrolytes. I think that's a win, right?
Honestly,
I think Pedialyte.
I think the Pepsi story is fascinating because they cut prices. And that's one way that they actually generated revenue because they raised their prices way too much. And so then they had to retrench, and they're gaining it by volume. Frito-Lay's, it's sort of like they're barbelling their approach. Frito-Lay's and then a healthy energy drink, and somewhere in between, they'll get all the customers.
You're excited about the finance, and Anne-Marie's excited about the product.
Sounds about right.
OK, as we count you down to the opening bell, let's get to the trading diary, what you need to look for going into the weekend. One more day and a half still to go. Going into the closing bell, we'll be looking ahead to Netflix results. That comes after the close. On Friday, the president speaking in Arizona going into the weekend. An important one going into the weekend because on Tuesday, the US-Iran ceasefire expires. And then there's this, a Senate confirmation hearing for Fed Chair nominee Kevin Warsh, together with results from United. Scott Kirby in the hot seat, given his interest, reportedly, for American Airlines, and Kevin Warsh as well. That Warsh hearing, must watch. Box office on Capitol Hill.
Yeah, especially given the fact that A, you've got inflationary pressures, and B, I imagine someone's going to ask him, how would you feel if Jay Powell stayed on as governor? Could you work with him? Would you recommend that? How do you feel about that? And then also, how much could you potentially cut rates down the line? And if he says significantly, echoing what we heard from Scott Besson, you could see a real market reaction. And if he doesn't, you could also get a reaction, but it would be in the form of Truth Social.
I think it will be a quite testy hearing, especially given who Kevin Warsh is in the Trump orbit. Of course, we all know that Donald Trump is very close to his father-in-law, Ron Lauder. So there's going to be, I think, a lot of personal questions as well directed to Kevin Warsh. And then, of course, the big question is, how long does he just sit in that hearing? Basically, you can't get a vote out of committee because of what Senator Thom Tillis is doing.
One to watch over the next week. The one to watch right now going into the opening bell, a series of all-time highs at the close on Wednesday, coming into Thursday on the S&P 500 and on the NASDAQ. Mona Mahajan of Edward Jones writing fundamentals remain largely intact, potentially setting the stage for renewed market progress if we see a resolution in the Iran conflict. I'm pleased to say that Mona joins us now for more. Mona, do we need a resolution to the conflict in Iran? Is that what this rally is all about, or is it about something else?
You know, it's a good point, John. Look, I think markets are optimistic, embracing the fact that we're making progress towards a resolution. Both sides seem to be willing to talk to one another. We're making progress towards a resolution around the Strait of Hormuz. But more broadly, I'd say markets are, as we know, forward-looking, and we have a glimpse of what they're looking at. We know WTI oil futures, for example, heading towards $75 back by December 2026, by year end. And so markets are pricing in a resolution, at least some sort of mean reversion. And secondly, we know markets are looking at earnings growth, which is pointing to about 18% year-on-year S&P 500 corporate earnings growth for 2026. So really strong on both fronts. I think that's what markets are looking at, a combination of fundamentals and some mean reversion in oil.
Mona, how much is what we're seeing in terms of earnings expectations and earnings forecasts right now kind of a one-off, a perfect confluence of events that happened and was set up before the conflict in Iran that could potentially get disrupted later in the year as you start to see some of the inflationary ramifications?
Yeah, it's an interesting point because, of course, part of the upward revisions in earnings is coming from the energy sector, which, of course, is benefiting from higher oil prices. The other big part of the earnings story has been tech and tech CapEx spending in particular. We've seen upgrades in the tech earnings sector driven by the AI CapEx build out. And so, of course, to the extent that that continues will drive earnings. But if that does start to moderate, or at least the pace of gains start to slow in the year ahead, we could see earnings growth start to moderate as well. But we do think overall the consumer has remained intact. And in fact, what's interesting, we think, from both a labor market story and an inflation story, labor market, we are seeing signs of resilience. We saw that in last jobs report. Of course, we'll see how that trend plays out in the months ahead. But to us, the inflation story has been particularly notable. We haven't yet seen, and we've even gotten March numbers where WTI and oil prices were elevated. We haven't yet seen a meaningful acceleration beyond forecasts in inflation. And in fact, core inflation seems to be moderating. So to us, that's a good margin story for corporations ahead as well.
Mona, does it make sense that the Russell 2000 is 0.2% away from all-time highs and the Magnificent Seven really isn't close to all-time highs, or is it much further away from all-time highs?
Yeah, you know, the small cap story is certainly interesting. And we know when we started the year, there was this theme of broadening of market leadership, and we saw mid cap and small cap stocks outperform. We saw cyclical and value sectors start to take some leadership. There was a bit of pause and cooling in that as the Iran conflict played out. But what we're seeing now, as we're heading towards potentially some easing in that conflict, that story has started to reassert itself, and that broadening story is starting to come back to fruition. And we do think small cap and we like the mid cap story, but both of those will benefit as the U.S. economy potentially stabilizes and continues to grow. But also, small caps in particular are going through an earnings inflection point. They've in fact had negative earnings last 2 years, and this year are expected to have positive double-digit earnings, similar to the broader S&P. So that inflection point tends to be the point where small caps do outperform. And so if that story holds, we think small caps could have a meaningful upside this year versus, broader indexes.
Just an incredible run in the US equity market. Mona, thank you for your time, as always. Mona Mahajan there of Edward Jones. The opening bell about 36 minutes away. We played this game last week. It's worth playing again. If I told you the Strait of Hormuz would be all but shut, with hardly any traffic going through it for 6 weeks plus, and the equity market would be at all-time highs, and the backdrop for that equity market were worries about AI disruption and broader concerns about private market jitters and a Federal Reserve that might not be able to reduce interest rates anytime soon, and a conflict at the top of who's going to lead the Federal Reserve in the mix as well, and would be sitting here at a record on the S&P 500, and yet here we are.
You might actually expect someone to write a headline like either markets are dumb or the oil analysts are, which is exactly what we got from Neil Dutta earlier today. Because ultimately it does seem like there is a disconnect right now. At the same time, people are saying this is a more independent economy from the commodity space, is more energy independent. And frankly, you're seeing a lot of strength in other areas as well. So it is a conflicted and difficult moment to really reconcile.
It's very uncomfortable given what you hear and see out of Asia, and also the fact that the IEA says Europe's about 6 weeks from potentially not having enough jet fuel, and then they have to start canceling flights in 6 weeks' time. And to your point, the Strait of Hormuz is still closed. I find it very challenging to look at my screen and see oil, Brent, and WTI under $100 a barrel in this scenario.
The coverage continues from Washington, D.C. tomorrow at the IMF World Bank Spring Meetings. We'll catch up with Ed Yardeni of Yardeni Research, Rick Reeder of BlackRock, Joyce Chang of J.P. Morgan, and the former U.S. Deputy National Security Advisor, Philippe Singh. Looking forward to that. Live from Washington this morning, good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
A cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon ahna ta suara pang ko ahna le pah manchang le ni ai kon mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Stocks have never been this high. 30 minutes until the start of the cash trade today. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Stocks at record highs, the S&P topping 7,000 for the first time on a closing basis on signs the U.S. and Iran may extend the ceasefire.
That rally boosted by TSMC's results, though I think the chip maker might be slightly lower. Anyway, it raised its outlook, reinforcing confidence in AI demand.
And it's showtime for Netflix. The streaming giant reports results after losing the battle for Warner Brothers. But maybe that's something investors were happy about?
Absolutely something investors were happy about. By the way, I'm looking at Pepsi today. Did you know that they announced a new healthier Gatorade, so less sugar and more hydration?
But they already have Gatorade Zero.
I don't know. Apparently they're doing something even more different, even more healthy. Is that helping them out? Not so much. Shares are only up 0.6%. Basically, they cut costs across the board by about 15%. They're pressured by an activist investor. And that means that their results were better. They saw more sales. But I guess, Matt, the point is higher volume but lower prices. So you get this kind of reaction.
All right. That's an interesting story that we're going to dive into. Also, TSMC. You know, TSMC reports quarterly earnings every week, pretty much. So their revenue outlook for the year is to grow more than 30%. And that's surprised investors to the upside, or at least it had for a while. You can see that now the shares are down 1.75%. They face growing competition from the likes of Elon Musk, and his team is reportedly reaching out to chip suppliers for quotes to get the Tesla SpaceX Terafab project underway, and he wants it done at light speed. Danny.
Well, Matt, we have a real treat today, because joining us to discuss all of these things here in New York City is Bloomberg Tech's Ed Ludlow. Hey, Ed. Great to see you.
Good morning.
Okay, so TSMC, to Matt's point, I mean, we hear from them all the time, but it should be no surprise that AI demand is so robust, right?
But also TSMC is typically cautious, right? They are, as an executive team, very disciplined. The main thing for all the numbers, right, capital expenditure, revenue growth, pick whichever one you want, is that the state of play is that demand is accelerating. It's not just intact, but, you know, they cannot make chips fast enough. You know, and that is in all AI contexts, chips that go into data centers, handset chips for mobile, which is really interesting in a backdrop where consumer electronics in particular aren't necessarily having a great year. So it's a good and positive projection that they're giving.
That's right. We actually saw, I think IDC put out data that mobile phone handset sales were down for most manufacturers across the industry, a pretty big drop.
Yeah, and that's in part as well because of pricing pressure from memory. You know, people have short memories in markets, with respect, markets, but that hasn't really gone away. It might not be in the news cycle presently, but because of the price of DRAM and NAND flash, those higher prices have put consumers off. That's one part of the story, as well as not that interesting an offer in the smartphone market. But nonetheless, TSMC wins either way.
And you also had a story out in the early hours of this morning about Musk basically saying to all of your suppliers, get your act together, we're moving at light speed for Terafab.
Yes, so this is really important reporting with the team in Asia. Basically, Terafab is real. They are going to the key names, Tokyo Electron, Applied Materials, Lam. We do not know about ASML. That would be a key piece in saying, what can you quote us for the machines? If you can get us the quote quickly, good. And if you can get the machines to us as a priority over others, we'll pay you a premium for it. But we also have some detailed reporting on the reality of this. 2029 is the earliest this is going to be. That's new information. It's going to be a pilot line, as we know, in Texas. We have no idea where Terafab is, if it will be multiple sites. There was a bit that I'd heard from sources, which I think is really important in the context of that Intel news we discussed. I understand that they basically went to Samsung and were like, do you want to get involved? Samsung's already a foundry for Tesla. And they were like, no, we'd rather just you be a customer. How about this counter proposal where we get our act together and build a fab in Texas quicker and you guys use more of it? And I don't know where that's landed, but that's kind of interesting. You know, not everyone universally wants to get involved in this.
Yeah, but it's also interesting that everyone's putting putting factories up in the U.S., right? Because I saw the TSMC CapEx line, and it was like $56 billion. Yeah. Also, I think, raised. So, and they're putting a factory, well, already starting one in Arizona.
Yeah, they're ramping.
Yeah,
and so we're going to track the output of that Arizona facility really closely. You know, TSMC CEO was asked about the terafab, and he said, well, everyone knows to be true, the economics of this, it takes a long time, 3 years to build one, 2 years to ramp it. You know, it's a serious thing that Elon Musk is trying to do. But the thing that TSMC reiterated is, like, Intel's a customer of TSMC, which is a curious one. Tesla's a customer of TSMC. They still dominate this.
By the way, Ed, I got a viewer writing in who says, hey, while Ed's there, is Elon Musk just trying to distract people from the S show of Tesla? Current earnings, deliveries, no robo-taxi working with systems, still only level 2 driver assist. Like, and I saw the story out that their Cybertruck sales were inflated by a SpaceX buying spree. And when I see that kind of headline, it's worrying.
Okay, so a few things. The Cybertruck registrations, basically every 1 in 5 Cybertrucks sold goes to an Elon Inc. company. Mostly SpaceX. So Elon's other companies are the biggest single buyer of Cybertruck. It hasn't really resonated with a US audience. I've been looking at the stock a lot recently. I mean, as of the close yesterday, it's at its highest level since June of last year, but it was so downtrodden, it's kind of catching up with the mega caps. And there hasn't really been any news or catalyst other than our terafab reporting. Musk posted a taped out image of their latest inference chip. That might be it, but people are kind of looking for a signal on growth. The SpaceX IPO in the background is a real distortion.
But growth of what? It's not car manufacturing, right?
I think the terminal user's question is, like, you know, what is Tesla? That's everyone's question. The market still prices it on a future as an AI company in robotics and self-driving. You know, the car business, bread and butter of it, it's in stasis, if you want to call it that. But so is the EV market in America. You saw the Ford news last night. Like,
yeah, I mean, also, I guess since Allbirds can ramp up 600% on just an announcement, it's thinking about becoming an AI company, that anything can be worth.
I saw a report that basically, like, and this should be no surprise, that basically all of that was retail buying, like huge amounts. Yeah, but I mean, that's to say that that's flighty money. Sure, it gets you like a 1-day, 600-day pop, but then what afterwards?
Why aren't we keeping Ed for the whole show?
We should.
We just.
Ed's like, I got work today.
Stay here.
Please let me go.
Ed has scoops to break. Ed Ludlow also has a show to anchor at 11 a.m. He'll anchor Bloomberg Tech with Caroline Hyde. And we got to get back to something that he probably doesn't care about as much. Pepsi earnings topped estimates thanks to a rebound in snack sales. Let's get a read on the company and consumer with Bloomberg Intelligence senior analyst Ken Shea. So, Ken, on the one hand, we want healthier stuff. So as Danny pointed out, they're coming out with an even healthier and, what did you say?
More hydrating.
More hydrating Gatorade. And on the other hand, consumers want salty snacks again. That's back.
That's right, Matt. Okay, guys, थोड़ी देर पहले देखो एक news आई थी. I will already share that news on Telegram. That from the Russian intel agency. This says that ये जो अभी ईरान और यूएस के बीच में बातचीत चल रही है सीज फायर की, that is just a cover for a ground invasion. यूएस एक ground invasion की तैयारी कर रहा है. There is a chances that it will happen very soon. थोड़ी देर पहले यूएस सैंडकॉम की ओर से एक प्रेस कॉन्फ्रेंस हुई थी. एक बार से सुन लेते हैं क्या कहा है उन्होंने.
Well, good morning. And as you may have noticed, the chairman and I are joined today by the CENTCOM commander, Admiral Bradley Cooper. He just returned from the front lines to see the troops and meet with allies, and this morning briefed us, just before this briefing, on the latest on all aspects of Operation Epic Fury. So after the chairman concludes, we'll ask Admiral Cooper to share a quick update on the ground truth from his trip to the region as he continues to implement an ironclad blockade and ensures that our forces are maximally postured to restart combat operations should this new Iranian regime choose poorly and not agree to a deal. And that is what we urge this morning, that this new Iranian regime choose wisely, which is where we'll start with a message to Iran's military leadership, to the KH leadership and IRGC leadership. We're watching you. Our capabilities are not the same, our military and yours. Remember, this is not a fair fight. And we know what military assets you are moving and where you are moving them to. While you are digging out, which is exactly what you're doing, digging out of bombed out and devastated facilities, we are only getting stronger. You are digging out your remaining launchers and missiles with no is not moving and will not move, and we can do this all day. The relentlessly negative coverage, you cannot resist peddling, despite the historic and important success of this effort and the success of our troops. Spirit in the ranks, the surge of Americans wanting to join the greatest military in the world. Nothing from the fake news. We sense a pattern. You see, on the battlefield, these are demonstrations of uniquely
unprecedented effort by America's joint force during Operation Epic Fury set the conditions for this ceasefire. And as the Secretary said, I'd like to emphasize during this pause that the United States Joint Force remains postured and ready to resume major combat operations at literally a moment's notice. This morning, I'd like to give you an update on the ongoing blockade in the CENTCOM AOR area of responsibility. On Monday, 13 April at 10 a.m. Eastern Standard Time, at the direction of the President, America's Joint Force began implementing a blockade against Iran under the leadership of Admiral Cooper and the team at CENTCOM. Let me be clear, this blockade applies to all ships, regardless of nationality, heading into or from Iranian ports. The U.S. action is a blockade of Iran's ports and coastline, not a blockade of the Strait of Hormuz. Enforcement will occur inside Iran's territorial seas and in international waters. In addition to this blockade, the Joint Force, through operations and activities in other areas of responsibility, like the Pacific area of responsibility under the command of Admiral Paparo, will actively pursue any Iranian-flagged vessel or any vessel attempting to provide material support to Iran. This includes dark fleet vessels carrying Iranian oil. As most of you know, dark fleet vessels are those illicit or illegal ships evading international regulations, sanctions, or insurance requirements. More than 10,000 sailors, Marines, and airmen, over a dozen ships and dozens of aircraft are executing this mission. And let me walk you through this operation a little bit. Please go to the first slide. First to the graphic. This is taken before the blockade began. North is up. You can see the blockade line here in the center of the graphic, denoted by the red dashed line. This map is a pull from our common operating picture that we use to allow commanders and key leaders to see what is happening in near real time. We just grabbed screen grabs to highlight the actions and activities. What is not shown is how incredibly congested this area is and the incredible work that our sailors are doing to ensure that they can work in and around an incredibly busy water space. What is also not depicted here is the massive force of fighters, intelligence aircraft, helicopters, and other embarked forces, to include aerial refueling tankers, that are up overhead this blockade area. You'll note that the U.S. forces are in blue, Iranian ships are in red, and as we started this blockade, there were 7 ships of interest that were of concern for U.S. Central Command. Through a variety of intelligence tools and with the assistance of the Office of Naval Intelligence and other intelligence agencies, the force began to hunt for potential interdictors at 10 a.m. Eastern Standard Time. Next slide, please. It's now 12:40 Eastern Daylight Time, 2 hours and 40 minutes into the blockade, as attempted blockade runners attempt to hop the line. U.S. forces began to commit. Out in front of them was a range of intelligence, surveillance, reconnaissance, and tactical assets. And immediately these runners began to see, sense, and feel America's combat power compressing upon them. The lead ship, normally a destroyer, as depicted here, along with air power off of the USS Abraham Lincoln Strike Group, began to move towards those ships. At each point, the United States Navy will transmit a warning. A young sailor, normally on the bridge of one of those destroyers, a junior officer, picks up that mic and transmits, and I quote, "Do not attempt to breach the blockade. Vessels will be boarded for interdiction and seizure transiting to or from Iranian ports. Turn around or prepare to be boarded. If you do not comply with this blockade, we will use force." And as this message is being transmitted, as I mentioned earlier, those shipmasters can literally see, sense, and feel the pressure around them. It's a finely tuned machine, rehearsed multiple times, and executed now 13 times since the blockade has begun. Next slide, please. We're now 24 hours plus into the blockade. You can see the turning around of multiple ships, 12 of which stayed inside the blockade line, one of which not depicted off to the eastern side, turned around before even attempting it. Any ship that would cross the blockade would result in our sailors executing pre-planned tactics designed to bring the force to that ship, if need be, board the ship and take her over. And that includes a series of escalated force options, which could include warning shots and others. Next slide. The final graphic shows taken at 11:20 p.m. the night of 14 April. You can see that the captains of all these ships have made the wise decision not to move, transit, or run this blockade. As I mentioned, so far 13 ships have made the wise choice of turning around. And as we continue to hold this blockade at the order of the Secretary and the President, any vessel that compares to comply with our instructions will be dealt with accordingly. As of this morning, U.S. Central Command has not been required to board any particular ships. And I'll remind you that we are also conducting similar maritime interdiction actions and activities in the Pacific AOR against those ships that left that area before we began the blockade. Before I turn it over to Admiral Cooper, I want to talk briefly today about the men and women enforcing the blockade, America's sailors and Marines, and today particularly our destroyer and surface forces. When we talk about an American destroyer, it's important that you and the American people understand their capabilities. An Arleigh Burke-class destroyer are the backbone of the United States Navy surface fleet. Over 500 feet long, they displace 9,000 tons, and it is the sports car of the United States Navy. From the keel to the mast, they stand nearly 10 stories tall, and their 4 gas turbine engines can drive the ship at 30-plus knots. These ships are armed to the teeth with surface-to-air missiles, land attack cruise missiles, anti-ship missiles, anti-submarine rockets, torpedoes, 5-inch naval guns, multiple electronic warfare systems, embarked helicopters, extending the reach and capability of each and every one of these destroyers. But far and away, the most important weapon on board these ships is the American sailor. Over 300 warfighters are the heart and soul of these warships. At sea, sometimes for months, and these ships out in the CENTCOM AOR have been out there for months. They operate around the clock in a constant state of readiness, always delivering for our joint force. It's hot in the engine room. The engineering team keeps the lights on and the ship powered and able to respond to the orders from the bridge. On that bridge, our sailors maintain a constant watch, maneuvering the ship tactically and safely through always congested water space, and there is a lot out there. It is like driving a sports car through a supermarket parking lot on a payday weekend with thousands of kids in that parking lot as you attempt to maneuver through there to get to that ship that would attempt to run that blockade. Down in the Combat Information Center, the CIC, the Tactical Warfare Center of the ship, that is where the actions and activities that they're tasked to do every single day. So now I'd like to turn it over to Admiral Cooper to give us a readout of his recent trip to the region.
Well, good morning, and Mr. Secretary, thank you for the kind invitation, and Chairman, great to join you. It's a real honor to be here representing the more than 50,000 American service members deployed throughout the Middle East today, supporting operations. And it's great to have the opportunity to highlight the tremendous efforts our warfighters operating forward and the important partnerships with regional allies that continue to thrive. In fact, yesterday I returned from my second trip to the Middle East in the past 15 days. Two very different visits. One during our offensive operations against Iran, and the second in this most recent trip during the ongoing ceasefire. Very different. During both of my recent trips, I visited with our troops who were deployed across the region in more than 70 different locations, in a distance that largely spans between Florida and Arizona. I've long believed that every success that we have starts and ends with our people, and boy does this shine through brightly. During these visits, I had the privilege of personally recognizing more than 100 servicemen and women for their extraordinary valor, their courage, and their initiative under fire and delivering fire. And every time I interact with these young men and women downrange, I am deeply inspired by their courage, their resilience, and their unwavering commitment. The stories are remarkable. In many cases, you've seen this play out over TV. Fighter pilots who took out Iranian missile launchers in the moments prior to their launch against Americans and our partners, and who hit key military targets in and around Tehran on the attack more than 13,000 times. I met with some of the teams that helped to bring our F-15 airmen home safely from Iran and heard first-person accounts of the stories. Absolute heroes. I spent time with our troops who are employing cutting-edge tactics and technology for the first time in warfare. I won't be able to talk about what those are, but these young men and women are breaking new ground. It's incredibly inspiring. I met with teams who launched our own one-way attack drones into Iran. These were originally Iranian-designed drones. We brought them back to America, took the guts out, put a Made American stamp on them, and fired them right back to Iran. Very effective. I met with teams who are employing AI every single day to help us sift through vast amounts of information to help us make decisions faster. And importantly, humans are always in the loop in this process. I met with our Space Force teams and our cyber specialists, whose work cannot be discussed, but who serve with indispensable impact. I met with our logisticians and sustainers all over the region. There is just no military that executes logistics like the U.S. military. This group is doing exceptional work, moving thousands of tons every single day. I met with our air defenders who shot down Iranian ballistic missiles. My message for this group in particular is that their actions most certainly saved thousands of lives across the Middle East during Epic Fury. And all told, my personal assessment is, after these couple of trips, is our troops are highly motivated, they're focused, they're vigilant, and they're ready. And they're using this time to do a couple of things. We're rearming, we're retooling, and we're adjusting our tactics, techniques, and procedures. There's no military in the world that adjusts like we do, and that's exactly what we're doing right now during the ceasefire. A little note about partners. My discussion with regional allies and partners, both at the senior civilian level and the senior military level, reinforced our shared commitment to regional security. But beyond that, having now fought together side by side, I assess that our military partnerships are stronger than ever as we continue to maintain a very active defense posture across the region during this ceasefire. And that posture stretches across the entire Arabian Peninsula, and it runs from northern Iraq all the way down into the northern Arabian Gulf. In creating the largest air defense umbrella in the world across the Middle East, we embedded specially trained U.S. military air defenders alongside our partner nation soldiers, side by side, literally side by side. And to give you a sense of their contribution and impact, the King and Crown Prince of Bahrain both personally knew our soldiers by name. These leaders expressed appreciation for our service member who continue to stand shoulder to shoulder with our partners in support of regional defense. And this is a sentiment that is widely shared across every Gulf ally. I heard this message over and over again, which is, we stand with you. As the Secretary and the Chairman have said, Bahrain, UAE, Saudi Arabia, Qatar, Kuwait, and Jordan have been exceptional teammates. I had a chance to meet with both their senior leadership as well as their troops. Boy, equally inspiring and equally committed to mutual defense. They defended Americans and they defended their own country. It was inspiring. And there's been no better teammate than Israel. Together, the 4 best air forces in the world, the Israeli Air Force, the U.S. Air Force, and the air forces of the U.S. Navy and U.S. Marine Corps, together met and exceeded our own military objectives over and over again. Twice in the past 2 weeks, I've met with the Israeli Chief of Defense to ensure that we remain closely aligned, and we do. And then finally, let me just close by saluting the brave men and women who are in uniform and who continue to answer the call with unrivaled lethality, great teamwork, and resolve. We've asked them to stay ready during this period, and that's exactly what they're doing. I couldn't be prouder, and I know that you and the American people share in that same pride. Thank you so much.
All right, we'll take a few questions. Go ahead.
Thank you. Alexandra Ingersoll, One America News. How is the Iranians' decimated command and control affecting the ceasefire at this juncture? Ergo, how are we enforcing a ceasefire with an enemy who has virtually no command and control? And then one other question about the Houthis being, have the Houthis been an issue in the Straits of Hormuz and the Bab al-Mandab Strait at the Red Sea, or are we tracking that militarily?
Appreciate that. On the ceasefire front, it's right. Their command and control capabilities are highly degraded. So their ability to talk, see, sense is at the worst it's ever been. But their motivation to want to stay in the ceasefire is very high because they understand that a violation of that ceasefire means a commencement, once again, of Admiral Cooper's forces, which went very poorly for them. So they have a high incentive to maintain that ceasefire, even though they can't talk and organize as well as they'd like to. And then as far as the Houthis, thus far, they have stayed out of it, which, of course, we think is a good decision by them, and I think is a reflection of the fact that over a year ago in Operation Rough Rider, we had an ongoing and intense campaign that demonstrated American capabilities, which has them hesitating to want to do something on that strait, which I think would be a poor choice. Right here.
Good morning, Mr. Secretary, gentlemen. David Zier, Real America's Voice. As commercial shipping ramps up, you know, there was 130 ships a day going through there. As that happens, ships have to anchor up, right, and wait to pass through the narrow strait. Is there any progress with an international force to phase out U.S. military-led escorts or other? Is anyone stepping up to do that?
It's a great question.
Long term.
They should be. There's a lot of talk, and what we've seen in this conflict from allies and those is a lot of talk, except for the ones that were mentioned by Admiral Cooper in the region who've been phenomenal. Other allies have talked a lot and haven't done anything. And as the president has pointed out, this is a waterway that the American commerce doesn't use all that much. We don't rely on the energy coming out of the Strait of Hormuz, but Asia does, and Europe does, and large parts of the rest of the world do. And so their ability to muster a collective defense or a clearing of the straits would be a wonderful thing. And we hear and see the talk about it, but when shots were fired and those countries were needed the most, they weren't there. They weren't in the strait. They weren't alongside us. Their leaders weren't rallying what they have of their navies. If they decide after CENTCOM does the heavy lifting, which again, they should be able to do. We should live in a world where other countries can defend waterways, not just the United States Navy. Should that conclude, which we believe it will, then we would welcome other countries coming in after the fact. But you can't live in a world in perpetuity, and this is a message to the rest of the world and our allies, where you just rely on America to continually do the heavy lifting. Oh, Iran might get a nuclear bomb. Who's going to do something about it? America, and America only. Other allies need to invest in their capabilities so they can project power and do basic tasks like clearing a strait. So we're not counting on it, but it would be wonderful to see it if it ever materialized. Yes.
Thank you, Mr.
Pretty pumped about this IPO, I'm going to be honest. It's big.
Yeah.
It breaks the dam, but it also shows it's only like real world stuff that's able to IPO.
It's cool, and I will say that we had an HVAC guy over to my house a couple weeks ago.
Did you like sell like one of your kidneys in order to afford
He
him?
charged $560 an hour.
An hour.
It's a weekend visit, so I get inflated pricing, but $560? Like, what are we doing here? We should all be working on HVAC. Arxis ringing the bell at the NASDAQ, and of course, it's a defense company, defense front and center. Look at the freedom250.org. That's pretty
and now
cool.
the weather.
We got a little weather up there. Times Square.
I love this, your daily Times Square update. What's on the billboards? Let me give you an update of some of the stocks that we are watching. One of them is PepsiCo. Pepsi shares not doing as well as they were when they initially reported earnings. Basically, they looked really strong. They beat everywhere. A lot of it was international, but perhaps the rub is that in order to do that, they had to cut prices by 15%. And by the way, you're going to see margins just get squeezed because not only have they cut prices, but the cost of plastics and packaging foods and food stuff, all of that is set to get more expensive with still disruption in the Strait of Hormuz. So anyway, shares are up just 0.1%, Matt.
All right, TSMC, again, raised its revenue outlook for the year. It expects growth of more than 30% now, but TSMC faces growing competition for the likes of Elon Musk. His team, as Ed Ludlow reported earlier, is reaching out to chip suppliers for quotes to get the Tesla SpaceX Terafab project underway. And he wants it done toot sweet at light speed. Let's get back to UBS Wealth, head of global equity strategy, Nadia Lovell. Nadia, we are seeing, the animal spirits are here. Arxis raising more than $1 billion in an upsized IPO. We saw Madison Air, also one of the biggest IPOs of the year, raising $2.25 billion. Are we back?
Look, we're not surprised by some of this. We heard even last year from a lot of the banks that the pipelines were looking healthy. You did see a pause because of the uncertainty, but we would expect as the uncertainty around the war continues to fade that you will see more and more coming to market. We know that there's going to potentially mega IPOs coming to market later this year. And so, and I think also the fact is when you pull back the lens, like the economy is still doing really well. And this is probably the reason why we've remained very constructive on the outlook for markets through this entire crisis. Of course, we did take some de-risking measures by downgrading those areas that are highly sensitive to high oil prices like the Eurozone, like India, at the same time upgrade some more defensive areas like Switzerland, as well, and also healthcare. And we even also upgraded Korea because of that AI-driven story. So unless oil prices continue to spike and stay elevated, when you think about it, the backdrop still remains quite healthy. Look at the earnings season so far.
One of the questions I've been asking a lot of people recently, because I'm just really interested in what happens when those mega IPOs you talked about do come to market, because they're already at really rich valuations. Over $800 billion for both Anthropic and OpenAI. They might IPO somewhere close to $1 trillion. SpaceX is going to be the biggest ever. A massive IPO. How are you thinking about whether you add these to client portfolios, how much you add to client portfolios when a company comes to market that's buzzy, that's exciting, but comes to market at a really rich valuation?
Look, in terms of how we're thinking about it, what we've been advising our clients and in our own position, and it's like reevaluating concentrated positions, right? Because we do think that, capital flows could go to some of these IPOs as they come to market. We know that there is talk about higher retail allocation for some of these IPOs, so that is going to have implication. And so we've been really focused on the equal weighted S&P 500 rather than the market cap rated S&P 500 because it will have an impact on that. So a lot of our conversation is helping clients to manage concentrated position, particularly in tech. It's been our message all year, and we continue to hammer that home because we do think that this is going to have an impact on how markets kind of trade from here.
Can I ask about the oil, how oil plays into this in America? Because we always hear how insulated the U.S. is, and yet NYMEX crude WTI also went up at the same pace as Brent. Prices at the pump have also gone up here in America because it's a fungible commodity.
It's a global market, yes.
And it's a global market. So at what point do these higher oil prices hit U.S. earnings? Because we're looking at, double-digit earnings growth forecast, $310 for 2026 on the S&P.
And that might be proved to be conservative, right? I mean, it's sort of the estimates are more closer to 322.
But why? Don't we need oil to make stuff too?
We do, but again, in terms of the overall impact to economic growth, we don't think that it will have a great impact. It's probably less than 50 basis points. We were looking for above trend GDP growth. It's probably closer now to trend line GDP growth. The consumer also is in pretty good condition. We heard that from the banks so far during this earnings season, and the wealth effect. Let's not forget about that. You pointed out markets are at all-time highs, and these are the spenders in the market. The middle and the upper income consumer is what really is driving the overall consumer spend. And so when you think about it, like, it's only if what we've seen historically, it's only when gasoline prices on average get above $5 and stay there that you start to see more of an impact on pullback in consumer spending.
By the way, that's a great point,
It doesn't feel
Nadia.
like we're going to be there.
Yeah, because I feel like we were expecting to see 150 on Brent futures. We were expecting, at least those of us who are pessimists and worriers. I try to be skeptical, but yes. So I was worried we would see $5 at the pump, and we didn't get even close to that on a national average. Yes. Obviously, in California, you make your own bed, you got to sleep in it. But I mean, it wasn't as bad. It didn't turn out yet to be as bad as we thought it was.
Was it not as bad as we thought it was, or did it just not get priced into markets, the reality of how bad it was?
We know that there's reserve releases. We know that globally there's some subsidizing as well, and that's helping to suppress some of the prices and the immediate impact. Now, again, we'll all see how long this transpires in terms of the Strait remaining closed. I think a lot of people, what the market is pricing in now is that the Strait starts to reopen by the end of this quarter. So by the time we get to May, June, that is certainly our expectations. But in reality is we did increase our Brent oil price target. We think that Brent will average get to about $100 by the time we get to end of June, and by the time we get to the end of the year, and $90. Again, higher than it was before this crisis, and because you're going to need to rebuild those reserves. Also, there's a potential for hoarding, having gone through this experience as well. And there is damage to infrastructure. So even when the Strait opens, we know that it's not going to be an immediate flow of oil, that it's going to take probably like 3 to 5 months for that full resumption to happen. But again, the American consumer has cash in pocket to be able to weather this. We're all in the middle of tax season. I don't know who's getting returns. I'm certainly not. But the average consumer, the average consumer is getting returns, and that's helping to cushion some of the impact.
Right. The Tax Foundation at one point said we're going to get refunds that were 10 to 15% higher than we did last year. But you got to do your own thing right in order to get that.
Are you saying you did your own thing right? I did it. Don't give away
Nadia Lovell at UBS Wealth, thanks so much for joining us. Let's get a check on the stock market right now. Danny, what do we see on the move screen?
Well, we're barely higher today, but that's enough to get us to more all-time highs, closing above 7,000 yesterday for the first time, hitting a new record, our first new record in about 6 months. So yes, we're not moving a lot, but it doesn't take a lot to get another record. A lot of the tech kind of chip makery sort of names doing well. Maybe that's because TSMC had solid earnings. Microsoft, AMD, Oracle is up there, Intel, Palantir. And then if you look at the downside, you see Apple, Nvidia, Tesla, kind of a mixed bag about both a lot of tech and the gainers and losers. Charles Schwab, they had earnings. They're one of the biggest losers, down nearly 4%. Despite the fact they had a greater AUM, a lot of that money, though, just going to money markets. So let's look at what the sectors are doing. It's kind of a weird thing because it had been during this war. When oil prices are higher, the overall market would move lower, and things like material stocks would get hit. But we're seeing this break, this disconnect, where oil prices can move higher like they are today over concerns over the Strait of Hormuz, and energy does well, along with a lot of other things. Material is doing well, even though the cost of those materials are probably getting more expensive. Utilities, real estate, industrials, financials, infotech, communication services, all of those doing well. Consumer discretionary at the bottom of the pile, Matt.
All right. Wow. Consumer discretion down there, right? I wonder if Pepsi is a consumer discretionary or
a staple.
It's probably a staple,
I feel
right?
like it's a
In
staple.
America, it's definitely a staple.
I need my Doritos. Can't survive without them.
Coming up, the Pentagon reportedly tapping automakers to help ramp up weapons production. I guess those are discretionaries. Yeah, they're filed under discretionaries. But for me, that's a staple. This is Open Interest.
Mr. Secretary. Thank you all for your time. I have a couple questions. I know you said a few weeks ago that Iran's supreme leader was wounded and disfigured. Do you have an update on whether he's even alive at this point? And then another question for you. Iranian embassy accounts are sharing an AI video of Jesus Christ kind of bloodily killing President Donald Trump. Does the Pentagon have a response to this, including the fact that this AI Jesus is casting Trump into hell? And then finally, for Admiral Cooper, could you speak to us about the morale of the American service members that you're seeing in the Middle East? I think Americans are really interested in what their experiences and testimonies are like.
As far as the status of the individual you mentioned, I believe it's the same. Not a lot coming from him right now, understandably so, a lot of fear. Believed to be alive, wounded, and disfigured. Status remains the same. As far as a video like that, of course, that's disgusting and detached from reality. Iran says a lot of things in the propaganda space based on complete lies, and their actions have been lies. Oh, we don't target, we see missiles going into civilian facilities and hotels in the Gulf states. And they say we only target military targets, as you watch drones and missiles go into. So they are going to misrepresent, lie, spin in a multitude of ways, which we are quite used to. Ultimately, they need to come to the table and make a deal. And I'll hand it over to Admiral Cooper for this.
Yeah, I would just reiterate my previous comment. Morale is very high. And anyone in the military can take about 2 seconds to figure out what morale looks like by meeting around it with the people. And it is crystal clear. These are motivated young men and women. I had the wonderful privilege of writing a letter early on in the operation to the team forward. And I told them this was going to be a mission of extreme consequence. And serving at a time where you are making a difference, consequential, as the Secretary and the Chairman have described over and over again, is incredibly and deeply meaningful. And I think that's the key part of the drive, as well as being great teammates across the board. It's a privilege to watch.
Jerry.
Thank you. Jerry Dunleavy with Just the News. I have a couple of questions. First is some critics of the Trump administration policy, including former NCTC Director Joe Kent, have attempted to claim that the Trump administration's policy of zero enrichment for the Iranians is not actually President Trump's policy, but was foisted upon him by the Israelis. Looking back, doing a bit of a refresher for myself, I saw that zero enrichment was the Trump State Department's policy in the first admin.
Let me just stop for a second. As someone who, unlike the individual you referenced, is in the presence of the president nearly every day and has been inside every single key meeting that has happened surrounding the idea of Operation Epic Fury, not a single thing has been foisted upon the President of the United States. President Trump makes his own decisions about the interests of this country and defending our interests, and then working with allies and partners, in this case, Israel, who's got a lot of will and a lot of capabilities, which we're grateful for. Nothing gets foisted on President Trump. So those people who are not in those meetings who like to say things about that are just flat wrong.
I had a quick one for Admiral Cooper, if that's
Sure.
okay. Thank you, sir, and thank you for being here. So during Operation Epic Fury, 13 U.S. service members have lost their lives, some of them in an apparent aircraft refueling accident, and some of them from Iranian strikes, including a drone strike. I was wondering if you could share a little bit with us about how those Iranian strikes were able to be successful, and what lessons you've learned, and how you're applying those lessons in the future to make sure that we're able to defend a little bit better against that sort of thing.
Sure, really broad question. But first, we will always honor the fallen. And the 13 who lost their lives really helped steel the resolve and congeal the motivation of the forces that are I met many people who knew the fallen personally. I met many who were reported as wounded and are back. 90% of those who have been wounded have been back to duty. It gives you a sense of purpose and motivation. We have collected dozens, if not hundreds, of lessons learned. And as we sit here right now, the Joint Force across the board is taking them and very tactically applying them right now, right here, right now. If I think about a football analogy, if it's halftime or between the third and fourth quarter, great teams are always adjusting, and we are certainly a great team, and that's what we're doing right now, taking the lessons and applying them in a meaningful way. What those are, I'm not going to talk about.
I'll say they extend also outside of CENTCOM and across the rest of the Joint Force. We are a learning organization, so adversaries around the world should recognize that and be aware of that.
No doubt. And likewise, I mean, the chairman and I have had the opportunity to greet those 13 and their families at Dover, and it does steel our resolve. And I can just attest to the planning that went into every aspect of this. Thank you. Spirit of the meeting they'll have next month. Thank you very much. I appreciate it. Thank you.
Extending the expertise they already have, whereas if they had to make munitions for a current conflict, when that's over, then they've got this idle production and workers that they have to deal with. It's just a lumpy kind of business that they probably don't want to be in. But I think if the government really needed it and was willing to pay them, they could certainly do it. Much more difficult kind of business to get into because of the specifications and safety issues that come with it, though.
Yeah, David, that's what I was going to ask. I mean, how do you convince these companies to do this? Is it with subsidies, or is it Trump basically saying, I'm going to threaten more tariffs? What would convince the Fords, the GMs of the world to make this pivot?
I think, often with the Trump administration, there's carrot and stick, right? So, if you look at how Trump has managed the auto industry or worked with the auto industry in his first year, he has put tariffs in, which have cost him a lot of money. He's wiped out incentives to sell electric vehicles, which has been part of the reason they've had to write down their investments there. But he's also wiped out environmental regulations so they can sell as many very profitable gas guzzlers as they want. So I think in a situation like this, they'd probably make pretty good profit making this stuff. But then if they didn't cooperate, maybe there would be other tariffs or other things that they don't like. So they often try to play nice with the president and do what he wants, and then and hope that there's a payback with a different, a change in policy somewhere else with what the administration would want to do.
Nonetheless, it's a manufacturing job, and Detroit is a manufacturing base, albeit not for weaponry that I know of. Do you think you could see, more industrial buildup in the Midwest?
They could. I mean, there is some excess capacity, particularly in parts. And that's what GM did when they made the ventilators. They had a pretty much idle parts plant in Indiana where they just kind of like tooled it up and hired some people to make ventilators. So they do have space like that. And the question would be, if they had to make munitions or something like that, would they need some sort of specialized facility where they have to build new? And in that case, I think they would probably treat the government like any other like a supplier treats an automaker, where, hey, you're going to absorb some of the capital cost. We're going to have contracts dealing with how much of the output you're going to buy. There'd be pricing issues and that sort of thing. They would, basically become a vendor to the U.S. government.
Hey, David, thank you very much for joining us. That's Bloomberg Detroit Bureau Chief David Welch. Coming up, Netflix earnings after the bell. We're focused on, I guess, fundamentals now that we aren't following the Warner Brothers takeover saga. We're going to discuss that next right here on Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller looking at stocks at record highs once again. You can see the S&P, it's only up 0.06%. But climbing from here, if we close at these levels, will be another record. NASDAQ actually down only 0.05%. So 26,000 and change there, 7,000 and change on the S&P 500. Pam Bondi can come back. Taking a look at what's going on with Brent crude, 2.5% is the gain, 97.35. We just heard Nadia Lovell, I thought interestingly, of UBS saying that her forecast is still for $100 oil on Brent by the end of June. We have NVIDIA off, so that doesn't really help, and maybe why the NASDAQ is down. TSMC also, after they raised their sales forecast again for the year to more than 30%, they're down 2 2/3%. Hims and Hers is doing well. Not a White House recommendation, but RFK is going to let them sell more of these peptides that the kids love. Allbirds is off by almost 30%, but it did, what do you call it when it goes up 7 times? Septuple? I don't know. Roku, I thought would be a gainer because they added like 100 million, or they're over 100 million users. They didn't add 100 million. They're over 100 million users on Roku, and Netflix is down as we await earnings after the bell.
Yeah, let's get more into that because they're going to give a glimpse into their future after it walked away from a battle to acquire Warner Brothers Discovery. Bloomberg Intelligence U.S. media analyst Geetha Raghunathan joins us for more. Geetha, are they going to have to do kind of an awkward dance? Because how many earnings calls did we hear from Netflix saying that this was an important deal for them, that they needed Warner Brothers, it wasn't needlessly spending money, and now they've walked away. How are they going to thread this needle?
I think they're going to be fine, Danny. I mean, I don't think the street or investors were necessarily happy with the Warner Brothers Discovery acquisition. I mean, they always kind of characterized it as kind of a nice to have, not a must have. And I think the street actually believes that. They've built a fantastic business, a business with over 325 million global subscribers without pursuing any acquisitions. And so the belief is that they should be able to do so. And really the focus now is going to be back on fundamentals. And they have very, very strong fundamentals that they can bank on. So I don't think there's going to be much awkwardness at all.
What are they? You know, I click through Apple TV, Netflix, Prime, Hulu, Disney, etc. Do they have any big hits, or is it just like a sequels business a la Disney?
Yeah, the great thing, Matt, about Netflix is they've really been diversifying when it comes to their content. So yes, the quarter that they're going to report today, yes, they did have their usual series of hits. I mean, whether you're talking about Bridgerton or Night Agent or Virgin River, yes, all of those sequels were back on track. But then we also kind of saw them do a lot of very different types of content, whether it was the MLB opening game or, the Baseball World Classic or even the BTS, the K-pop, comeback tour concert. So they're kind of really diversifying their portfolio, and the velocity with which you're seeing this live content come on the platform is actually pretty amazing. And I think it really helps them to build the metric that the street judges them on, which is engagement. So it really helps them deepen engagement and ultimately kind of really build out what is going to be one of their future growth pillars, which is the advertising business.
How is that going along, Geetha? These, the idea of having a lower cost platform that would allow you to watch Netflix, but then you have to watch ads.
Yeah, that's a great question, Danny. So the thing with the ad business is I think it of course helps them build a new revenue stream, which is the advertising revenue stream. Remember, that's really small potatoes right now. So it was probably about a $1.5 billion business last year. It's probably going to jump to about $3 billion this year. So still about 6-7% of revenue. But I think ultimately, as that kind of scales out, we can, expect it to become about 15-20% of revenue. So you're building a new revenue stream. And guess what? The other thing that they get with the ad tier is that they really get pricing power on their non-ad tiers, because here you can raise prices by 10, 15, 20%. And if people find that, too pricey, they always have the option of tiering down to a tier that, costs only about $9 a month versus $20 a month.
All right. I can't believe I forgot about K-pop Demon Hunters.
Considering that's been your life for the past year.
Exactly. I mean, I literally have seen it at least 30 times. Geetha Raghunathan, Bloomberg Intelligence U.S. media analyst. And I hope you've seen it too, because it's absolutely fantastic.
I have.
Coming up in the next hour, Empower's Marta Norton shares software stocks trading at a bargain. Plus, Ben McKenzie discusses his new documentary about crypto schemes, and the Kering CEO, Luca De Meo, on his push to revive Gucci. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
is CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. We begin with breaking news from Annandale, Virginia.
Former Lieutenant Governor Justin Fairfax shot and killed his wife inside of their home and then shot and killed himself.
Fairfax County Police Chief Kevin Davis says the couple's teenage son called 911.
There's been divorce proceedings that have been ongoing. Former Lieutenant Governor Fairfax was recently served some paperwork associated with an upcoming court proceeding that apparently led to this incident last night.
Fairfax, a Democrat, served as lieutenant governor from 2018 to 2022. He was accused of sexual assault by 2 women in 2019, but denied the allegations and finished his term. Defense Secretary Pete Hegseth says the military is ready to resume operations against Iran if it doesn't agree to U.S. terms for a peace deal.
During a Pentagon briefing, Hegseth said the U.S. knows which military assets Iran has left and is watching Iran move them.
Our forces are maximally postured to restart combat operations should this new Iranian regime choose poorly and not agree to a deal.
Hegseth said the U.S. controls the Strait of Hormuz, not Iran. He also criticized some of the media coverage of the war.
Sometimes it's hard to figure out what side some of you are actually on. It's incredibly unpatriotic.
Michael Wallace, CBS News.
England's Archbishop of Canterbury, Sally Mullally, says she just called Pope Leo's courageous call for peace after a war of words with President Trump. As the war drags on, a stark warning from the head of the International Energy Agency, Fatih Birol.
In Europe, we have maybe 6 weeks or so jet fuel left.
He's warning of possible flight cancellations soon. Multiple reports warn budget-friendly Spirit Airlines may go under for good. Transportation correspondent Chris Van Cleve from Bush Intercontinental in Houston.
As the price of jet fuel has nearly doubled since January, driven by the conflict in Iran, airline sources now tell CBS News some of Spirit's creditors question the airline's ability to make debt payments or return to profitability, which could lead the discount carrier to run out of financial runway.
Health Secretary Kennedy is testifying on Capitol Hill right now, defending President Trump's plan to slash his department's budget by more than 12%. Kennedy says we need to spend more on preventing chronic illness, not treating it.
Parents across the country demanded change, and we are delivering it. We are ending the era of federal policies that fueled the chronic disease epidemic and replacing them with policies that put the health of Americans first.
This is CBS News. The big off-season news in the WNBA is all about money.
First, it was the top pick in the draft, earning $500,000. Now, 4-time MVP Asia Wilson of the champion Las Vegas Aces has signed the most lucrative contract in league history, a reported 3 years, $5 million. WNBA analyst Tarika Foster-Brasby.
If anyone deserves this contract and would probably be the first to get a contract like this, it should be Asia Wilson. She's the best player in the league, hands down.
Indiana star Kelsey Mitchell recently hit the jackpot, too, with a one-year deal worth a reported $1.4 million. Steve Kathan, CBS News.
A breakthrough surrounding the Bard.
To be or not to be?
That question may never be answered, but another one has been. Precise location and dimensions of William Shakespeare's property in London. Scholars say it was right across from the Globe Theater. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're also streaming live at Bloomberg.com, so you can check us out there. Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence radio program for the next 2 hours. Look, the stocks trading off just slightly here today. We'll get to that in just a moment. Coming up, we're going to check in with Michelle Jamrisko, Bloomberg News White House and National Security Editor, on the Pentagon press conference earlier today, which we brought you live. Ann Berry, founder and managing partner of Threadneedle, discuss her thoughts on these markets. Charles Sum, Bloomberg Intelligence Asia Semiconductor Analyst, TSMC results and Alex show really strong AI growth there. So we're going to get a wrap up of some of the bank earnings. We're getting some of the regional banks reporting now. So we'll get Herman Chan, senior analyst who covers the banks. He's going to join us as well. So we got a lot coming up on the earnings front, a lot coming up on the geopolitics front over the next 2 hours, and a market that is slightly red. And to get a market update, we go to Charlie.
All right, I thank you very much, Paul Sweeney. Indeed, we did see stocks higher last 30 minutes, but right now we are looking at losses. Little changed on the Dow, the S&P, and NASDAQ. The bottom line, retreating from yesterday's records. 2-point drop right now on the S&P, still with a 7,000 handle on the S&P 500 index. 7,020 drop right now of under 0.1%. This Bloomberg Business Flash is brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit ibkr.com/2025. So little change lower right now with the Dow down 50, drop there of 0.1%. We've got NASDAQ down 60, a decline there of 0.2%. The VIX below 19 right now with the 10-year 4.28%. Gold is down $4 the ounce. A little change right now, $47.92. Everybody's watching West Texas Intermediate crude, $93.09 a barrel, up by 2% today. Brent pushing higher. Right now, a barrel of Brent, $97.43, up by about 2.6%. Bottom line here, stocks retreating as investors look for progress toward a longer-term peace deal in the Middle East. In the meantime, the focus in the U.S. continues to be on earnings. Netflix after the close of trading. Geetha Raghunathan is U.S. media analyst with Bloomberg Intelligence.
So they're no longer reporting subscriber numbers. So the key metrics that we watch for and the street is looking for is really revenue growth. They're guiding to about 15% revenue growth for the first quarter, which we think they'll easily achieve. Remember, they just raised prices in the U.S., so that should set them up for a good path to revenue growth for the rest of the year as well.
Geetha Raghunathan of Bloomberg Intelligence. Shares of Netflix down now by 0.4%. Keep in mind that in the year-to-date column, that stock is up by 14.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Stocks slightly lower, as Charlie was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg News' Carmen Reineke. She's in studio. Carmen, what do you got for us?
Yeah, so the first one I'm looking at this morning is Hims and Hers. So this is ticker HIMS. So stock's a little bit off of its highs of the day so far, but up about 5%, on track to extend a rally from yesterday into 2 days. So this is after RFK Jr., Health Secretary, said the FDA is seeking to remove 12 peptides from Category 2 restrictions. This could be really good for Hims and Hers. So they have signaled that they would like to sell peptides once these regulations are loosened. So could be a good thing.
A news story not about GLP-1s for Hims.
I know. Well, a different kind of injection, but you know.
My social media feed is just flooded with the Hims and Hers.
You must have clicked on something once.
I must have, yeah.
And now they've pinned you as someone who's an obvious candidate.
I do think that the active ingredient in some GLP-1s is a peptide.
Okay.
So there is some link there.
Thank you for making that link.
But you're right, a different kind of thing. So that's Hims and Hers. The next one I'm looking at right now is Abbott Labs. So this is ABT. Shares are down 4% right now. So this is a medical devices firm. It cut its adjusted earnings per share guidance for the full year. This was adjusting for its acquisition of Exact Sciences, which is a cancer screening company. So Abbott has bought this company. It's supposed to help its diagnostics business, which has been suffering since COVID-19. We're just not testing as much anymore. This was not beneficial for Abbott. So the company also gave a profit guidance for the second quarter that fell short of expectations. So seeing a little bit of red on the screen today, and a pretty big decline for the stock this year.
And last one is actually a big mover from earlier this week as well.
Yeah, so looking at Allbirds, this is ticker BIRD. So yesterday, obviously, we saw this huge run up in the shares after it said it was pivoting to be an AI company, obviously, formerly a shoe company. And today, the stock is lower. It's down about 28%. Still, if you look at the chart, it's looking pretty crazy, but big decline there. Although after a 600% up day, kind of to be expected.
Do these hard pivots work?
I don't know. I haven't seen them before. I don't know. You don't see it very often.
It's like when everyone decides to be a cannabis company, or everyone decides to be a GLP weight loss company,
crypto company.
Exactly.
Yes.
Yeah, mining
but to
company.
keep the same corporate entity to pivot, I don't see that. I
Right.
can't remember.
Well, they change their name,
Sure.
so
Go ahead.
Which is the first thing you do.
Yep.
Carmen, thank you so much for keeping us up to date here, and of course, for more conversations like what you just heard, subscribe to our Stock Movers reports for our 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to it on Apple Podcasts, Spotify, or anywhere you listen. The war is not in full swing. We're in a ceasefire, a temporary ceasefire that expires.
Maybe extend.
Yes, although that's the question right now. Where are we with the ceasefire? Is it going to be extended past Tuesday night, I believe? Or at this point, it's been moved around so much. We need to get an update from Michelle Jamrisko. She is Bloomberg News White House and National Security Editor on the Pentagon press conference that has taken place this morning. Michelle, just give us the latest. Where are we with the conflict and with talks about perhaps holding peace talks again?
Well, the question you asked is an hour-by-hour question, really. We're a long way from Tuesday right now, so it seems like an eternity before then, before the deadline truly hits. But as now we're still hearing various bits from all sides, and I say all sides to include Pakistan, the mediator, and all this. In terms of U.S. and Iran being willing to come to the table, I think we can all kind of understand that they do want to continue talks, but that coming out of last weekend, the prospects seem pretty dim for them to reach any sort of immediate agreement on any of the baseline issues, including Iran's nuclear ambitions and what to do about the Strait of Hormuz. So in the meantime, we're chasing obviously what has come about in the Strait and amid the U.S. blockade, and that was effectively a big part of the press conference this morning, where Defense Secretary Pete Hegseth alongside Kane were discussing what exactly has happened in the Strait. And so Joint Chiefs of Staff Dan Kane was saying that 13 ships have U-turned based on not wanting to confront the U.S. blockade. So that's kind of the latest stat that we're going on to measure exactly what's going on there. But obviously, we do need to continue to verify all the ship movements with other data that our shipping team, among others, are chasing.
Michelle, you mentioned the press conference this morning, and Secretary Hegseth did say that the U.S. controls the Strait, not the Iranians. Yet oil flow is not flowing through the Strait here, so it doesn't appear the U.S. may control it, but it's not open yet. So that's got to be front and foremost for any negotiations going forward?
Yeah, for sure. This has become like the key negotiating piece, or the token, is the Strait of Hormuz. And we've seen where Iran has pushed back at various times on diplomatic talks and saying the sovereignty in the Strait for them is one of the key issues, one of the red lines, the deal breakers that has been maintained. So in effect, when President Trump decided to do a blockade in some respects, Iran has taken much affront to this. So as you mentioned, Secretary Hegseth, pushed back quite a bit on the idea that Iran says it's in control, that he called it piracy and terrorism. And yet here we are with a lot of ships not coming in and out, and still roiling global energy markets and economies around the world.
You know, the U.S. is sending thousands of troops to the Middle East in coming days. I believe 6,000 troops on the George H.W. Bush aircraft carrier and its strike force as well. How does this influence the discussions to hold peace talks? Is that kind of an overhang?
I mean, I think it's a continuation of kind of the posturing on either side. Of course, we've heard this for some. We've seen the military assets move many times throughout the war, and you know the threats of additional resources haven't really changed the reaction of the Iranian regime. And I think in rhetoric too, they've kind of pushed back on this notion that they would cower in the face of further assets. So we'll see how those are deployed, and we have yet to kind of figure out exactly what missions they're all dedicated to. But you know, as Secretary Hegseth and General Kane would say, you know, they're ready to respond to the president's command at the push of a button, and they're locked and ready to go. So they're trying to amp those threats in order to get Iran back to the table and to budge on some of these key negotiation items.
Michelle, do we have any reporting as to when negotiations could resume, when, and maybe where?
Well, we heard from the president almost 2 days ago saying, you know, it would be over the next 2 days that these would happen. So obviously, we're, you know, at the mercy of these floating timelines. We're not quite sure yet from, you know, at least the Pakistanis are making preparations. They've been very enthusiastic to help lead the mediation of all this, but they don't really have a say in bringing those folks to the table. I understand one of their army representatives is in Tehran now, or at least was, and is trying to convince the Iranians to get back to the table. So there's a lot happening behind the scenes, but we just don't know with any certainty what the timeline will be of that next round of talks.
Michelle, thank you so much for giving us a roundup of all the headlines there. Michelle Jamrisko is Bloomberg News White House and National Security Editor, joining us for the latest here. And of course, Israel is continuing to strike Lebanon as well. The president saying on social media that Israel and Lebanon will also hold talks this week. We're not sure if that's part and parcel with any current discussions between Iran and the U.S. or it's completely separate.
Yep, we'll have to see. I mean, what we're seeing in the energy markets here is higher oil here today, perhaps on the backs of that Secretary Hegseth's press conference this morning. WTI crude oil up $1.92. That's about 2%, right around $93. And Brent up about almost 3% today, just under $98 per barrel. So oil moving higher, other risk assets moving lower, with the S&P down 7, the Dow down 63, and NASDAQ down 67 points. That's about 0.3%. The VIX holding in here right around just under 19. This is Bloomberg Morning.
गाइस एक क्रूड ऑयल को देखोगे कल से साइडवेज ही चल रहा है, इस एरिया के आसपास कुछ खास करने लायक है नहीं। यहाँ पर एक सपोर्ट एरिया था बट उसका लोअर एंड टच कर चुका है, तो मैं वहाँ पे इंटरेस्टेड हूँ नहीं, बट ऑब्वियसली है लेवल रिमूव हुआ है तो प्राइस को कहीं नहीं नेक्स्ट सपोर्ट या रेजिस्टेंस पे तो जाना ही पड़ेगा। एक सपोर्ट नीचे है आपका 8000 टू 8100 के अराउंड, एंड रेजिस्टेंस की बात करें मेजर रेजिस्टेंस तो परसों का हाई है आपका 9870 वाला, ठीक है, जहाँ परसों से सेलिंग आई थी, जो बड़ा सेल ऑफ एक देखा था हमने ऊपर। ये एक सपोर्ट एरिया था, उसका ब्रेकडाउन हुआ है। मुझे थोड़ा सा डाउट है क्योंकि ब्रेकडाउन नॉर्मल ब्रेकडाउन है, रीटेस्ट के तौर पे नहीं हुआ है, तो क्या ये रीटेस्ट करेगा या फिर नया रेजिस्टेंस बनाएगा। तो ये जो लेवल है ये डायरेक्टली रेजिस्टेंस के तौर पे कंसिडर नहीं करेंगे। अगर यहाँ जाता है तो ये दो ही लेवल है जहाँ पर ट्रेड बना सकते हैं वापस से। देखते हैं रेंज के बाहर निकलता है नहीं निकलता। कल से बिल्कुल ही रेंज बाउंड हो गया है दोनों ही। नेचुरल गैस थोड़ा सा आज मूव किया है बट बहुत ही वियर्डली कह सकते हो, हर कैंडल पे ऐसा लग रहा है ऊपर जा रहा है, रिजेक्शन मिलता जा रहा है। सो नीड टू सी क्या प्राइस एक्शन बनता है। क्रूड में तो कुछ खास नहीं हो रहा, मैं यही कहूँगा, नीड टू वेट। लग रहा है कहीं ना कहीं एक वी डोंट नो येट दिस इज, क्योंकि लास्ट जो वेव आई है वो सेलिंग की वेव है, कंसोलिडेशन है, देखना पड़ेगा ये एक्यूमुलेशन में कन्वर्ट होता है या फिर डिस्ट्रीब्यूशन में। एक मुझे फ्लैग पैटर्न लग रहा है, एंड द वर्स्ट थिंग ऑफ फ्लैग इज ये सिमेट्रिकल ट्रायंगल तो नहीं है, फ्लैग पैटर्न ही है। फ्लैग पैटर्न में एक प्रॉब्लम ये होती है कि इसमें मार्केट दोनों साइड मूव कर सकता है, इन द सेंस ऑफ अगर एक डाउन ट्रेंड में भी है मार्केट अगर स्मॉल टाइम फ्रेम पे और फ्लैग पैटर्न बना भी है तो जरूरी नहीं है डाउन ही जाएगा, ऊपर भी जा सकता है वो। दिस इज द कैरेक्टरिस्टिक ऑफ फ्लैग पैटर्न। अगर इस सिमेट्रिकल ट्रायंगल होता तो कंटिन्यूएशन में ही जाता है, अगर डाउन ट्रेंड में था मार्केट, फ्लैग बना है तो डाउन ही जाएगा, अप ट्रेंड में था तो अप साइड ही जाएगा। तो वी नीड टू सी इट विल बिकम अ एक्यूमुलेशन और डिस्ट्रीब्यूशन। करंटली साइडवेज है, मुझे लग रहा है शायद मोस्टली यूएस और ईरान के बीच में कुछ फिर से एक सेकेंड राउंड की बातचीत होने वाली है, शायद उसके बाद ही कुछ मूव करेगा। इन्वेंट्री आने वाली है नेचुरल गैस की, एक बार देख लेते हैं। फोरकास्ट लास्ट टाइम के कंपैरिजन में ज़्यादा आने फोरकास्ट है, फोरकास्ट के अकॉर्डिंग डेटा आया तो इट विल बी बेरिस, तो फोरकास्ट तो बेरिस है, देखते हैं एग्जैक्टली डेटा के अकॉर्डिंग आता है या नहीं आता है। 5 मिनट है नेचुरल गैस इन्वेंट्री में। टू फिफ्टी के नीचे आया है ना नेचुरल गैस, मोमेंटम ही बड़ा स्लो हो गया है। आज भी देखोगे मैं डे हाई से डे लो भी देख रहा हूँ, बस 5 पॉइंट का मोमेंटम है, 5 पॉइंट का। बॉडी टू बॉडी जाएंगे तो सिर्फ 4.5 पॉइंट का। कल भी साइडवेज था, परसों थोड़ी वॉलेटिलिटी शो करी थी, देन साइडवेज। जब तक अब लिक्विडिटी मिलेगी नहीं, मार्केट बड़ा मूव करेगा नहीं किसी भी साइड पे। लिक्विडिटी लेनी बड़ी ज़रूरी है। बिग प्लेयर्स जब तक लिक्विडिटी क्रिएट नहीं करेंगे, कांट एक्सपेक्ट मच बिग मूव अनटिल अनलेस कोई न्यूज़ नहीं आ जाती। नेसेसरी रिस्क लेना सही नहीं है छोटे छोटे टारगेट्स के लिए। लेट्स से कोई बड़ा टारगेट का ट्रेड अगर मिलता है, मार्केट मूव करेगा तभी पॉसिबल है। रेजिस्टेंस ऊपर मुझे तो 1 आवर टाइम फ्रेम पे ही दिखता है, नेचुरल गैस में भी 255 258 के आसपास। लेट्स सी वहां तक भी जाता है तो, या फिर पहले कहीं नीचे कुछ फिर से लिक्विडिटी लेने आए। भी आ गई है, बुलिस लग रही है मुझे तो। गैप अप ओपन हुआ है नेचुरल गैस इन्वेंट्री, लुक्स लाइक बुलिस। नहीं, बेरिस है। यस, 50 बुलियन लास्ट टाइम आई थी, 55 बुलियन एक्सपेक्टेड था, ज़्यादा एक्सपेक्टेड थी, ज़्यादा ही आई है फोरकास्ट के अकॉर्डिंग। तो इट इज़ बेरिस फॉर नेचुरल गैस। प्राइस के लिए बेरिस है नेचुरल गैस इन्वेंट्री। प्राइस को वैसे डाउन जाना चाहिए, कैप अप हुआ है, बट देखते हैं क्या होता है। इन्वेंट्री इज बेरिस फॉर नेचुरल गैस। ठीक है, इन्वेंट्री इज बेयरिश इवन दो कैंडल गैप अप हुई है, बट इन्वेंट्री नेचुरल गैस इज बेयरिश फॉर नेचुरल गैस प्राइस. एक बाइंग का ट्रेड बनाया था, क्लोजिंग होते होते मार्केट साइडवेज चला गया नेचुरल गैस में उस समय.
One of my favorite regional banks has always been KeyCorp. How did they? I know they had some numbers here. How did that look?
Yeah, KeyCorp was really strong. They posted for them their highest first quarter investment banking revenue period and so that's really driven by some of the build out that they've done in the investment banking platform over the years. They also mentioned really strong lending activity. I mentioned U.S. Bancorp talked about broad-based commercial growth. KeyCorp seeing the same, and there was some really positive commentary on that lending driving improved net interest income. So that's flowing through. Gave better guidance for the full year given the lending activity, and the stocks had a nice jump today, up 1.2% thus far in the trading session.
Okay, so KeyCorp reported, U.S. Bancorp reported, Citizens also reported as well. That stock marginally lower. Are any of these names obvious acquirers or targets in the expected consolidation that we are looking for among these regional banks?
That's right. Expected consolidation is a good way to put it. U.S. Bancorp probably is the one that we think is well positioned for that. They recently, a couple years back, bought a California bank called Union Bank that was previously owned by MUFG, the Japanese conglomerate. That's continuing to work out well for them. They highlighted California as a strong area of growth. We expect potential for them to really bolster that over time, even though they're really focused on organic in the near term. KeyCorp has mentioned that there was some Bloomberg News reporting a couple quarters ago that they were looking to potentially do a deal in the Pacific Northwest, but KeyCorp's management team has sort of poo-pooed that over the past few quarters. So we'll see, but I would say that they probably don't have the currency to do a deal without it being super dilutive at this point. So it really is dependent on your valuation, and U.S. Bancorp does have that premium valuation to do a deal.
Herman, a couple years ago, we saw Silicon Valley Bank collapse. We saw First Republic also get pushed under as well. There was this mismatch of assets and liabilities where a lot of these banks held super long-dated treasuries on their books, thinking that they were safe, but then got caught offsides when rates began rising. Is that period over? I mean, are they all in good standing at this point?
Yeah, so that happened when interest rates were near zero. A lot of those securities are maturing quarter after quarter, so a lot of that has burned down off the balance sheet. And really, there were two issues, right? You had those unrealized losses, but then what exacerbated it was the deposit outflow, the deposit flight from banks like SVB, when luminaries like Peter Thiel told everybody and in the community, in the Silicon Valley community, to take their deposits out of SVB. So that really was the impetus of the demise for that particular institution. So we are way out of the woods in terms of deposit volatility. That's nothing. We're not seeing that and haven't seen that for over a year. And then the unrealized losses are continuing to burn down. So banks are in a really good standing on that front. We think that risk is over at this point.
All right, Herman, thanks so much. Appreciate it. As always, Herman Chen, senior analyst, covers all the U.S. banks. I'm going to get you another associate, dude. I can make a couple of phone calls. He covers like 1 million different banks and gets like half an associate.
Just add another sector to his beat.
Exactly. So I'll make a few phone calls. I know a guy. So there we go. We got some the banks reporting some pretty decent numbers. I was just going to KeyCorp, on a trailing 12-month basis, up about 50%. So the stock's had a nice run, and I see similar type returns for some other. Citizens on a trailing 12-month basis, that stock's up 80%. So some pretty nice performance coming out of the financials here. So that's good to see. S&P unched on the day, no question. Dow minus 74. NASDAQ minus 6 points.
Feels like we're in wait-and-see mode.
Yeah, it really does. Not seeing a lot of volume, kind of, a little bit less than normal volume here, so not a lot going on there. Oil is moving a little bit higher here, up a couple bucks a barrel for WTI crude. $93.40. Tom from the Upper East Side asked for a Bitcoin quote sitting right at $74,000 per token. So there you go. He's holding court on the 6th floor. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Big IPO pricing today. Madison Air Solutions, a non-AI IPO, raised $2.23 billion in the biggest U.S. listing of an industrial company in close to 3 decades. Nice. I'm not sure it's open yet, but probably hasn't because it's only 10:53. When I was doing these things at Solomon Brothers and Citi in First Boston, we got these bad boys open at 10 o'clock, 10:30 at the latest. I don't know what.
No, now you regularly have to wait until the 12 p.m. hour,
Yeah,
maybe even the second half of the 12 p.m. hour.
And they get anchor shareholders in their deals. I mean, it's basically done. Kids don't know what they're doing here. All right, let's check out what's happening with Madison Air. Matthew Griffin of Bloomberg News joins us here. Matthew, talk to us about Madison Air and this IPO. Big number.
Yes, well, Paul, I know you said this isn't an AI IPO, and that is true, but there is an AI connection
I'm
here.
sure there is.
Of course. So this is a company in the industrial sector. They're sort of specialized HVAC, so cooling systems, ventilation systems, things like that. A lot of their business is to commercial industries, and so data centers are a part of that. It's something that comes up in their pitch to investors, and it's something that has come up repeatedly in my conversations with investors as a reason this company has gotten the valuation that it has, and the reason it's been able, again, to raise more than $2.2 billion, the biggest industrial IPO here in the U.S. since 1999.
So that's interesting because it's an industrial company, but it's got that connection to data centers. So it's kind of straddling both worlds, the high-tech world and the growth that we get from AI and data centers, but also the fact that it's a real business that generates real cash flow and is profitable, and people like that in this kind of environment.
Yes, and that's something, again, that has come up with investors, is that this is sort of a picks and shovels AI play. So, think about the last few months, the really choppy trading we've seen in companies like Microsoft, maybe rebounding a bit now, but names that are trying to monetize AI directly. But the companies that are selling to those companies, whether it's semiconductors, whether it's AI, compute, whether it's the physical products that go into the data centers, may be seen as a little bit safer from investors because you don't have to know exactly what AI tools we're going to end up using. You just have to trust in this idea that we're at the beginning of a real boom here.
So the company's saying in some of their remarks here that they think a lot of stuff is driving growth for specialized air systems like reshoring, advanced manufacturing, data center growth, all that kind of stuff. They think this market's going to grow.
Yes, and so this is a play not just on data centers, but as you said, for example, advanced manufacturing. They sell to basically all kinds of commercial plants that you can imagine. I think it will be interesting to watch that reshoring piece in particular, because that's something that Trump has set out to do, President Trump, with his tariffs. That being said, you had some peer companies like Modine, and they sell cooling systems for data centers. They fell 6.1% yesterday because of concerns about some changes to the tariffs on metals. And I think it will be interesting to see how investors process this when this company goes public, what their level of exposure is there.
My understanding of Madison Air is that it was formed through a series of acquisitions, I believe 13 of them since 2017. So a lot of investors talk about this being kind of a roll-up of ventilation and filtration companies. Is the indication that this is a strategy Madison Air will continue to build on as a publicly traded company?
Well, so yes, I do think this is sort of their broad strategy, and it's sort of the broad strategy of Madison Industries, which is their parent company. Again, something that I've heard from investors is that this is kind of a target-rich environment. There are a lot of PE-backed companies that are still private in the sort of data center product space, in HVAC in particular, and now you've got the IPO market opening up a little bit. You've got hunger from investors, so some of them going public, but also probably a lot of potential targets for a company like this.
Interesting here in your reporting, the company's founder, Larry Geis, he's going to set to control the company through super voting stock.
An industrial company with super voting stock?
Isn't that interesting? We've seen it in media and tech companies over the decades, and now even some of the
this is
tech
not
companies.
Meta.
Yeah, this is not Meta. Was that an issue at all for shareholders?
It's not something that came up. I mean, again, he is the founder of this larger company, Madison Industries. They're sort of a multi-industrial company, and the structure here, you can think of this as still being a subsidiary in a sense of Madison Industries, because I think it's Geese will actually control the company through his company, Madison Industries. So not to overcomplicate things there, but you have this larger company that has a track record of success, and I think investors actually like that connection there.
Okay.
Now, again, we'll see what happens when they go public.
We've talked a lot about the commercial business, data centers, manufacturing, that exposure to that kind of growth segment. Very quickly, there is a residential part of this business, isn't there?
Yes, and that it's about a third of their business. It's an area that's been a problem for some publicly traded peers like Carrier. Now, this company is more specialized. It's not like basic home HVAC systems.
Yep.
So maybe that'll win them more points with investors.
All right, very good. Interesting story, Matthew Griffin. Thank you very much. Appreciate that. Madison Air going public today. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The latest, the next hour of Bloomberg Intelligence starts right now. Madison Air IPO'd at 27, indicating right now 29 to 31 in pre-market. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Intelligence team. Paul Sweeney, Scarlett Fu, and Charlie Pellet with you here from our Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube. We're also available on Bloomberg.com/video as well. We've got a lot coming up right now, even as we look at markets not doing a whole lot. The equity markets are basically unchanged. Oil prices are slightly higher, but by the margins of what we've seen of late, you could almost call it unchanged. WTI and Brent holding above $90 a barrel. We're going to check in with Sid Phillip. He's our global aviation correspondent on Spirit Airlines now at the risk of liquidation. What does that mean for other carriers? What does it mean for passengers who have tickets on Spirit? We're going to dig into all of that. Ken Shea is our senior consumer products analyst. He's going to recap PepsiCo's latest earnings for us as well. David Kudla, he's founder, CEO, and chief investment strategist at Mainstay Capital Management, talking to us about what havens he sees in this kind of market. And Che Huang is co-founder and CEO of Pelgo, talking to us about the job search and how it's becoming harder for millions of unemployed Americans, especially as those AI concerns hover over everyone. All that to come, but first, let's head over now to Charlie Pellet for Bloomberg Business Flash.
Hi, thank you very much. Great hour ahead. We have got stocks back in the green, by implication, a record right now on the S&P 500 index, 7,025, up 2 points, little change but higher. Last update, we told you stocks were lower. We've also got the NASDAQ 100 index, also trading at a record right now, up another 0.2%. Key takeaway, perhaps, so little change for equity markets right now, with the Dow down 32, drop there of under 0.1%. We've got the S&P up 3 now, up under 0.1%. NASDAQ also little changed, up by 2 points. All of this with a VIX below 19 once again. The 10-year 4.29%. Gold up $4 the ounce, 47.95. And for West Texas Intermediate crude, perhaps the big story today, up 2.3% on WTI. Right now, 93.39 a barrel. Barrel of Brent, 97.90 now, up by 3.1%. Yes, we are awaiting the start of trading from Madison Air Solutions. is indicated to open at between $28 and $30 and IPO priced at $27. Why do we care? It is the biggest industrial IPO in nearly 27 years. News about the economy and applications for unemployment benefits fell last week, indicating that layoffs remain largely limited. Initial claims down by 11,000. Jonathan Pingle is chief U.S. economist at UBS.
So I do think there has been a pullback in labor demand. There's probably been more than the drop in labor supply here. But we're certainly living in an environment where we've had really low job growth, and yet the unemployment rate's basically been stable for the last year.
Jonathan Pingle of UBS. By the way, the next monthly jobs report does come out May 8th. Oil, as we mentioned, pushing higher. Oil majors also advancing. ExxonMobil up 1.5%. Chevron up 1.5% as well. And ConocoPhillips up now by 2.1%. I'm Charlie Pellet. Paul and Scarlett, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. As well as Charlie's just reporting, we got a little red and green on the screen here today. Not a lot of direction. But let's see where some individual stocks are moving today. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at?
All right, Paul, let's take a look at truckers. J.B. Hunt this morning reporting their results, and that seems to be boding well for the stock. So ticker JBHT, those shares are now up more than 7%. And we were set for a record close last time I looked, so it looks like that's powering ahead as well. And that is because, again, earnings for the first quarter beating estimates here, both on EPS and sales. And Bloomberg Intelligence weighing in, really showing that the results apparently is an encouragement for the outlook for freight markets more broadly, even though a prolonged freight recovery may not be linear, especially because of the headwinds that we've seen in the first quarter. But at least this set of results for the first quarter for J.B. Hunt, really doing well for the shares here.
I worked on that IPO way back in the day. Lowell, Arkansas, spent some time there.
When did that company go public?
In the 80s. So it was,
it was a while ago.
Yeah, it was a while ago.
I don't have to look. I'm going to look now.
Got my first trucking ride, riding a big truck. That was pretty cool.
1983.
Yeah. So then they came and did a follow-on offering, I think in 87, which I was on. So that was a cool thing to do, riding a truck. So, all right, what else you got for us?
All right, let's take a look at Schwab as well, reporting earnings too, but not doing too well for those shares. So ticker SCHW, Schwab shares now down more than 4%, and that is because first quarter revenue missing estimates. They did have their total new assets rising 5.7% to more than $139 billion, and net income also beating estimates. But again, that revenue miss is what's weighing on the stock today. So Schwab apparently also reported a 39% increase in daily average trades in March compared with a year earlier. That's probably a reflection of a lot of, retail investors wanting to take advantage of the market volatility last month. And apparently they're potentially looking at launching a prediction markets kind of product to compete with other companies such as Robinhood. Of course they are. But CEO Rick Wurster does say that they will probably stay away from allowing customers to place wagers on sports or pop culture.
Okay, but even though sports make up the
fun
bulk of prediction markets.
So no fun stuff. No fun stuff.
Well, we'll see how that all plays out. It's something that Carol Masser and Tim Stanovic will be discussing with the CEO of Schwab, Charles Schwab, that is. Rick Wurster will be on Bloomberg Business Week today in the 2 p.m. hour. Yeah, looking ahead to that one. All right, last talk.
Let's take a look at Abbott Labs as well. So ticker ABT, those shares extending declines now down more than 4.8%. Also earnings related, of course, and we did get that stock sliding to the lowest level since 2023 on an intraday basis. That is because the firm did cut its adjusted earnings per share guidance for the full year, even though their adjusted first quarter EPS and net income beat. But analysts, of course, focusing on the more disappointing forward guidance there. And they're also focusing in particular at some disappointment related to the company's performance in devices, particularly in the diabetes space. So that's why we got a little bit of a back foot on those shares today.
All right, good stuff. Christina Aquino, she is our managing editor for Markets Live here at Bloomberg. You can check out her work if you type MLiveGo on the Bloomberg terminal. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Spirit Airlines. Have you ever flown Spirit?
I have not.
Because you are based out of Newark.
So I am captive to United. That's why I'm a million miler, is what they call it.
I know you're proud of this distinction.
I got the medallion. I got the little little laminate.
The pilot comes out to visit him every time he steps foot in a United jet.
Yep, bottle of champagne, which I gave to my seatmate since I don't drink champagne.
Well, the reason I ask about Spirit is because it now looks like it's headed ever closer to liquidation. Sid Phillip is our global correspondent for aviation. He talks about all the airlines. Sid, Spirit is already in bankruptcy protection. It's still operating. What does it mean if it's at risk of being liquidated?
So Spirit's in its second bankruptcy in just about a year. And so what it means is that the assets of the airline, that sort of the few assets that are remaining, those sort of go away and the airline ceases to operate. Essentially, their current plan was to shrink down to about 75, 80 planes and sort of operate only the profitable routes. But then with jet fuel prices soaring, it no longer is even viable to do that.
Is there any scenario, like remind us, there was an M&A scenario involving Spirit Airlines. What was that?
So there was an M&A that was scuttled. So Spirit Airlines was set to be acquired by JetBlue.
Yeah.
And that was scuttled by the Biden administration back in 2024.
Which we all said at the time, you got to let these guys merge. Otherwise, this thing's going to be gone. And then you're going to have all these markets with no coverage.
Absolutely, and the low-cost carriers have been hit harder, particularly because United and Delta have been able to cash in on the premium travel demand, and that's sort of really given them a buffer that Spirit and others haven't really been able to sort of tap into, where they aren't able to sort of get those yields that United and Delta have, and that's really been something that's been a really big pain point for the airlines.
So the government prevented JetBlue and Spirit from getting together, but then I remember that we reported that Frontier and Spirit re-held discussions to merge. What happened to that one? And does Frontier need to team up with someone to get through this period?
So Frontier is in a slightly better financial position than Spirit, and so they were not as desperate for a deal as Spirit was. And those talks fell apart, and they sort of revived those talks back in 2025, and they sort of walked away without a deal. And so now we're looking at Spirit Airlines' second bankruptcy and still got big piles of debt, unable to unlock cash from creditors, and this could be the end for the airline.
All right, so what is this? What's just the general update about? We know that the premium, lots of this economy, the premium consumers spend premium money on premium stuff. Okay, now the other part of the K, that's where some of these regional airlines cater to. What are we seeing there? Are they seeing a pullback in travel?
So we haven't really heard much about the impact of the war and the rising prices and then consequent rise in ticket prices on demand yet, because as the airlines sort of talk through their earnings and talk about how demand is looking as they get, we've seen jet fuel prices more than double in March.
Wow.
And so that was really a big trigger for a lot of airlines, where you have to charge more for a seat, but then you don't want to charge too much more because people will not book. And that's really the tricky balancing curve for the airlines.
If Spirit goes away, who benefits?
The rest of the industry does, because there's one less player to compete against. There's one less because the low-cost carriers compete with each other to offer the lowest fares, because those customers aren't really typically sticky. They're not sort of looking they're not million milers, and so they're looking to sort of try and sort of find the best deal, the best fare that they can get. And that's really the tricky part for the ultra low-cost carriers, because you need to get those customers with low fares every time, and sometimes those low fares come with high costs for the airlines.
All right, Sid, thanks so much. Appreciate it. Sid Phillip covers all the aviation stuff for Bloomberg News, and we kind of knew it at the time.
Yeah, it felt like
just let this deal go through. Let it be JetBlue's problem, and let them figure it out.
And JetBlue itself is kind of looking for some kind of partner right now, right? I mean, there were reports that JetBlue was looking to, again, look for some kind of M&A partner to kind of get through this difficult period, because unlike Delta or United, it's not a premium player. It's trying to move in that direction, but it'll take a while.
And jet fuel doubling, I don't know how you deal with that. I mean, that is just
no one hedges anymore against
they don't.
Rising
and if you don't own a refinery like Delta, right, then you're a little bit. All right, let's keep to the earnings flow here. We got Pepsi reported earnings here. Ken Shea joins us here, Senior Consumer Products Analyst for Bloomberg Intelligence. He's based down in Princeton. And again, Scarlett, you probably know my feeling here. I am a Coca-Cola person. I identify as a Coca-Cola person. But you put a Pepsi in front of me, I'm just as happy. I really don't care. My brand loyalty is pretty low there. They're both good. Hey, Ken, talk to us about Pepsi. What do we see in their earnings report?
Hi, Paul. So the PepsiCo report was pretty encouraging if you're bullish on the story here. The first quarter showed good progress. Top line, volumes, international business was particularly strong. I guess the key takeaway here for investors, why they're looking at it positively today, is because their efforts to have a better balance between volume and pricing really came through in the quarter. Companies, critics of the company over the last couple of years have been saying, look, all your sales gains are coming, well, not all, but most of your sales gains is driven by price increases. And so they made a real effort. They've reduced prices in most of their snack lines. And they're also adding a lot of innovation. And Frito-Lay, North America, combined with Quaker, put up a 1% volume gain. Now, that doesn't sound like a huge deal, but relative to declines, it was a positive sign. So all in all, it was a positive sign, and I think it showed or it signaled that they're going to hit their targets for the year, at least so far.
So when you talk about PepsiCo making its products more affordable, cutting costs, that was something that Elliott Investment, the activist investor, had been pushing PepsiCo to do. We know that Elliott built a stake in Pepsi last year. Things are now moving in the direction that Elliott wants to see. What other changes do you anticipate PepsiCo making?
Well, that's a good question, Scarlett. I mean, it's really what the focus was from Elliott was improve the margins, particularly at the food area, the food. And so far, it seems to be making progress. Now, it's still unfolding will be the benefits of all this innovation and productivity that they're targeting. Now, keep in mind that it's happening not in a vacuum. It's happening with oil, rising, aluminum prices going up, and so that was a big focus of the call also, where analysts said, "Look, you have your plan. It seems to be moving well, but is the monkey are we throwing a monkey wrench into the works here with oil prices and so on spiking up?" And they said, "Look, we hedge good 6 to 9 months. We probably covered there. Supply chain's in good shape. They hinted at possibly raising price at the end of the year if they have to. But I think right now, if you're an activist, you have to be pretty pleased with the balance of the growth. And like I said, it's the international, it's the beverage, it's the food, all perform well in the quarter.
And Ken, with a lot of your companies, I look at the dividend yield, I look at the dividend growth, because that's such a big part of the investment story for some of your names. So for Pepsi, I got a dividend yield of 3.6%. They've been growing their dividend. What is their dividend policy?
They're committed to growing the dividend, and they have. It pretty much, a mid-single-digit rate. They selectively buy shares back. They're reinvesting, and they really do have a balanced capital allocation strategy. And I would suspect that's going to continue. I mean, a lot of the shareholders like those total returns.
Yeah, they certainly do. I mean, that's why you go into consumer staples, right?
Yeah.
For that steady payout. Ken, before we let you go, I got to ask you about what happens when it comes to pricing. Obviously, these companies, these consumer package companies, are facing higher expenses with fuel costs going up. Logistics becomes a lot more expensive as well. What did PepsiCo say about pricing, about inflation, and how it sees prices moving forward?
Well, they were candid. I mean, they said, look, inflation's likely to pick up at the end of the year, and while we would certainly like to target more productivity gains to offset a lot of that, the hedging programs I mentioned before, and the price mix is improving. Some of the acquisitions they've made recently are really going to move that up higher. But they said, look, in between the lines anyway, pricing is not off the table just because we took it, early this year as part of this plan. So I think it's kind of a wait and see, as most companies are taking right now. I mean, no company is really immune to some of these inflationary pressures out there, and this is no exception.
All right, Ken, great stuff as always. Ken Shea, Senior Consumer Products Analyst for Bloomberg Intelligence down there in Princeton, New Jersey. We've been talking a lot about substituting private label for brands as a way to... You don't do that for soda.
No, because soda has a very specific taste, and people are so beholden to their favorite brand.
I would just thought of that today. Thought just came to me. I'm not doing it for soda.
I was doing it for seltzer, but not for soda.
Yes, good point. Good point. So you're right. Maybe that's a lifetime of brand building.
Yeah. Thank you, Mad Men.
Yes, exactly. So there you go. Brand loyalty for soda. S&P 500 up 19 points. The Dow's up 90. NASDAQ up 74. So we've reversed those losses.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day, very close to it on the S&P right now. The Dow, the S&P, NASDAQ 100 index, all advancing. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Stocks pulling back earlier on, but right now we do have the Dow, the S&P, NASDAQ all gaining. S&P up by 0.2%. Investors, though, are looking for progress toward a longer-term peace deal in the Middle East. The Dow up 53 right now, up by about 0.1%. NASDAQ up 0.3. The NASDAQ 100 index up by 0.5%. And to be sure, both the S&P and the NASDAQ 100 index are trading at records. Any move higher today will be another record close. We've got the VIX below 19 now. The 10-year 4.28%. The 2-year 3.76%. Gold is up $15 the ounce to $48.06, up 0.3%. And West Texas Intermediate crude 93.25 a barrel, up now by 2.1%. On the lookout for the start of trading for Madison Air Solutions. MAIR is the ticker there, indicated to open at between 28 and 30. This IPO priced at 27. It is the biggest industrial IPO in nearly 27 years. Meta Platforms boosting the prices of its virtual reality headsets because of rising memory chip costs, adding to an industry wave of recent increases. Meta Platforms up now by 0.5%. Again, recapping, both the S&P and NASDAQ 100 index are at records. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Paul and Scarlett, that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. And as we head into the second hour of trading, closing out a second hour of trading here on the New York Stock Exchange on Wall Street, we are looking at the indexes at session highs right now. David Kudla is the founder, CEO, and chief investment strategist at Mainstay Capital Management. And David, the S&P at a record high right now. Any gain today is actually a record high because we closed at an all-time high yesterday. You call this a melt up in equities. How's the narrative changed in the stock market over the last couple of days?
Yeah, last couple of days or last 11 days, right? It's really amazing. It wasn't a change in fundamentals. It was an external force putting pressure on stocks, taking stocks down, depending on the index, 7, 8, 9% with the conflict in Iran. And I think really it's after the talks and some recent events, we've seen the Strait of Hormuz, everything has changed there. It almost seemed like overnight last week, but it seems like everything has changed in a way that now what's causing this melt up is we have the hedge funds are caught short. They're at their shortest position in a long time. Fund managers were the most bearish since June of 25. And the CTAs had rotated and were selling instead of buying. Now all those forces are coming back in and have to. We've got essentially a short squeeze that's driven the market higher and continues into today. So it's just been, there's all kinds of statistics out there on this V-shaped recovery, the fastest, in decades and terms of the ascent up. So it really is a melt-up-like behavior these last 11 days.
CTAs, can you explain what CTAs are and kind of how they're impacting the market? Because this is something new for a lot of investors.
Yeah, it's really about momentum, trend followers. And so the way that they get caught, depending on the frequency of moves in the market, or like this, where, the market had been suffering for over a month. So they start to rotate towards the trend is down, right, for the markets, for some commodities. And so they shift in that way. And then when the market reverses, they're caught on what we say the wrong side of the market. The hedge funds were caught on the wrong side, being so short, even some fund managers. So it just caught a lot of people off guard if, they had changed their, and really, they had reasons. There was thoughts out there that, worst case, what's happening in Iran could spark a global recession because of the oil price spiking, the supply disruption. I mean, we still have a gap between, now that more and more tankers, more and more cargo ships are moving, there's still going to be a gap, in some of those supply chains. But the picture has literally changed. It seemed like 180 degrees overnight with Iran controlling the Strait of Hormuz, locking it up, to the U.S. Navy taking over control of the Strait of Hormuz, and ships are moving, except for Iran. But those cargo ships and tankers are moving now. So it's just been a very quick change, and so that caught a lot of people. It caught a lot of these entities off guard, and so now they're scrambling. People scrambling to take off their hedges to re-engage the market. Who didn't just who weren't already there, or had bought the dip, or had just stayed with their portfolios through this brief downturn. What's turned out to be a brief downturn compared to what we thought it could be, which could have gone on for months.
Okay, so as we've seen stocks kind of melt up, we're also seeing the dollar reverse course as well. It had been declining quite a bit, an 8-day losing streak before moving just slightly higher today. What are you looking for in terms of how that now, well, in general, the weaker dollar of the last couple of days, what does that mean for commodities, which are priced in dollars? Because gold has not been the beneficiary of haven demand the way that many people might have thought it would be.
Yeah, that's a good point, Scarlett. We had, as we came into the year, commodities doing extremely well, gold and silver, other metals, the miners doing very well, stocks, doing pretty good. And we had a dollar that's been weakening, and so, or has been weakening. And when we had the issue with the Iran conflict, we saw strength in the dollar. And when we saw the dollar strengthening, things that are priced in the dollar, like gold, silver, foreign investments, emerging markets, all these areas, and that's the key, all these areas that got hurt so bad over that month are now exactly the places you want to be, because the dollar is weakening. Commodity exporting emerging markets are looking better. So in terms of that dynamic, when we invest overseas or things that are priced in the dollar now weakening again is good for those areas.
David, thanks so much. As always, appreciate getting a few minutes of your time. David Kudla, founder, chief executive officer, and chief investment strategist at Mainstay Capital Markets. Management, coming to us from Troy, Michigan via that Zoom thing. I actually spent some time in Troy, Michigan.
Oh, yeah?
At Payne Weber branch. We were auditing at the time. So,
did you take any trucking companies public during that time?
No, this was my introduction to Wall Street via internal audit. Opened up, then from there you can go do anything you want. Then I went to banking and did all that kind of stuff.
I like hearing about your trajectory.
Yeah, it was a good story, by the way. Anyway, let's go to the rates business here. I'm looking at the 10-year Treasury. 4.28%, pretty much steady on the day, right in that range of, 4 to 4.5%. Ira Jersey, it's his job to figure out where this stuff is going. He's the Bloomberg Intelligence chief U.S. interest rate strategist. Ira, we got some economic data this week. We got, a thawing out, I guess, a little bit in the geopolitical risk in the marketplace here. How is your Treasury market putting all that together?
Yeah, it hasn't moved very much at all. The Treasury market, I think, is priced for the idea that the Fed's still not going to be able to cut interest rates. And some of the data that we've received recently, some of the survey data, for example, this morning, like the ISM surveys, were not particularly bad. In fact, they were actually okay. So the beige book yesterday that the Federal Reserve really likes also suggested that, according to our natural language processing model, that it was also neutral. Yeah, we have all these little models here that we try to play with and try to let the neural net attempt to discern things that we could probably read and get something similar, but at least we know it's it doesn't have emotion attached to it like a human being might.
Well said. All right, let's talk about the data that's going to be coming up. We don't have any big jobs reports beyond the initial jobless claims. That comes out every week. But we do have a retail sales number for the month of March, and that's going to really reflect how maybe shy investors, or I should say consumers, were when it came to spending, given the war and the price hike in oil.
Yeah, and actually retail sales, it's a good thing you brought that up because it is the third most important number to the Treasury market. So when you look at Treasury market moves following the announcement of a number, it's payrolls, it's CPI, and it's retail sales, and everything else is kind of an also-ran. So, yeah, retail sales will be important. It's obviously a huge part of the economy. You know, the challenge is going to be for this number stripping out the oil component of the retail sales number, right? Because it's you know, you have to look at retail sales ex gas, right? That'll be one that we often look at. But then there's also other little pieces like some transportation components that may also have, you know, higher spending, because like if you take an Uber and they happen to have you know, some kind of, you know, gas surcharge or buses or something like that, that will feed in also. So you could actually see a pretty big pop in retail sales, but is it proper? Is it inflation adjusted? Is it actual retail? Is real retail sales? Say that 3 times fast. Is that continuing to go up? And that'll be an interesting thing to see. I'm more worried about the April data that we get next month, quite frankly, which of course is after the next Fed meeting, because I think that will have the longer lasting effects of the war rather than the numbers that we get just for last month.
Ira, I want to ask you a question I ask occasionally. That's on liquidity in the Treasury market. Let's say I'm a big bond fund, and I want to move a big chunk of bonds here, and I don't want to wreck the market doing it. How do I do that? Is it 1 phone call? Is it 2 phone calls to Wall Street banks?
Yeah, so liquidity has been actually pretty decent. You know, today with electronic trading and being able to do things on screens, you know, you might do a lot of little trades in order to move your book around. You can do decent size, like we have seen some decent size flows go through on some of the platforms. You know, treasuries now are traceable, so you can use the trace data in order to ascertain, you know, what volumes are, how much is being traded. As far as liquidity goes, right, and we kind of define that sometimes in a different way. So we look at things like the funding markets, what's going on in the repurchase agreement market, for example, and that's actually also been pretty stable, particularly since the Federal Reserve has been increasing its balance sheet via buying Treasury bills in order to kind of grease the, you know, lube the system a little bit and you know, grease the wheels of those funding markets, and that seems to have worked reasonably well.
All right, good stuff. Ira Jersey, always a pleasure getting your take. Ira is our chief U.S. interest rate strategist here at Bloomberg Intelligence, joining us from our Princeton, New Jersey office. And there's not a whole lot going on in treasuries right now. They're marginally higher, their yields, but I mean, they're pretty much unchanged.
Yep, and as Ira was saying, that tight trading range for the 10-year, kind of 4 to 4.5%, and that's okay. So, I mean, the Treasury market's been behaving, I think, very efficiently since the war began. We've had a lot of uncertainty in the marketplace. I mean, it seems like a pretty tight range by and large. You
know, now that earnings season is here, everyone's kind of looked past the war.
Yeah, I'm not sure that's the right thing to do, maybe a little bit premature, but that's kind of what we're seeing here in this V-shaped recovery in stocks. This is Bloomberg.